market. Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hold on. I have, before I get to you, Nick, excuse me for 1 second, I have an apology to make to Vanetta. A lovely customer from LA, which we were out this weekend, gave me a bag to give to you with a bunch of stuff in it. I don't want to tell you what it is. It's not edible or edibles. So you're okay on a time frame, but I forgot to bring it in. I will bring it in tomorrow.
Thank you. Well, thank you to the customer. I owe them a thank you.
Yes, you.
How was LA?
LA was great.
I saw lots of pictures come across social.
Yeah, I got a couple. We'll throw one or two or three up there for you. I think at the Fonda Theater. We almost had some of the guys from the SIBO and the CME go to the Ford Theater, which is completely different than the Fonda Theater and completely.
One is a president, the other's an aerobics instructor.
That's right. There you go. There's the picture up there, looking good. Fun, old, nice.
Oh, I love the vintage vibes. Kind of just like Art
like
Deco.
A year or two ago, right?
We 2019, I believe we were there, and then one other year.
Oh, in the
I wasn't
before
there.
times.
Yeah. It's a good theater. Works out well for us. How about one more picture, and then we'll be done with it. There you go. How is emptying all the devils in here?
That's so rock and roll.
Yeah, very cool. It was.
And you got your community service hours in.
That's right. But it was a good show. Great turnout, nice people. Always so appreciative. Very, very cool. We got two more coming at you, Charlotte and Austin. So more to come.
And we'll be in Dallas this weekend.
This weekend. That's right.
The Young Guns are taking over the D.
Yes.
That's right. Yes. How awesome. The whiteboard tour, October 12th in Dallas. That's good. Where are you going to go for dinner?
That's a good question. I don't know yet.
You got to get this stuff.
Oh, yeah. How was your Mediterranean feast? Did Tom get his lamb neck shawarma?
It's one of his favorite places.
It's his farewell tour, so.
Yeah. Yes.
It's his Make-A-Wish tour, so he can do what he wants, I guess.
It was very good. Service was good. Because service in LA sometimes can be a little bit slow.
Yeah.
Like I went to go get a cup of coffee. There's nothing open at like 6 o'clock, 6:30.
They're not grinders.
Yeah.
Those aren't SoCal vibes, honey, you know?
I know. I told the audience, I says, you want a killer business? I says, just open up like a coffee shop at 6 o'clock in the morning.
Don't they have 24-hour diners, though?
Not that I could find.
I thought the donut shops were open late, maybe.
Possibly.
Okay.
Possibly. But they need another one or two.
That is valid.
It'll be good. And everybody reminded me, nobody starts work until 11.
Right, sure.
So it doesn't.
So they didn't even have. Yeah,
they don't even need it. Why?
Yeah, the hour work at 11 is no problem.
Right. Yeah. But it was fun. It was good. Yes. All good. And everybody else have a good weekend? You have a good weekend, V?
Yeah. I had like the best weekend of my life.
Apple picking?
Taylor Swift record Friday. Went to the movie. Was amazing, phenomenal, best ever.
You went to the movie?
Yeah, remember she was going to the.
I'll get into it for news, but with the economy is basically being upheld by Taylor Swift at several points. Like, no, the movie made like $40 million at the box office and only ran for one weekend. So, I mean, she's doing the damn thing. Yeah, Saturday it was great. Hit the gym, and then yesterday took the bike out. I rode to Indiana for
85 degrees.
I had my summer gloves on and all the vents open in my jacket and in my helmet and because I still wear full gear, but it was hot.
I was completely naked in the pool. It was that hot. You're 100% correct.
But
Unbelievable.
I rode to Hobart.
You gotta get the privacy screen a little bit higher.
I've got big evergreens.
Neighborhood watch there. But no, I rode to Hobart, Indiana, to the County Line Orchard. So it was my first time there. It was great. I would go back 10 out of 10. They had good stuff for kids. You take the grandkids there.
This has got to be killing the apple picking season for people, I think, no?
That it's so hot?
Yeah.
We had iced cider, so, because it's...
That could be good.
I was like, yeah, it'd be good. But it was nice.
Bees? How were the bees? My wife
No
said
bees was good, but when I pulled up, like they were making everyone park in a field because I was on the bike. Cop was like, "You could go," and I got to park like right in the front, and I was like, "Thanks." I gave the cop the head nod.
Good for you. Very nice.
And then I put a bunch of donuts on the back of my bike, and then I rode home.
Anybody try to grab any off the back of the bike?
No, they were in my top case, so it was good. How was your weekend, Nikki? Did you go apple picking?
I can tell you how his weekend was.
No, it was good. I took him to my favorite burger in the city.
Oh, that's right, Vinny, because Vinny had a game like downtown or something, and then you had to make resis for the whole fam?
Yes.
So I can tell you how his weekend was. It was amazing. His weekend was amazing. Got to spend it with me.
Got to see the family.
Where did you go?
Izakaya.
Oh,
at Momotaro, the
downstairs from
Yeah.
Taro.
Gotcha.
Very nice, very nice. We had like a little.
Well, Vinny only dines at 4-star establishments.
It's
so.
lamb chops, wagyu, caviar.
Burgers. It was good.
Yes.
It was good. It was really good.
Yeah,
Everything
it
was
was good.
excellent. The rolls were good.
No.
Very nice.
What did that check come to?
Oh, it wasn't bad. Maybe like $100 a person, something like that. I mean, that's bad enough. But it was like, it was Vinny's first nightclub. I mean,
It is seedy in there. It is seedy in there.
it's a little seedy and
Seedy, not seedy.
seedy and seedy.
Seedy.
Total.
It was a nightclub.
Yeah.
It was like a.
It's a scene, man.
Yeah.
It was cool.
Did Vinny win his game?
They lost.
They won the
And
first 2 periods. Up
That
by
doesn't
like
count.
up by like 3 goals, and then died in the end. So last night the coach said, "Don't even bring the pucks to practice. You guys are just gonna skate."
Oh, crap.
That's good, 'cause they were a little
pucks.
lazy.
Yeah, skate for an hour. So
Yeah.
they didn't even
Skate
put the
till you
puck-
puke, kids.
Yeah. Just have them go in a circle around the whole rink.
Yeah,
That's what they
second
should
game.
be
That's what they
doing.
did. They called it like a Michigan mile, and then
That's good.
something else that they did.
Yeah, they
and,
need that.
They need the
Lazy.
conditioning.
Lazy.
Nick remembers when he'd have to run the hill when I was
Sure.
a football coach.
Yeah.
I'd make him run the hill. Actually, I would start my practices with everybody else practicing. I'd say, "Nick, go run the hill," and then everybody.
Now we'd have to do suicides
Yeah.
back in the day. Just run those like that.
Yeah.
It's no
They gave
fun.
up like 5 unanswered goals one day to lose by 1, and 4 unanswered goals this time to lose by 1. So
Yeah.
after being up, it was horrific. But anyway, such is life.
Some of them are just so lazy. Watch them. I'm like, come
But
on.
he gets rewarded with Wagyu?
That's probably why.
It was like
heck?
it was like a last dinner. It was like your last request. It was like your last.
I mean,
it was like your last request.
I am
What
a
do you
top
want?
tier performer for all facets of so many things. And I had Panda Express.
The classic. Did you get the new spicy orange chicken?
No, I am on
I
that
had it.
protein. I get the
good.
teriyaki chicken. It's 36 grams of protein, the macros with the super greens and sorry.
I had it. It's good. It's not
good.
bad.
Yeah, yeah.
Spicy orange chicken?
Yeah, it's
Might be
got
too
some spice
spicy
to
for
it.
me.
Usually Chinese food that's spicy doesn't have any spice to it.
This
it's
is,
okay.
Yeah, for
It slaps.
Yeah,
Yeah.
slaps.
Yeah, claps.
All right.
Yeah, it is good.
Slappity slappity.
Yeah.
Can't beat it.
How was the rest of your weekend, Nikki? Did you play any golf or?
No golf. Watch some football.
Oh, how is your fantasy? That
Oh,
sounds odd.
they're good. They're good. I mean, I'm a perennial contender. So
Okay.
it's, it's just like par for the course. My pick'em is top tier.
We're partners. Last year he disappointed, forgetting to put them in, not caring. Like my money, all of a sudden you can burn it. Doesn't make a difference because I pay, he picks, kind of thing. And
Well, no, that was this year. This year, I said,
last year,
you're going
too.
to take all the risk if you're going to take half the reward of my know-how.
Were the games any good? I didn't watch because the Bears are on a bye.
They had a
week,
bye. They had a
so
bye,
I
yeah.
didn't watch any of the games.
Mm-hmm.
But I guess my Eagles lost, so that's
Yeah,
sad.
yes.
They were undefeated, so yeah.
Why are they your Eagles now? Are you like the gym?
No, I
Like
just
a-
like the
just a
Eagles.
fair
'cause I
weather
can.
fan?
Have you seen Jalen Hurts' face?
I mean,
That man is fine.
Eagles fans are kind of rowdy though.
They are right. I don't know that I would. I'm too soft to be
To go to, like-
to be an Eagles fan. Yeah.
Eagle fans are rowdy. Yes, I'll give you that. They really are.
But
Not my favorite team. I mean, I like watching them. I wish they were my team.
Mm-hmm.
sure.
I can't have them as my favorite team.
Yeah,
Yeah.
You root for them, even though you hate them. Does that make sense?
kind of.
Kind
I mean, if someone's gonna have to handle the Packers in the NFC. I'd rather be the Eagle. Like do
Yeah.
something.
No, the Bears are 2-2. We're ready. Ready
We're
for
We're
it.
going to the
there.
Super Bowl.
Yeah, we're
Okay,
ready.
my bad.
You got
Caleb
right.
Williams,
My
the
bad.
best start for any blah, blah, blah.
Yeah, well,
Number one pick, blah, blah, blah.
Sure. My bad.
Yeah.
That's on me.
Yeah.
Okay. Well, all that aside,
Yeah.
I don't have anything else. I guess we could stretch this out.
Thank you for the donuts, though.
Yeah, you're welcome.
Thank you. Yeah.
I will say it was cool. They make them fresh. Like they have like an assembly line of like glass, and you can see them making the donuts fresh. They have like apple cider and like pumpkin, but then they have, of course, apple pie, but you can get apple pie by the slice. But they have an apple pie parfait, so they'll just shove a piece of pie into a cup
like a
with
cake
ice
shake,
cream. Yeah, with
basically,
ice
yeah.
cream, and then they have apple pie egg rolls. And I'm like, y'all are doing too much. But also, I want one of everything. But I didn't get one of everything. But
I feel like apples are pretty versatile. You could probably put that probably works.
Yeah,
The egg roll
yeah.
probably work.
it had like an apple pie float, like all this other stuff. I was like, okay, this is, you guys have something there. And then, of course, all the apple butters and jams and jellies and just, it's like my kind of, it's very kitschy. Of course, there's a store.
Midwest loves their apples.
Who is your apple picking partner?
I just wanted to ride my bike. I wanted to just like go for a bike
Want to
ride.
get that bike between your legs, just go, right?
Yeah, just go.
I thought you were really embracing the T-Swift era. With
No.
a little something on the side.
just wanted to go for a nice ride to some back roads in Indiana.
That's
so
your story. You're sticking to
it
Yeah.
was nice. But hey, we got a great show for you today on this magnificent Monday. It's October, even though it's 85 GD degrees outside.
it. Tomorrow it changes.
Yeah.
I know. I think this week will
Like
feel more
60s
seasonal.
tomorrow.
Yeah. I know you guys are excited to bust out your boots
Oh yeah.
and your tights with the skirts. At the top of the 8 o'clock hour, we have an options jive. Research Corner Kai in the house. He's going to sort of give an overview for what the market is expected to do this week. Whether the market abides by that, that's a totally different discussion. Then Dr. Jim in the house, the skinny on abstract applications, strategically using buying power.
Nothing says Monday like that, man.
I think a lot of
Nothing.
traders struggle with figuring out the best ways to allocate their buying power. So
Yes.
Dr. Jim is going to look at some ways to do that. And then 9 o'clock, we have a market measures. Do overnight gaps predict the day ahead?
I don't know, Vanessa, do they?
I don't know. I think
We're gonna find out. It's a good
Okay.
one though. It's an interesting one.
All right, that'll be.
Gab put a lot of oomph into it. It's really good.
Oh, some good takeaways.
Yes.
And then we got live from the trade desk. We got Quentin and Ryan in the house
Yes.
continuing their crypto crusades. I got a couple stories to talk about crypto because we can't not talk about it. So Crypto Week is now being expanded into Crypto Month, and that has nothing to do with the fact that several of the initiatives that we wanted to roll out last week didn't get rolled out. So now it's just Crypto Month.
Awesome.
Ta-da! The aristocrats. Yeah, okay. And Dan from Tasty Crypto is going to be on with Liz and Jenny today. So thereby continuing that theme. But hey, in the meantime, in between time, do you want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story,
today's
breaking
headlines.
news, coming across the wire. Our leading story, top story, jump in.
In today's headlines,
This just in.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's October the 6th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news?
Yeah.
Hey, just a reminder, sign up for our live shows. Bat is going back on the road, and Nikki Bat also on the road. So we're finishing up all of our events. October is a very busy month, and I will also speak on behalf of Dr. Jim. Dr. Jim is back on the road
2
this
weeks
month
from
at all. Yeah, 2 weeks from now, but October is busy, baby. So see if we will be in a city or town near you. It's tastylive.com/events. So you could see one of our on-air personality groups. So there you go. And feel free to bring gifts for me to the shows.
Oh, is that? Do I
I
have to
will
bring those
promptly
back
forget.
too? Yeah. I already got to carry all the camera gear and stuff with me. Would you like me to bring a carry-on or
Yes.
an extra carry-on?
Yes, I want gifts.
Checked bag.
If someone is going to bring me a pink rhinestone studded hat in Dallas, like
Ooh.
I need it. Like
What about cowboy boots?
bring it to me. I'm a size 7.5. Let's go.
There you go.
No, I'm just kidding.
Somebody bring like a real like cheap $5 rhinestone hat that Nick
Oh,
can
yes,
carry with him
Yeah,
and wear on his
He has
head.
to put it on the
If you
seat
could do
next
that,
to him on
Yeah.
the plane.
that would be
No, I'm
great.
just kidding.
That'd be
Don't.
No, it'll be on on my lap.
Case.
It'll
Yeah.
be on
Just
my lap.
wear it. You just wear it so they don't
Perfect.
charge you. No earnings, correct, Mr. Bat?
STZ, Constellation,
Constellation Brands.
But, nobody will do anything with it.
Yeah, Delta and Pepsi are later this week, but
Yeah.
Oh, okay.
there's nothing.
And a couple of banks the week after that.
Okay, there we go.
Yeah.
Hey, well, this headline is nice and bright and cheery for a Monday morning. Are we in a recession? Yes. If you live in one of these 22 states. Again, I don't know how this dude figured this out. Like, I'm putting this up with a grain of salt because obviously you don't know if you're in a recession until like after it's passed. But this guy from Moody's says that the U.S. is close to damaging economic contraction and that these 22 states are in a recession. Those are the red ones. Ones in yellow are treading water. But because I spent money in Indiana yesterday, it's green because of the economic expansion from me buying donuts.
You know what? I actually love this.
Okay.
Because this is the first time I've seen something that's actually true. And really what they're showing here is it's just random and or your personal opinion on what's going on. There really is no way to say you're in a recession until you've been out of a recession.
Right,
to know
sure.
that you were in the recession.
Right.
So again,
Especially I don't quite think
spin
at this
on- and
granular
what
of
does
a level. But
treading water mean in economics?
It's like
you took.
it's like
you're
right in
on
the
thin
middle.
ice, buddy.
You took economics in college. Did they ever
This
use
was
treading
not.
water?
No.
Not there.
No, this is not on the supply and demand.
Chart?
No, this is on the dad chart, which is
Yeah.
you're on thin ice, buddy.
That's right.
Yeah.
That's right.
Yeah.
Anyway, all right. Moving on from that nonsense, the yen was up. So the Japanese stock market rallied and then sold off as it looks like the
Did you say the yen was up?
Takashi. Well, it was up, and then it crashed. Then it went down.
Well, it's down. It's down
Yeah.
1.5.
Right. Yeah. No, but the market did hit like a high, and then it sold off bigly. And so they
New lows
elected
in the yen. Just
Sanae Takashi. He won the LDP leadership election over the weekend, and that's the reason the market's down now is because that sets the country on a course for more expansionary fiscal policy. Japan hates that, so.
I don't know how you can hate expansion, but sure it does hurt their yen.
Yes.
That's for sure.
Well, their big problem is, unlike us, they keep cash.
Yes.
They don't invest and have
What's the opportunity this morning or this week now with this big move?
Oof. I mean, you could try to catch a falling knife. These commodities seem to, I hate to use the word trend. Currencies
Yes.
seem to trend in a direction for a little while. I'm the worst commodity trader, currency trader / futures trader in the entire world. So don't take my advice.
What are you a good trader on?
I'm a good option trader. I make nice children. I do stuff like that. Everybody excels in different rooms of the house.
Well, the yen sank 1.5%, its biggest one-day slide since May 12th, wiping out gains it made in the past week as the markets resumed trading in Asia. So just keep an eye on that, everybody.
That's a huge move in a currency.
It is.
1% move.
Is this our next
1.5%.
yen unwind?
Could be.
Remember that one?
Yeah.
What was that? August
It was in August, yeah.
4th,
Yeah.
8th, something like
I don't
that.
remember. Everything blurs together.
Yeah.
Well, on the opposite end of that spectrum, now literally talking about commodities, is gold. As gold powers towards $4,000, government shut down. We don't know her. Gold rose to another record, closing in on the $4,000 an ounce mark. Bullion advanced to $39.20. What you gonna do?
Yeah, 39.64 on the futures right now. Got up to 73. It's about a 1.5% move to the upside. Silver with a 0.75% move to the upside.
Because I had my favorite gold bug on the show Friday. That was Liz.
This is a gold bug?
Liz is a gold bull. Yeah, she
Really?
long time. So I listened to her.
Her and Frankie try to in the chat.
Because her dad
try
used
have a
to
contest
like
who's the bigger bull and
tell her. Yeah.
Yeah.
I don't know.
Huh.
All hail Liz.
Good on you. We talked last night, Sunday night show, about how everything was basically at a round number. Gold at 4,000, even the S&P's approaching 6,800. Nasdaq already at 2,500. It was a foregone conclusion as far as we were concerned on Sunday, but it seems to come to fruition too fast here.
What do you guys?
If you miss it, if you blink, you miss it.
What are you doing
crazy.
in gold or silver today to start the week, if anything?
I've got some short. I think anybody that is trading any of these, unless you were just long, has some short delta at this point. I mean,
Sure.
whether you're in GLD, GC, The miners have gone nuts. I mean, all these.
Your GDXJ.
If you're doing anything on both sides of the market here, you are leaning short at this point. There's no.
I threw in the towel on trying to trade gold and GDX and the rest of them about 2 months ago, and then I went to find risk and then got ran over. Now I just stopped.
You're like, you know what? It's not for me.
I don't have big positions, but they're, the ones that I do have are not great positions at this point. I do have a big wide butterfly in the gold futures that would like to see it at like 3,900. Okay. Seems like 1 day's worth of movement.
In other commodity news, OPEC Plus announced they will raise oil output from November by 137,000 barrels per day, opting for the same fairly modest monthly increase as in October. What is oil doing?
Oh, the
3-day rule.
3.5 day rule, because about 3.5 days. Nick got long oil, probably close to here. It got up to over 62 at 61 and a half, just under right now. A 1% move. But that rule where you get long.
It's not my rule. Pablo in our in Option Trading Concepts Live, he's a frequent viewer.
Yes.
It was the 3-day rule for the futures when Mike, Katie, and I were all on the same side. So Katie would usually come on like a Thursday with a trade idea in the futures, and we would all kind of get in because, we kind of.
You gotta support your girl.
Yeah.
Yeah.
And so Pablo would say the 3-day rule is in effect because it's usually a good trade. It just takes 3 days for it to.
Just gotta marinate.
Yeah, it takes 3 days for it to really, if we're getting
wait for it to rise,
right,
like a bread.
If we're getting long something, 3 days later, it'll be like the bottom, right? So you take a little bit of heat, and then it works. Same thing to the short side. So the 3-day rule for oil is in effect right here. 61 and change is probably a good spot to start getting long.
Flawless logic.
Yes.
Hey, Bitcoin hit an all-time high above 125,000. That's why it's crypto month, because we got to talk about it. Bitcoin, the world's largest cryptocurrency by market value, hit a record high on Sunday and was up nearly 2.7%.
New record high this morning, 125,600 and change. It's just about $100 under that. I'm talking about the Bitcoin futures. The cash is trading at around 124.2 or so.
Yeah.
Full speed ahead for everything, as Nick said last week. Just about every commodity, every physical, everything goes higher.
Everything.
What are you guys doing in Coinbase or Circle or IBIT?
Coin has been following Bitcoin pretty nicely. It's not near its highs of like 450.
It's getting to 400.
It's 390, just
right?
Under 390, up about $10. It's gone from 310 or so to 390 in the last week and a half trading. So,
what about MSTR? Is Michael Saylor a genius now, or
he
is he still an idiot? Or
he's back to being a genius.
He's back to being a genius.
It's up 10 right now, but the volatility in there has really come in. The moves are not as big. I don't know if it's an effect of all the other spin-off little
ETHA and
that, but they have MicroStrategy has a whole web of
not a web.
new offerings of spin-off products. There's one that tracks call writing, long stock, short calls, and all sorts of things have kind of popped up in the MicroStrategy universe that I think have dulled the volatility there a little bit, which is why it's not moving. I
didn't know that.
You would think if Bitcoin was at highs, MicroStrategy is well past highs because it was a
leverage product. Basically,
yes, it was a high beta way to play Bitcoin, and so MicroStrategy here is,
I'll throw out the 550 high that it made back in December of last year or something like that and say the high is 450. It's trading at 360 right now. But it has gone from around 310 to 360 where Bitcoin's gone up, $10,000. This has gone up around $50 or so.
Okay. Yes. All right. Well, it'll be a fun week to see if the highs hold. And congratulations, because the wealth of the top 1% has reached a record $52 trillion. What are we doing?
Congratulations on your wealth, me lords.
The top 10% of Americans added $5 trillion to their wealth in the second quarter as the stock market rally continued to benefit the biggest investors. All wealth groups saw gains over the past year, but the growth has been fastest for those at the top. At what point does this become just
Well, I mean, if the market sells off, then they will.
No, but if Elon Musk,
it hurts.
Person,
52 to 50 trillion.
No, but if one person is he's already worth $500 billion. Like at some point, like nothing can hurt him.
Yes.
Yeah.
That's what.
Right. So, but I'm saying, like, at what point does it become unsustainable? Like,
well, 30 trillion does it hurt? I mean, probably not, but it hurts.
Well, he could buy whatever election he wants to now.
Everybody can. Sure.
Not everybody.
Yeah. Well, I mean,
I can't.
They're not all on one side of the market.
bleep.
They're on the political market. And why should we be looking at that anyway? We shouldn't. It should be term limits anyway. I don't know. We have a lot of things different.
Anyway, but congratulations on everybody's wealth. That's bunkers.
Me Lord. Remember to follow it up with Me Lord.
Me Lord. Hey, here's something that's.
Hey, Japan couldn't buy their election. I'm sure they got plenty of money there.
Here is something that goes against the trend. A company called Cerebus said on Friday that they are withdrawing their plans for an IPO. The announcement comes a little after a year after the AI chip maker filed their IPO prospectus. Why would an AI company
Big mistake.
Pull their IPO?
I agree. Big mistake. I don't know.
So it said that they'd raised $1 billion.
This must be the biggest scam ever.
Yes,
No,
if they can't make money in this market, they must be.
Their smoke and mirrors must be very thin.
It said that they raised $1 billion at an $8.1 billion valuation.
And when were they going to go public at an $80 billion public?
Yeah. Something about this, I was like, this seems fishy. But
yeah, this must be smoke and mirrors.
Thought I would report it, so there you go. Hey, quantum stocks had a good week last week. Rigetti and D-Wave served in double digits. They both surged more than 20% last week. Rigetti announced purchase orders for two of its quantum computing systems that totaled $5.7 million, and the owner of Novo Nordisk and the Danish government also invested 300 million euros in a quantum fund that's IONQ and Qibat and Rigetti RGTI.
RGTI 15 to 40 in the month of September. It had a very good September. Looking at the November options, they're about 40-ish cents wide, so not the greatest for a $40 stock.
Yeah.
It looks like
it'll be secondary.
Unchanged, down small this morning.
They'll be secondary today with the madness happening in the chip names.
Yeah, like AMD.
Micron going
nuts. MU just got upgraded or something like
that.
Yeah,
I mean, they're... Yeah.
It's up $10. AMD, I think, is up $50 or something.
It's like $70.
That seems like a lot.
It's $60, $70 now.
Wow.
Yeah.
Crazy.
Crazy moves.
What are we even doing? Hey, Microsoft stock looks like free money, an analyst said. Can analysts just say that? That seems like he's just wiling out. Can you tell people that a stock is free money? Seems like you'd end up in jail. That seems like there's a line somewhere.
I think only if you put it in writing. Was it
You
in
can't
writing?
tell people, well, it's in quotes. You can't tell people that a stock is free money.
Free money, no risk.
He says, it's a Mizuho analyst, says that Wall Street's overreacting to the idea that Microsoft's cloud unit could lose OpenAI business down the road. And he says, basically, like, you got to stay in it to win it, and it's free money. What are we doing?
Free money. Free money, G.
Would you cash in on this free money in Microsoft?
Microsoft, you can say it's been an underperformer relative.
Recently.
Okay. All right, sure. Well, I mean, it's off its highs of 550.
It's only worth $3 trillion. So.
Yeah, I mean, it picked up $1 trillion since, beginning of...
It's up $2 this morning, so if you were trying to buy it, you're going to have to buy it $2 higher, $5.18.
Yeah.
Hey, I'm going to butcher this guy's name, so I'm just going to say it the Chicago way. John Giardinera.
Giardinera. I like it.
I don't know how to pronounce this, so I'm just saying it the Chicago way. I guess he was supposed to be Apple's AI savior.
I think it's Giandrea.
What?
Giandrea? That's what I would say it. No?
Giardinera.
That's a good guess. I like Giardinera.
I like Giardinera too. John Giardinera.
He's supposed to be the company's AI savior, but it's not really working out. There's been a considerably poor handling of Apple Intelligence rollout and the long-promised upgrade to Siri. So it looks like Apple is looking for a replacement to head their AI division. It could be compensation package valued at $200 million. I volunteer. Over several years, Apple kind of a laggard in sort of the tech stocks, definitely a laggard in terms of AI, but it kind of saves them at times because some companies are so AI dominant, like they kind of get dinged sometimes, but they do need to catch up. What are you doing in Apple?
Apple was a lagger until September, where it made up for it. Now it's just off of all-time highs it had in December of, let's just call it 260 and change. It's 258 and change right now, about 50 cents.
Are you getting the new phone?
No, but Vinny did.
No, of course he did.
Am I allowed to say that in front of Nick?
The jobless
Sure,
wonder?
I don't, whatever. I don't
Of course.
Vinny did. He got a blue one.
Okay,
Loves
good.
it.
Good.
Loves it.
I hope it matches his Range Rover.
That's what's the number 50K? Is that the number? Is that what he's got to stay below? What is
The
it?
car?
Yeah, what is it? 50?
I'm not
50?
answering that.
45.
No, 45. It's gonna be confusing.
Yeah, I'm
You
not
get the
answering
smaller Acura.
He's thinking BMW.
Yeah,
Okay.
like an X,
An X3.
Like an X3.
Yeah,
Right.
Doesn't have to be the top of the line, but
Sure.
upper middle.
Right.
Yeah.
World. I hate it here.
Unbelievable.
Hey, OpenAI.
I got a 1988 Mercedes Benz.
In 2008 or
In
something.
2008, it was older than I was.
Hey, if I told you, I hope I know your first car's a Mercedes. I hope you last one.
Yeah, it had a little transmission issue and it would stall.
Kept you on your toes.
Yeah, so it'd stall in third gear. So you really had to. You
Just had to pump it a little
You
bit. as it
couldn't.
was
You couldn't
changing.
go like how when you get on the highway.
I love that car.
Like it would. The 30 to 40 mile an hour range was perfect. When you got into like the 45 to
It's a danger
55, you could
Kept
stall out. So
kept you grounded.
you had to either really
Not to
floor
get in
it to
trouble.
get above the 55, like 60
Sure.
range,
Stay under 40, you don't get in major accidents. That was my
Pretty
whole
sure Sandra Bullock was in a movie about this. So, hey, speaking of Apple, OpenAI and Joni Ive may be struggling to figure out their AI device. Back in May, OpenAI acquired I.O., the device startup founded by the legendary Apple designer, for $6.5 billion, and they've been trying to work, secretly but openly, on a device that would, sort of challenge Apple, but it would be a screenless AI device. But they're having some troubles. A little bit on the struggle bus. You can't really trade this information, but I thought it was interesting.
I don't know how they can't figure this out. You just throw it in the cloud again with this all.
Yeah, just throw it in the cloud.
It's so easy.
Throw it in the cloud. Hey, this is bonkers, though. PitchBook reports that VCs have poured $192 billion into the startup industry so far this year, out of a total $366 billion. So $192 billion of $366 is only going to AI startups. So AI accounts for 62% of the money invested in the U.S.
And I do want to announce that now is probably the best time for it. tastylive AI will be coming to you.
How do you know it's not AI right now?
That's right. You've been watching it for the last year.
Isn't that bonkers though? But imagine like you're a healthcare startup trying to like revolutionize
Well, the
something.
Healthcare AI.
I guess so.
Instead
Maybe
of
that was
having
a bad
real
example.
doctor talk to you, you can have an AI doctor talk
Sure.
to you. All you have to do is call my number.
But they actually found that it was worse. Like when they use AI instead of like actually trained radiologists that are like, yeah, this is worse.
I saw a deep fake video where it was an attractive woman speaking to you.
I'm shocked that that's what's being fed to your algorithm.
I know,
And then
astounding.
the guy-
And what did the attractive woman do after that?
The guy was in the corner talking as the woman was talking. So it's.
Oh, I know where this goes.
No.
The guy's
And
in
he
the
would
corner?
raise his hand. She would raise his hand.
Omaha.
No.
Omaha.
He would take off her shirt. She would take off her shirt.
Whoa.
No, it was crazy how good it was. And the caption was, some guy's going to make a lot of money in OnlyFans someday. And this was true.
Yeah.
I hate everything about that story. I really do.
Yeah.
Hey, I'm going to just keep it moving like that never happened. AI data centers are swallowing the world's memory and storage supply, setting the stage for a pricing apocalypse that could last a decade. I thought this was a really interesting story. Once cheap SSD, DRAM, and HDD prices are climbing fast as AI demand has constrained supply coverage, creating the tightest market in years. And they're saying the rippling effects could last decades. So I would look at Western Digital here if I were you. Like, that's a good company that trades.
If you believe this headline, then these chip stocks are
I mean, all these
highs in their infancy. I mean,
well, Western Digital's up 10x in about 6 months. It's gone from 30 to 130.
That's bonkers, though. So, but see, you don't think about it. Like,
yeah. I mean,
and more to go if there's decades of supply issues. So get in now while it's the ground floor.
Yeah.
I just think because I'm just like I'm like a hobby, photographer or whatever. Yeah. So I buy, hard drives to back up my photos and videos, and I buy,
What about the cloud?
So
put in the cloud.
I like
just
physical.
They've been selling me that cloud to us boomers forever.
I have contingencies.
Matter of fact, kids will ask me like, "Hey, Grandpa, where's your pictures in the cloud?"
I can't with the two of you today. I can't. California has signed a bill that now allows Uber and Lyft drivers, gives them the right to unionize. Drivers for ride-hailing apps like Uber and Lyft will soon have the right to unionize in California as independent contractors, thanks to a bill that was signed on Friday. So part of a larger deal between lawmakers, unions, and ride-hailing companies. What are you doing in Uber and Lyft?
So I took an Uber, a few of them, in California this weekend.
Oh, you did? Not a limo or
no Waymo?
Private car?
No, just comfort level. I just like to be with the people. I'm not like that other person that you want to talk about, but you can't talk about.
Yeah.
They have a bunch of, and I mean a lot, of like Kia electric or hybrid vehicles, all black. They're all the same. It looks like something from a movie. There are so many of them that all the cars look the same, and they're all Uber drivers. And I happened to get one when I got mine. So I spoke to the lady. I guess it's one big company there. I guess they're there and in some few other states too, where they pretty much have a monopoly on what's going on. And she doesn't own it or anything else like that.
Right. She pays a portion to lease the car. She rents the car from Uber.
No, she gets a salary. Like she gets paid.
Oh, interesting.
Yeah. Like, she doesn't have any gig on it. She gets paid a number every day.
Interesting.
Yeah, it was kind of a little bit of a business idea there. I don't know. Right. It was kind of interesting.
Firefly strengthens their portfolio with an $855 million deal for national security firm SciTech. Fly stock took a nosedive last week because their rocket just straight up exploded. But this week they're back, baby. And they announced they're acquiring a national security technology company for $855 million. Well, I'm not sure what the stock's doing.
Even this stock is up $2 or $3.
Hey.
Because everything is up. But again, just made new lows at 27.
These stocks haven't got as much airtime as the quantum stocks, but like this one, Archer Aviation, Joby. There's one other one that I was thinking of.
Joby, that's the one that has the
Virgin Galactic.
Something like that. Well, that's near its highs.
Yeah, so like these stocks have moved to. I'm forgetting another one, but there's a couple other ones.
I know what you're talking about.
Like flying car, taxi,
eVTOL.
There you go.
Boom. There you go.
Yes.
Hey, story. It's near and dear to my heart, but it has financial implications. And that's Taylor Swift's 12th album, The Life of a Showgirl.
How did you like it?
I love it. It is like infectious. She put narcotics in all of her songs.
I heard mixed reviews.
It rewired something in my brain. I got it the first listen. Some people are like, I had to listen to it a couple more times. But the first time that the song, the production is flawless. God bless the country of Sweden is all I have to say. Put some respect on Mr. Max Martin's name and Shellback. Like the production it's her most sonically, I think, cohesive album. She takes risks. I think they pay off.
This is like mind control.
Jump off the deer.
No, it's my own
Are there subliminal messages in there?
No, it's my own review.
Is there like a Taylor Swift army that's getting like subliminally messaged?
Guess what? Since the first time since 1980, she's the first person to have the hit record, hit movie, and hit single.
Since Elvis?
No, since Prince.
Oh, Prince.
Since Prince in the 80s. He said the 80s. Man.
So, I mean, I know
but her Life of a Showgirl, her 12th album debuted at midnight at Target. So Target needs her help. I'd look up Target here. They had theater release parties. I'd look up AMC here. And her record label, UMG. I'd look up UMG here.
Target needs help.
I know, but she's trying. She's one person. She's one person, but it's great. you should just listen
There's
to it.
only one person.
Just stream it. Spotify.
Target.
Spotify. I'd look up Spotify
Look
because
at
she's
this.
the most dominant artist.
This is mind control. Like,
You get this excited about fantasy or talking about golf.
Not this excited. Nobody's gotten this excited about anything.
No.
Nobody's gotten this excited
I'm
since
sorry
like the
your life is
McMuffin.
sad. I'm sorry your life is sad.
Oh
my God.
But I look up Spotify.
Spotify, got it.
Yeah, look it up. Look it up.
Don't hurt me.
Look it up.
Please.
Look it up. No, it's pretty.
Spotify.
I love Taylor.
681, up about 50 cents. Up
See, there
it
you
is
go.
near its highs.
Pretty
Been going
good.
sideways near its highs forever.
Hey,
I've heard mixed reviews on it.
I have
heard it.
too.
I have no.
I didn't want to.
that's okay.
I heard mixed reviews.
I mean, people.
We listened to John Mayer
that's
all
okay.
morning this morning,
just
and I
get-
got the emails from that, so it's okay.
It's okay if they have that opinion in a year from now. They
long as
just
we kill them.
Yeah, they just get sent to the gulag after that.
I know you're joking, but they said the same thing about Reputation when it came out in 2017. Like people just didn't get it. And now it's like revered as like a cloud, whatever. But I'm just saying.
That
day
album's
one,
in the cloud too from
I got it.
2017.
Hey, I do want to talk about this. Shifting gears to sports. This is a bonkers story. Ex-NFL quarterback Mark Sanchez.
This is wild.
Was stabbed
This shit is crazy.
multiple times in an altercation. So first of all, that tweet hits the wire, and you're like, what the F is going on? Every week in the NFL, someone's getting stabbed. The San Francisco 49ers player sees a dead body floating in the harbor. You're like, what the hell is going on? Like someone gets stabbed in Dublin. Like things are going on. And then the news comes out that he was drunk off of his ass. It was a delivery driver. The driver was fighting for his life. And then you're just like, and then now Mark Sanchez is being charged with criminal charges. What a bonkers story.
No, it's insane.
And then I was just like, is this the butt fumble guy?
It is.
I was like, what? Make it make sense.
It is the butt fumble guy. Very good. Yeah, I saw that come out. I'm like, oh man, poor Mark. I mean, unbelievable.
Sure, and I'm sure you're tweeting. You're like, stupid
No,
cities.
no. I didn't tweet anything. I didn't get caught on that one. I just felt bad for the guy.
Yeah.
You know what I mean? And then 24 hours later, you find out what an a-hole he was.
Yeah.
I mean, you know what I mean? Going after somebody like that. I mean, I don't understand like how they don't have handlers. You know what I mean? Not like
they're
just
adults.
Sanchez.
They're
but I mean,
grown people.
I know,
men.
but he's got a gig on TV. I mean, what is somebody? He's got to be with somebody else in the car. Like he could not have been alone. Where they say, Mark, just hang out here." Like you know what I mean?
Yeah, I'll
like,
get the food.
Like Tom's wanted to get out in traffic sometimes and move the car. I was like, Tom, just stay here, man. It's cool. Let the driver do his work. I don't understand how they don't have somebody.
This is
that
just a bonkers story.
Crazy.
And
he got stabbed a couple of times too. That's the other kind
He's
of
in
thing.
critical condition. Like I think he's like in bad shape.
oh, he's in critical. I thought he just got stabbed in like the.
No, I think
The
he's
chest,
like
too. I read.
I
I
think
mean, who
he's
knows?
Yeah.
Yeah, it just says here he remained hospitalized early Sunday, according to police, in his upper right torso. He was stabbed. So
Yeah. Crazy.
Shanked.
But what a bunker story. Like, can we just have like a week of, and then also, like I said, the 49ers player saw a dead body floating in the water. I was just like, what is happening? We are doing too much. You are going to hate this. I'm going to just do what I want, though. Over the weekend, this video surfaced on social media. I don't know this guy's name. I'm actually going to look it up. But he's a radio DJ, I believe, in Pittsburgh for one of the Pittsburgh stations. But this video went massively viral over the weekend. I hope both sides of this man's pillow always stay cool. I hope his steak is always cooked at a perfect temperature.
I don't think I'm going to like this
You,
guy.
sir, you are a king. Watch this.
I woke up this morning and I got in the shower. And I'm taking a shower and I'm listening to the first track of Taylor Swift, The Life of a Showgirl. I'm listening to The Fate of Ophelia.
While washing.
Yep, and I like it, okay?
Yeah,
I'm a quick washer. By the time I'm out of the shower, I'm on Elizabeth Taylor. I want everybody to picture me. 6'9",
A little wet still.
in the chorus of Elizabeth Taylor
He's
hits.
6'9".
And then I know she's got me.
Elizabeth Taylor got you?
All right, so everybody, if you're not driving, close your eyes right now.
Picture a bathroom mirror.
Yep. You ought to be with me?
I'm with you.
Couple of oddly shaped boys in front of the bathroom mirror that can't handle the chorus of Taylor Swift.
I
Cry my eyes, violin, Elizabeth Taylor. Tell me for real, do you think it's forever?
I'm telling you, this is mind control.
And I
Sing it at least. Come on.
But I never had to, and I can't have fun if I can't have you. Taylor Swift.
How do we compete with this, ladies and gentlemen? You can't compete with that right
I don't know. If you're afraid of AI, the AI's got nothing on that. AI has
That man
nothing
is a
on
king. That man is a king.
You know where you can find your next gig.
He's 6'9". I hope he punches you.
I don't think I'm going to have a problem with that one. Wow. All right, ladies and gentlemen, we're going to take a quick 90-second break. Good job out of you. If the crew is on board here.
If you start singing
That's why I brought you donuts.
Taylor Swift from Vanetta. We're going to take a quick 90-second break. Let's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
We are back, son, and you know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P's up 21 and a quarter. They're actually about 9 or 10 handles off of their highs. NASDAQ, your leader in the group, up over 200, 206 for a new high. If we close up here, Russell up almost 15, doing the same, and the Dow up 78. The Dow, the weakest of the group, although it is near all-time highs if it closes here. VIX volatility /VX. The daily movement on volatility down only 15 cents. Not a big move, although it is almost 1%. Not a big move to the downside after the weekend. I would suspect if we hang out here, which I'm not so sure that we will, but if we hang out here, volatility will collapse. It stayed bid last week, going sideways, as you can see here for most of the week. Bonds down 24, 116.06. They're becoming interesting. IV rank of 4.9 is relatively low. I think the bonds are a little bit of a weakness in the bonds, a little bit of a ceiling on the market itself, but we'll see. Notes down 10. Bitcoin up $1,785, 125.4, just about $200 off its highs. But you could see these last 6-7 days here just going parabolic to the upside, new highs. Ethereum doing the same, up $58, not at its highs yet. But still acting the same way as Bitcoin has. Oil finally catching a little bit of a bid, giving a little bit of a reprieve to those trying to catch a falling knife in there. The last 2 days have been good. Prior to that, it's fallen from 65 to just about 60. It's 61.5 after trading up to 62. Gold, well, buy every dip. I mean, this is not a week or 2 week or 3 week move. This is a 6 week move or more. After making lows at 3,360 in the middle of August, has not had a stop, approaching 4,000. Some stocks that have moved big this morning. AMD, we talked about briefly, up around $60 or so. MU up around $10 or so. There's a plethora of other stocks, but we'll see. Although I don't see the E-mini S&P is really reacting. I mean, we are up 20 handles, but they're not like...
they're not exploding higher.
They're not exploding
If you told
higher.
me AMD was up 60, I would think that, the market is going bonkers.
Yeah. NASDAQ would be up even more than what it is, but we'll see.
Yeah, you got NVIDIA down 2 or 3 on this move, so...
Yeah, NVIDIA's
maybe it's just some of that air coming out of the... it's like 60 points in AMD is probably 2 points in NVIDIA when you net it out.
Yes.
Less.
Yeah. Confirm and send. Let's see what's going on.
Very nice.
Let's get to the opening bell at the bottom of the hour, 8:30. Confirm and send. There you go. First question, please. Are you ready?
Yes.
I'm in a strangle I'll do this again. I'm in a strangle that's gone inverted, meaning they now have a short in the money call and a short in the money put. Is there a limit to how far inverted you would go? How far will you go for a loved one? Because obviously they love this trade. They're inverted. How far will you go?
I mean, at a point, you won't be able to make money on the trade because you're going to go further inverted. If you're
probably there.
Yeah, if you're asking this question, you're probably there.
So what Nick's trying to say is, if you collected $10 in credit and
you're going to have to make
$15 inverted, you could never get back to even on this trade.
In that
because
cycle.
The inversion is what the trade will be worth, $15.
It's going to take some rolls to get back to a scratch or a smaller loss. I mean, that's kind of the conundrum you find yourself in as a trader, is that you have to consider, okay, I'm going to roll up this put, and if I can get back $400 on the trade,
You're
I'm
assuming
out.
the stock's going higher. What an assumption you're making.
Well, no, you're not. If you're short the in the money call and you roll up the put, you're still short. You want that adjustment to not work.
You want it to go inside your inversion.
Yeah, you want that adjustment to be, to be a losing adjustment, so to speak. I think it's hard to put a number on how far, but the mechanics are to reduce delta by 25 to 50%. At some point, you're going to be moving to a position that you probably won't be able to make money on, and you got to kind of set a target for an exit on that position, whatever that number is to you.
Nick answered it perfect. I'm going to give you something that I do. Like, by the time I get to a straddle, or I'm going to get to a straddle on my mechanical move of one of those options, Nick's example was moving up the put because the stock was going higher, because we're at all-time highs. It's a good example. I would look to buy the guts and sell the wings, especially if IV rank is still high. If IV rank is low, I might be looking to close the trade, cut bait, and take my couple of dollar loss. I mean, it happens sometimes. The stock wins. I think a lot of times people get so hell-bent on having to make the money back in that stock. They miss so many other opportunities, especially if it's using a lot of buying power. If you're inverted and that strangle use, let's say $3,000 in buying power, and you're inverted by $10, it's going to use $4,000 in buying power. Now, it just went up by 30%, skewing all of your numbers. So my suggestion for you is, when you get to what's going to be a straddle from a strangle, you've rolled it up 2 or 3 times already, it's probably time to buy the guts and sell the wings, or think about getting out of the trade completely.
Agreed.
Next question, please.
I know one of the rules is to stick with liquid underlyings. However, I'm sticking with limit orders. Is liquidity really a concern?
I mean, yeah, limit orders are what I always use. Now, they might be tradable limit orders, meaning they're very close to the bid or very close to the offer, and I'm going to get filled on that. Just because it's a limit order, that doesn't help you with your liquidity problems. Now,
and that doesn't mean the fill's going to be good either.
Doesn't mean the fill's going to be good either. Yeah, you're 100% correct. Liquidity is king. Think about it. If Dracula's watching the blood, he's the only one that's going to give you a price to get in and the only one to get out. You don't want to be in that. You want to be where everybody is, and everybody kind of bids and offers on your strategy that you want to close or even open. So if you're using defined risk and a limit order, I'd say you're a little less in harm's way, and like a vertical spread kind of thing, meaning, on both sides, an iron condor kind of thing, a calendar spread, a diagonal spread. Okay, liquidity still is king, and you want to trade. I probably wouldn't trade it, but if you want to trade it, go with it. But if you're doing a naked one, meaning, undefined risk on both sides, abstain.
There are enough liquid underlyings to trade that, for the most part,
that's a good point.
Like if you want to trade a one-off stock that you have a directional assumption, or you're taking a shot on something, go for it. But from a short premium perspective, there just isn't a need to go into these underlyings. Like there are more than enough stocks that have penny wide or a couple pennies wide markets where you shouldn't have to do this sort of thing.
Yeah.
Like if you want to YOLO some calls, or you're bullish on some stock and you want to sell puts to wheel into stock in some random underlying, go for it. And you're being directional. That's kind of the key. You're being directional on this trade. You have an assumption, go for it. But if you're trying to sell premium, sell strangles, iron condors, whatever, stick to the stuff that's liquid. It's just so much, it'll make your life a lot easier.
Excellent point. Good job out of you.
Thank you.
Do you have different strategic mindset with trading an IRA versus trading a regular margin or PM account? For example, are you more long-term oriented in an IRA? I think they're talking about delta probably, and more long-term commitment to the stock itself.
Yeah, I think in an IRA you want to be less hands-on in general. And a lot of your positions, a lot of things that you're doing in an IRA, you're defining risk because everything is cash secured. Your flexibility with your trades are a little bit lesser because you can't really be short, shares, and you can't, short delta in general is a lot harder to get. You have to define the risk on the upside. Can't sell calls. You can sell calls, but it uses a significant amount of buying power. So, so I would say generally, and my IRA is different than his IRA. He's going to be taking his out soon. I got 40 years to go, 30 years to go. So yes, mine is a little bit more
I'm going to give you an answer that somebody gave me not too long ago, and I don't have to take money out of my IRA because I worked hard when I was your
yes.
Okay, to get to the point that I am today.
Yes.
Don't have to do that right now.
Yes.
But that's neither here nor there for the answer to this question. You know what? I trade them pretty much the same. I do neglect my IRA a little bit sometimes because of some of the things that you mentioned a moment ago. Use a lot more buying power and stuff like that. So I do neglect it from time to time. A lot of times the custodian that you have it at, or the trading firm you have it on, unlike Tasty Trade, you can do anything in an IRA. In other firms, they don't even allow you to trade options sometimes. So it all depends on where you have it. If I could go back and do it again, I'd be a lot more diligent in my IRA. I would do probably the same things I do in my regular margin account in some degree or another in my IRA account. Next question, please.
Our mechanics call for closing or rolling trades at 21 days till expiration because the gamma risk begins to increase relative to the theta on that position. If that is the case, why wouldn't we also buy options at 21 days and try to take advantage of that gamma risk?
Yeah, it's a good question. If you don't like to, like I always say to somebody, well, if you don't like what I'm doing, do the opposite, right? Yeah. If I'm doing something that's a bullish strategy and you hate it and you want to do a bearish strategy, then that makes sense.
That's what a market is.
That's what a market is. I don't have an opinion at 21 days on what I want this stock to do. I put on something that worked great, or it worked small, and now I have the risk of undefined or selling premium, and I want to get out of that trade. Now, why don't I buy both sides? Well, again, it's a 50-50 shot when you do something like that, and I'm not looking to kind of hit that home run. I'd probably take that money and go someplace else with my ball and jacks.
Yeah, it's also
But you can, if you like it, go right ahead.
Well, it's less about the long premium working after 21 days. It's about the risk reward of that position. Like if you typically at 21 days, that's when the trade is either working or not working. Let's say you sold something for $3 and now it's marked at $1. it doesn't mean that buying that at $1 is a better trade moving forward from 21 days. It means that you already have, 66% of the max profit, and the 30% left is way more risk, gamma risk, than the reward that you had on entry. And so it makes sense from the 45 to 21 day time to manage that position if you're short premium. It doesn't necessarily mean that from 21 days to 0 days, you should be long premium. It's not zero sum in that regard. It's about the starting of the position and where you're at currently.
Well said. Good job. Next one, please. My portfolio has a combination of long stock and options. My stock positions are very small when I initially put them on, but some of those stocks have had amazing runs this year. As an example, I bought OKLO in the teens. Congratulations.
Your wealth, me lord.
At the time, the position was about 3% of my net lick. Now it accounts for a much larger percentage. This is going to be a good question.
Yeah.
What do I do now? I don't want to sell the position, but I also feel overly concentrated. Is this a time where you might use a stop limit order to buy a put, or is there something else I can do?
Yeah.
High class problem.
It's a high class problem.
Good job out of you.
Yes.
Now what do we do?
And nobody wants to sell while things are moving 5 points higher every day, and you're 10xing and
only 4 points in this example. It's 4 points
yes,
higher right now.
of course. But then when it gets when it has the sell off and you send me the emails of like, now what do I do? It's
harder to do something when you say
it's harder to do something when you watch it, when you lose 30 or 40 points, which is in the volatility. When you look at all these stocks and Oklo in particular, because that's the one in the question here, you got 100% implied volatility. So you should expect this, it can certainly go down 20 points.
You should expect the unexpected.
Yeah. So, doing something I think makes sense. I know Jenny was talking about selling calls because she's in the same boat where she bought some shares and she sold like the 160 calls in the weekly. Like they were like at like $2. Uh-huh. She just didn't want,
sure.
Get into that situation where you don't want to cap the upside. But, there's always going to be a trade-off, a gimme and a gotcha here. And you got to do.
So what would you do? Would you buy puts? What would you do?
You could collar it. You could sell some of the shares. You could buy the puts.
You could sell some of the shares. Like, it's okay to ring the register.
Yeah.
You had 100 shares, and now you want to sell 25 of them, or 20, or 8, and go to some.
But that's a harder sell because if you want to sell options, you want to sell premium.
They want to keep, but you want to sell. If you're going to sell something, I wouldn't sell the 160s. Like in your example, I would probably sell the at the monies because that was going to get me out of it. Or I do a vertical spread.
Yeah.
Because a vertical spread, what you're doing now is, let's say the stock's $130. If you sell the 150, 160, 150, 170, whatever it is, $2, $3, $4, $5, $6, whatever you're doing, you are kind of saying, in this range, I'm going to get out of X amount of shares. And you can always buy that back, by the way, right? Like, you take the profit from 130 to 150, and then between 150 and 160 or 170, you don't have any profit. You can always buy that back and keep your stock and keep your spread. But that's what I would do. Probably a vertical spread closer to at the money is what I would look to do.
Yeah.
And then I can assess it when I have a bigger high-class problem when it's in between those two short strikes. Next question, please.
When you scalp, do you only use the underlying or do you do it with options as well? If you do it with options, are you buying or selling, and what expiration series would you use?
I think scalping has evolved now into, since there's 0-day options, that's kind of scalping options. When you were looking to scalp
you don't
options,
have the tail risk.
What's that?
You don't have the tail risk.
Well, it's a defined risk, right? Yeah. And you don't have the tail risk of multiple days because it's a 0-day trade. It ends at the end of the day, cash settled if you're trading SPX, which is what most people who trade it. So this question back in the day before 0 days, I would say, you can, look to scalp options. You got an opinion on something, and you sell the put if you're bullish, you sell the call if you're bearish, and you stay in it for more than 1 or 2, 3 days kind of thing, because options will move a lot slower. I mean, scalping really is for futures. That's the instant gratification and the instant pain. So for me, I think if I'm looking to scalp the day, 0-day options are the place to go.
I agree with that.
Awesome.
That's a good point.
Awesome. Well, listen, let's end on a high note. No fights here. We're going to take a quick 90-second
family, okay?
We're family. We're family. That's right. You can always pick your friends. You can't pick your family.
That's right. You're stuck with them.
We're going to take a quick 90-second break and come back. Even the S&P's up 18, NASDAQ up 192, Russell up 15, Dow up 86. Volatility only in by 9 cents. Bonds down 21. We're going to take a quick 90-second break and come back. We got more Tasty Live. We got an option jive with Kai going over what happened last week and maybe the expected moves for this week. We'll be back in 90 seconds. Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
It's options. Jive.
Niggy, we are back, son. You know what that means? We got Kai in the house. Kai, what's up, my man?
Not much. How are you doing?
We're doing good. Option Jive. I'm glad you came here today so we can see what happened last week and what's coming up for this week.
Yeah, a lot of great information.
Awesome. Let's do it. I know you work hard on it. Show me something.
Sure. All right, so what happened last week? Last week, definitely the government shutdown is on a top line.
We did a segment on that. Was that Thursday or Friday?
Wednesday. Right on the October
Right after
1st.
after the shutdown happened, which, by the way, if the shutdown happens, does anybody
Seems
know?
pretty good.
The markets
Doesn't matter.
shut down all the time.
Yeah, so the research shows, at least for the first couple of days in the first week or two, we saw increased volatility. Right?
Yeah.
The price in general, SPX indices price went down, but that's what we didn't see in the past week. Actually, everything went up.
Yeah.
But the indices, except QQQ, was down on Friday. Every single indice, every single day, the price went up.
Yep. And now the Qs are back up to all-time highs. So you got your one-day dip.
Oh yeah. So all four indices are at the market all-time highs right now.
Yes.
Again and again and again.
You sound a little bit frustrated.
Yeah.
Like just a hint of frustration.
It is
in your
frustrating.
voice. It is frustrating. For traders, it is frustrating, especially if you get stuck on the wrong side of the market and you think that you can't flip the cards. In trading, you cannot fall in love with the position. That's the most important thing, I think, in anything. You were talking before we came on just a moment ago about a poor man's covered call that went too far.
Yeah, I got a couple of.
So you have a winning position, but you didn't maximize the game.
It's the FOMO that always.
Okay, I mean, like, you know, I don't want to.
I don't feel anything. I don't feel anything.
I don't want to hear it. Like, I don't want to hear it. I don't. Hear it from you.
I don't feel anything. I'm numb. I'm numb.
Right. You know what I'm saying? So.
Yeah, I had a poor man's covered call, perfect position, touching my short calls in AMD, and it went up at $40.50.
So now you'll maximize your return. You'll close that position. You can decide what you want to do in AMD, but you didn't make as much as you could have by either buying back that call and selling a higher call because the stock didn't give you enough time.
Yeah.
That's a once in a year event. It's going to happen to you like once a year where not a stock's going to go up $60, but it's going to go past your call and you don't maximize your gains. So be it. You used a fraction of the money it would have taken to buy stock, sell call, or just buy stock long. So if you take it and look at it at the couple $100 that you used to buy that poor man's covered call and convert it to stock, you'd probably be almost in the same position.
Yeah.
Yeah, and also when we put on the poor man's covered call, we know we wanted lower volatility in the position, but expect lower return at the same time.
Yeah.
Right?
When it happens, you want a high return.
Yeah, but it's always.
I don't know.
It's called FOMO.
Yeah.
It's almost at the market highs, and
you have to find somebody to blame it on. I pick Nick. Just blame it on Nick, and then you'll be fine.
now you change the target.
The problem is when you have that sort of thing, and then the next trade you do, you're like, oh, okay, I'm not missing the 60-point up move, and you size it up, and you get too big, and then it goes against you, and then the emails come in, I got too big on this one because I missed that one. Now what do I do? So
trading has a way of equalizing everything, doesn't it?
So
looking back, everyone would say, I just buy stock. Don't use don't use the options. But at that moment, I still believe poor man's covered call is a better position for AMD.
Yes, for sure.
All right. So because of the shutdown, some key economic data, PMI and consumer confidence data came before October 1st, so we still had those numbers either matched or lower than expected. So which means the broad economy doesn't look as good as we expected. At least it start to show some weak signs. And Friday, so we don't have that. We didn't have the jobless claims, and of course it's going to impact the a lot of the data coming out in the next 1 or 2 weeks.
Brian in the chat is saying, if you have a bad trade, just blame your wife.
You could do that. Yeah. Not good for your health.
Yeah, not good. Yeah, I don't know.
All right, so next, coming to looking at this week, some of the government data will be replaced by the private sector data. So
we get something.
Something.
It's still gonna be completely fake too. I mean, it'll be
Can they
revised.
public sector data? We surveyed the wrong public. We gotta revise this. I mean, it's all whatever it is.
Yeah.
I mean, I don't know.
Yeah, so it's gonna feel a little bit different than before. But
I don't think it is. I mean, not for me at least. Maybe.
Oh, I mean, the market reaction based on the data. I'm talking about this specific point. It's going to be a little bit different. But for zero DTEs or very short-term traders, you just trade whatever.
Wonder how these chart and news people are going to be able to trade. I mean, at least have somebody to blame it on, like your performing covered call.
I don't know. That's what I'm saying, right?
Mm-hmm.
Because there are so many ups and downs, but just based on the new release of the data here and there. So that's the noise of the market you have to deal with.
Yeah.
And earnings season is actually the more companies coming out next week. But this week we start with the Dell and Pepsi.
Delta Airlines, yes. Yes.
Both on Thursday after market close, I believe.
You're
believe so.
correct.
Yeah, I have the chart in the very last slide.
Yes.
Yes.
Pepsi is before the market.
Before the market
on the
on the
9th. Yes, but yes.
Okay.
Cool.
All right, so last week, different from the week before, all four indices went up, especially the Russell. So 1.1 is the SPX.
Cancel crash.
Cancel crash. Yeah,
We had a 0.3% down move. That's our crash.
That was it.
That was it. You miss it? Sorry.
You really have had a day, maybe
two.
If you're lucky. Really, if you're not aggressive with your roll ups, if you're leaning in that direction, or if you're looking for a spot to get in, if you haven't acted quickly, you're dead.
And especially last Wednesday, October 1st, we went down at the beginning, but after, I think before lunch or during the lunchtime.
Sell Rosh Hashanah, buy Yom Kippur. You were all warned.
There's no
the other way around.
Buy Rosh Hashanah.
Sell
Rosh Hashanah, buy Yom Kippur. Wasn't Yom Kippur Thursday?
Yeah, no, that's what played out. But I thought
No. I
thought it was buy then
beginning of the year. No. Tom.
Sell then buy?
Sell then buy.
Sell
Rosh Hashanah, buy Yom Kippur?
Yes.
Oh.
Yes. And even then, you really couldn't. You only could sell.
I thought it was buy Rosh Hashanah because September is
That's the way I
usually
taught
weak.
you, which was completely wrong.
All right. Whatever on October 1st, there is no selling pressure.
Missed our bond move too. They're up 6 ticks.
We did miss our bond move. You
Johnny.
did say, would you
Johnny.
like
I
to?
said we should take the trade. You said no, save it for the show.
I said you could wait till 8:30.
Yeah, you can wait. Can't wait.
You'll still wait. You'll be fine.
All right.
Sorry, go ahead.
No, that's fine.
Just
All right,
family squabble.
So this leads to the next slide. The expected weekly move, or the realized move, is exactly same as the expected move last week. So this week we saw a little bit increase in implied volatility. This is another point I want to talk about in the next couple of slides. The price going higher, implied volatility actually went up a little bit too. But the overall, the weekly expected move is still 1.1%. So let's see. It's still a very, very tight range for SPX.
Yes.
range.
Yes.
Yeah.
What's it said?
Tight range when you move 30 handles overnight.
It's a half a percent.
Yes. Yeah. 6,800 is basically our top on SPX.
It's a given.
Or the end of December.
It's free money.
No, for the end of this week.
Right.
60 to 74
Tomorrow.
points. Yeah. At this rate, we'll get it by lunchtime.
By noon.
Yeah.
Did you guys put in the estimate for the end of this quarter or the end of this year? Same.
Oh yeah. I mean, I'll beat Nick.
7,000.
I don't know about that. Let's see. Well, Mikey, which felt like banana land at the beginning of the year, is at 69. So he's up.
69. Okay, that's
of
a good number.
course. Yeah.
So childish.
Even Kai knows that.
Hey.
Next slide, Kai. You get us in trouble here.
So talking about the implied volatility. So although there are more green arrows, but the implied volatility went up a little bit. Not like a change too much. Probably the natural gas up a little bit more, but the rest of the most didn't change. The bond actually implied volatility dropped a lot.
Yes, bond volatility dropped a lot.
Dropped to zero.
Yeah, nat gas did have a big move, but nat gas is a small trade. I think the Bitcoin move is really the story of the day. I mean, I think it's actually taken some of the headlines for traders away from the market itself, which is at all-time highs, just because of the magnitude of the move. But man, I got to tell you something. And I said on the show on Monday, I had more bearish tweets and DMs about Bitcoin going under 109,000. This is the line of sand.
You call that bearish?
Oh my God. Oh my God. And there was a 2 standard deviation move to the upside. So you never know. Anyway.
Yeah.
Next slide, please.
The expected move is 10 grand a week.
Yeah.
I mean, that's what it is.
So let's take a look at something interesting happened last week. This is copper. Copper actually rallied quickly above $5. So from weekly basis, it was up more than 7%. That's actually a pretty big move. Only less than 2% of the events or days or weeks we saw in the past 10 years had more than 7% move. And from monthly perspective, it was up like 11, somewhere between 11 12%. That's actually okay. 5% percentile, because you can see from the chart the copper and some other heavy metal features has pretty volatile move.
I think a lot of people have shied away from this since the that big was it August when we had the tariff. It was
on again, off again,
off again. It was like limit up and then limit down within 3 hours.
Copper futures,
and they're big.
They're huge. I don't even look at it. I did know that copper moved big the way you just explained a moment ago, but it's not something I watch or even look at. I've never traded it. I haven't traded it.
FCX has bounced back a little bit, so that's tradable, but it got whacked. It was down at 35. They had that, I think, some sort of
mining accident. They actually traded it right after that to buy it. Which ended up being
and it's up $5 from there.
I agree with you. I don't watch copper on a daily basis for trading purpose, but when you need to renovate your house, you got to know the price.
No, you got to hold your ankles. You can't do anything in there.
Yeah. So next one is the VIX. I want to talk about it. So last week, the week before, although there's so much volatility, there are so many different kind of chaoses coming in through different kind of media. The volatility didn't change. The volatility didn't change that much. The high to low, intraday high to low for the past 5 days is only 1.54 points, right, in percentage. So this is a very tight move. So whatever we're experiencing right now when the market keeps going up, the volatility doesn't change or going up actually a little bit. I don't know if this is something we need to watch or just maybe trade less or keep more buying power on the sideline.
Is it coiling though?
I think volatility's basically been up the last 4 or 5 days as the market's been up.
Very
on
an actual,
but not going lower.
And it's not up a lot.
We're at lows on volatility. It's like, how low can volatility go? I got to discount a little bit. I think you have to see the first big down move, by big down move of the market.
For a premium seller.
For premium
we needed some signals.
We need something. So we need a down move with volatility staying down. Then you would expect the market to kind of keep going in the direction. If you get a down move and volatility up, 6, 7, 8%, then maybe you got something going on to the downside. That's the way I would look at it.
So that's why.
Then it's you climbing the wall of worry. We've been here a million times.
Yes. The good thing is, so let's go to the next slide. Good thing is for a lot of individual stocks, their implied volatility rank actually start to climbing up. This is the weekly best and the worst performance in the S&P 500, and also with a very good liquidity. The top 5, some of them are the medical, related companies, bio companies. Because of all the news came out, they went up all from 10 to 16%. And Micron, MU. How much they went up this morning?
It's 10? At 195, so it's up like $7, $8 right now.
Yeah,
not the usual list of companies that we trade.
But it's all headline driven. Like this is all headlines. Like it's all, you had Las Vegas Sands, MGM, Wynn. That was all on the backs of like the prediction market stuff. And if you look at like DraftKings got killed too. Your oil news.
More competition.
Energy.
Oil and energy has been weak. On the upside, you had all sorts of healthcare. Pfizer had the, getting in bed with the government. Yeah, Micron is chips. You got Coinbase with Bitcoin, moving. It's been very like headline driven. If you're not in before it happens, you missed it.
Exactly, agree. You can even see the trend from this table, right?
Yeah.
It's very concentrated in certain sectors.
Yep.
All right, next one. So I want to, because we just passed the September, I want to give you a little more information about the top and bottom performance in the past month. So WBD, for sure, this is because of the merger and acquisition news. It was up more than 60% in the past week. It's unbelievable.
Yeah.
Yeah,
a lot of questions on that one too. Like with all these takeovers and take unders or take privates, whatever it is, the options, if you have any, because some people have been trading leaps in here or whatever, the options will settle to whatever the deal is at whatever the time of the deal is. The premium that you see in the options right now is speculation that deal either doesn't go through or
Deal risk.
Yeah, it's the deal risk. And so,
but those leap options, they lose a lot of premium in them very, very quickly. They're all done pretty much. You're going to have deal risk across all the months, basically being the same dimes within each.
Yes, but closing them is hard because the market's stinking those, and so
usually you can't. I mean, if you don't do it the first day or two, they get very illiquid.
So whatever the deal is, cash, stock, combination, that's how those options will settle.
Cool. And Micron, Intel, all these, not all, but most of the chip makers, AI-related companies, you see 40, 50% in the past month. Definitely you can see in the past week, in the past month, we saw more upside momentum from these two lists, right? And from the bottom part, Lulu, down 15%, CarMax, Deckers, these are down 14 to 24%. It's
all not too far off
kind
their
of
highs, though, too, right? I mean, a lot of these stocks have kind of caught a good beat to them. All right, next one, please. And we'll catch the opening bell.
The last one, we already talked about it. It's Delta and Pepsi. Is a Pepsi after market close or before?
Pepsi's before.
Also, so actually Delta and Pepsi both are before market opens on Thursday.
Delta is before also. Yes. Correct.
I put Levi's here, but I don't think you guys ever trade Levi's.
No, not too much, unless you have a directional bias in them. I do like Pepsi over Coke. We're going to take a quick 90-second break. I'm just talking about taste. We're going to take a quick 90-second break and come back. We got more Tasty Live with the opening bell. Back in 90 seconds, Tasty Live. Thank you, Kai. Great stuff.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks.
our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son, and you know what that means. The opening bell is imminent in about a minute here. Even the S&Ps are up 25.50, NASDAQ up 221, Russell up 18, Dow up 118. You can see on a percentage basis here, NASDAQ and the Russell are your two strongest, and the Dow and even the S&P are less strong. I can't say weak, right? They're all at high.
Definitely not weak.
Definitely not weak. Volatility, not weak either. Down 15 cents, although it is on its lows. You can see here it's been going sideways the last week or two. That's what, last week or so. That's what Kai was talking about. Bonds back down 21, big shot. You can do whatever you want right now.
You want to sell some puts there?
I think you should. I think it's time to
the
sell
115s.
Yeah, puts or put spread. Sure.
Go November.
And if you're looking at these, you're probably going to go into November with 46 days, correct? You could go to, I don't know, the 14s, the 13s, pick your poison.
Okay. I was going to say the 15s, but if you want to go.
You can make it spread. There's your bell, just to give you an idea. If you're selling one of those puts, let's say at 33, the market was 32, 34, you get about $500 in credit as on that whole spread, $515 or something like that. $625 per.
You want to do the 14s?
That would be my plan. I was controlling it.
Kind of been the low. You are controlling it. This is team. This is the bats.
It is teamwork. Wow. Take a look at this high option volume list that I have here, and you've got only Meta in double digits, down 11. AVGO, which has been not participating. Again, not too far off its highs. Down $2 and change. NVIDIA down 2 and change. You mentioned BABA also down about $1.60 or so. Reddit down $1.40. Lulu, which has been an underperformer, down $1. There's that RGTI, a Rigetti computer, taking a little bit of a breather, small, down 80 cents. When I said, wow, look at this list, Apple down small, only one stock in double digits there. On the upside, you got a bunch of stocks. AMD up 57. That's a 34%.
What do you think about selling calls there? Like just selling.
You would have never sold higher calls in your entire life if you wanted to.
But like,
Ivy Rank's only 10, so maybe a call spread. Has earnings coming November.
What about as like a scalp to sell like the 250 calls in like the 11 day? They're trading at $5.
Oh, in the 11 days.
Yeah.
You like flirting with.
Oh, we just missed it. They're at 450 now.
Is this how it's going to be?
That's what Tom would say. That's what Tom would say.
Is this how it's going to be?
What do you think about that? Let's do that as our little scalp.
I would do it to find
Tom. If Tom was on the show right now, he'd be selling this stock with both hands.
Sure. Agreed. I would sell a spread, but that's just me.
All right, we're gonna do this. We're gonna put this in at 450. See if we get filled at the 250 strike.
While you fumble along with the platform.
No, I'm right.
I'm
what do you mean fumble around? I just told
Tesla
you I'm putting a market above it.
MSTR up 11. Taiwan Semiconductor up 10. OKLO up $9 and change. That's an almost 8% move on OKLO. Shop up 7. Palantir up 7. All I'm saying is there's a lot of stocks up on the upside, very small on the downside, obviously, but yet you have the E-mini S&Ps only up 19 and volatility only down 17 cents. So you do have a rotation in some of these stocks. Market smooth sailing right now?
Yeah.
What are you seeing?
I mean, it's big moves. What do you mean? I mean,
big moves.
Yeah.
Big moves, no doubt.
We got filled on our bond position. This move in oil has been good. I mean, you're getting a little bit of a pullback in the China stocks. That's nice. I mean, you got thought we were going to get bailed out on some of these quantum stocks, and
there's no bailing out.
There's no bailing out. It's every dip is just gobbled up. So, I mean, I got long Delta and Meta. That's a pain. A little bit of a reprieve in a Netflix here, but yeah, I mean, things are going crazy.
Things are going crazy. Get them while they're hot. E-mini S&Ps up 19. What do you think about a zero today? I personally would abstain. I'm a little bit nervous about the market.
We missed our AMD.
We're going to sell it.
I got to take control.
Got it. E-mini S&P, what do you think the expected move is?
For the rest of the day?
Yeah.
20 handles. 22.
Close enough. I would have thought it was over 20 also. It's 17.
17.
Yeah, that's a tough that's a tough one.
I mean, that puts you on the dot at 6,800.
That puts you at on the dot at 6,800. You are correct.
Unbelievable.
Interesting little market here. Let's take one more quick look at
gold. Sold off $5 or $10 here.
It's up 44.
No, I know from the
yeah. I get it, but it is up 44.
Yeah.
Crazy.
Bitcoin at highs. Intel's up $1 now.
Mm-hmm.
Intel just I mean, like, you can't miss it.
Can't keep anything down. Yes, yeah. Intel is up. Russell's up 19. Nasdaq's up 170 and change. It's about 80 handles off its highs. Kind of looking a little bit like Friday, a little bit where we open a little bit higher and see if we can hold on to
roll up some puts on this Shopify trade. Seen Shopify, it's up $30 in 2 days.
Shopify. I don't have a position there. Ivy rank of 41 is really good.
I've got the 125, 185 strangle. So it's slightly short delta.
125, 185.
It's like 30 short deltas. You roll up the puts here?
Yeah, I think you
got to.
$5 or $10.
You got to
okay. You roll up $10 to be quite honest with you.
135 or 140?
I do the 135s, but
got an Ivy rank of 41, so it's relatively high. Earnings coming middle of November.
Right. Hopefully you're out of this trade by then, but I think you have to manage the delta here. You got to be mechanical.
Yeah, I'm gonna roll up to the 140s. Picks up about 10 deltas, which will my overall position is short about 30 deltas.
That's correct.
So that puts us at only 20 deltas short, which is about 30%, reducing my.
The only problem with Shop is, it has decent disseminated markets, 10, 15, 20 cents wide, but you really have to be aggressive with your pricing.
Yeah. And I mean, it doesn't help the stock's up $6 too.
It doesn't help the stock's up $6. Even the S&P is up 17.
All right, there we go. 231.
Good job out of you.
Yes. Oh, we might get our AMD. Do we sell it now?
Sure.
At 445. I had it in at 450. Let's see if all right, I got 440.
440. You sold the 11-day option.
250 call. This is my attempt at
scalping options, which we just talked about on Confirm and Send just a moment ago. Look at you supporting.
Yes.
Supporting
smaller than being short the shares. I mean.
Well, smaller than being short the shares. I mean, the delta's 30, so you've got 30 short deltas, 31, instead of 100 short deltas if you were looking at the stock.
Yeah.
You're dead.
I'm dead.
Just kidding.
Already? We're only 7 minutes in. I'm dead already.
No. I get it. With the Ivy rank so high, I love the play. I might have gone with a spread, which I mentioned to you, like a call spread, or even doing something that had a 30 delta call, 15 delta put.
Yeah.
If we go lower, the puts aren't going to move. I mean, volatility will contract. That's my thinking on the overall spread.
Yeah.
You're going to get your face ripped off. We're going to take a quick 90-second break. I'm just kidding. You know that. Nothing says Monday like this, man. That's right. Dr. Jim. It all comes down to size, by the way.
Of course. And that the whole point here is that it's a small, this trade, if AMD goes up $25 more today, it's going to stink. For my position, but I'm going to be able to hold it. I can roll it out in time. I can sell the puts. You can take a 1 day shot here.
Absolutely.
There's no problem.
And there's a lot. And listen, I made my living doing that for 25 years. 100% agree with you.
Yeah.
We're gonna take
it's come in. 15,
but I was good at what I did.
It came in 15 cents already, so you stink anyway.
You're a genius. I told you were going to make money on that. We're going to take a quick 90-second break and come back.
I'll put an order in at $3. We'll take $150. I'll take you out to lunch today.
We're going to take a quick 90-second break. That'll be the first time. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We got the Skinny on Options, abstract applications with Dr. Jim, Dow down 11. Nothing says Monday like this, man. We'll be back in 90 seconds with Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nicky, we are back, son, and nothing says Monday like this, man. The Skin and Options Abstract Application, Dr. Jim, Mr. Monday himself. How are you, my friend?
Man, what's going on? You know what's funny? Oh, we even got the, look at that. Okay, all right.
We're supporting you here.
That's the first time in 10 years. That's the first time in 10 years.
And it wasn't.
That applaud was actually for Nick scalping $1 on some options in AMD. Actually.
Oh, I saw him. I saw that.
Yeah.
I mean, look at this guy, man. Like, look at this guy. I mean, he's in the seat. He's scalping AMD options. He's buying lunch. I mean, Tom never bought lunch, but he's moving in the right direction. Like he's 100% moving in the right direction.
Jim, I'm trying with him. He's still very risk averse. We're working on it. We're working on it. He's done this for 40 some odd years, and he's scared of a little short call.
No, I heard him. He wanted you to spread that off. Like he wanted you to spread that off.
He
and you
said
were
it
like,
multiple
I'm not gonna
times. He said it multiple times. I was like, no. This we're gonna scalp this one. It's okay.
No, that's too funny.
So
that's
proud
too
of you.
funny, man.
Thank you.
So, you guys obviously saw my Colts yesterday, right? I mean, they put up like 45, 50.
What about your Lions, man? The Lions put a smackdown too.
Forget about the Lions. It's all about Daniel Jones. It's been all about Daniel Jones from the beginning. Like, Nick, this goes way back before you were on the morning show. Like, you don't understand, dude. Like, I bleed blue and white. Like, Like, it's all about Daniel Jones. It's all about Marshall Faulk. It's all about Reggie Wayne. Like this is my squad, dude.
This is your jam.
So,
yeah, I mean,
this is my jam.
It's good. You wake up a winner every single day with all your teams.
I'll tell you what, man, it feels
He's
good.
a winner,
It
all right.
feels good.
That's it. I mean, Dr. Jim, he's never had a losing day. Never.
No. It's just pure optimism, man. It's awesome.
I'll
tell you what, though. Actually, I did it. So I actually did have a losing day yesterday. So I can't believe this, but I finally did it. And I got to be honest, this might sound pretty un-American to say, but we went to Costco yesterday as a family. And for the first time ever, I had the Costco hot dog, the little hot dog Coke $1.50 deal.
Yeah.
Man, it was very underwhelming. Have you guys had one of these?
See, I agree with you. I don't think
because they're not kosher. They're not kosher hot dogs. That's why.
I don't know what they are, man, but it was not that great.
the
And I was
size
like,
is
man,
there though.
the size is absolutely there.
Size is
Yeah.
definitely there. I mean, it's
Yeah.
a lot of hot dog for $1.50.
I agree. But this is one of those situations where it's like, man, they're pushing that Walmart model where it's just all about volume with no thought to quality whatsoever. And it's like, I don't know, man. I think they need to balance it out a little bit more.
Did you get the chicken bake though too? The chicken bake I hear is great as well.
Chicken bake? Is it in the same deli area?
Yeah, you get it. It's like a.
I haven't had.
You've never had the chicken bake?
No.
Oh no, I hear the.
I've had the pot roast, believe it or not. It's not
Really?
bad. Yeah.
The pizza's pizza's not
horrible.
good. Yeah, but the chicken bake, it's just like some sort of ranch chicken-y thing in the middle.
I don't like ranch. That's why I never had it.
I don't know if it's ranch. It might not be ranch, but it's something.
Yeah.
The chicken bake. Next time, if you didn't like the hot
next
dog,
time.
maybe try the chicken bake.
Yeah.
I mean, the chocolate chip cookies looked pretty good, though. I got to be honest.
Those
Those
are
guys
great.
were calling my name. Like, those guys were right there, and also a very high volume play. And so, yeah, maybe I'll go chocolate chip cookie next time, but we'll see.
There's nothing more American than a lunch at Costco. You get
No, no, not at all.
foot-long hot dog, a foot diameter cookie, you get a chicken bake, some pizza, a mega-sized Coke. It's perfect.
Perfect.
It's exactly what you...
What could go wrong?
Yeah.
No, it's good stuff. You guys got your Cubs today, right? How are you guys feeling about game 2?
I mean, we're playing the best team in baseball, which I thought was your favorite team, Milwaukee.
No, never been a Brewers fan. But tune in next week. That could change. That could change.
Tune in next week. That could change.
Next Monday, if they win the series, Brewers fan.
I mean, right now I'm on the Blue Jays train, obviously, but I'm willing to get off. Like, I'm not married to it. Like, it's like, hey, it's whatever. And so all right. Hey, you guys want to do some finance today?
Sure.
Man, let's do it. So, John, hit us up here on the intro slide, or the title slide, I should say. Strategically using buying power. So, gentlemen, buying power, capital, right? This is the lifeblood. This is our oxygen. So we need to think about how can we strategically use buying power. And today I'm going to give everybody a very, very practical way to more strategically use their buying power. So you guys ready to go?
Sure.
Let's do it.
Man, let's go. All right, John, hit us on the intro slide. So as active traders, we're always looking to take advantage of opportunities with new positions or our entire portfolios. As a result, we need to be thoughtful and strategic with our buying power so that we can make best use of the capital that we have to allocate. Therefore, a product like futures options can really stretch any trader's available capital, especially those traders working with smaller accounts. So, man, this is a special shout out to a smaller account out there. Like, I'm talking like 20,000, 25,000, 20 to 30, let's say. Futures options. So how often do you guys mix in futures options into your daily trading?
A ton. We just sold puts in bond futures this morning. I mean, the leverage that you get there and just sizing it down is important.
So when I'm talking to a new trader, I actually steer them away from futures options
to start.
Because some of it's not $100 per point. Nick brought the biggest point out there, which is the buying power can change because of span margining. It looks so advantageous when you first put the trade on that a lot of new traders will lose discipline with their size. As you continue to trade and you get more seasoned with how big small really is, you can then go to futures options and have it as a decent size part of your portfolio, which the leverage is absolutely amazing. Yeah. You've got to harness that leverage.
So I think that's a great point, Tony. I'm glad you brought that up. This is not for a brand new trader. It's not. Let's just be very open about that. If you just got started, this is absolutely going to be something you want to file away for future use. Like I would not come right out of the gates slanging bond puts or slanging MES strangles or whatever, because you're right. Like you're 100% right. Like, I mean, the span margining, how the margin can increase, you can very easily over leverage because the leverage is so attractive on the front end. But once you get to a certain point in terms of market exposure, experience level, you're comfortable with the products, the buying power relief that you're able to tap into, it's second to none. It's second to none. And we're going to work through some examples today.
Yeah. It's almost unheard of how good it could be.
Yeah. 1,000,000%. All right. So John, go ahead and get us on the next slide. So let's talk about how we might use futures options. Now, you guys did bond futures options this morning. You could certainly do that. I mean, you could do oil. You could do a lot of other things, but we're going to focus strictly on the indexes this morning because this is going to be what most traders are trading to begin with. Doing bond futures options and even oil futures options. I mean, that's probably further down the road for most traders.
Sure.
And so with capital efficiency, or when capital efficiency is high priority, both outright futures and futures options should be taken into consideration. So whether it be futures or futures options, I think it's really helpful to kind of understand what you're trying to accomplish when you might use a futures product. Again, whether it's the outright or it's the option, in place of what you would use otherwise. So for example, if I want to do SPY shares or I want to do QQQ shares, instead of doing SPY, I could do ES or I could do MES. Instead of doing QQQ, I could do NQ or I could do MNQ. That's going to give me a tremendous amount of buying power relief. I'm going to more strategically utilize my capital. Again, not something to do on day number 1, not something to do on day number 100 probably, but something down the road, absolutely, this is something to file away. From an option standpoint, it's the same type of thing, right? I've got ES, I've got NQ, I've got MES, I've got MNQ. If I want to do equity options, so SPY options or QQQ options, that's one thing, and the buying power can be pretty advantageous, in something like a margin account. But instead of doing SPY options, I could do ES options or MES options. Instead of doing QQQ options, I could do NQ options or MNQ options. And so I just kind of wanted to pave the way forward this morning with what we're going to be talking about in terms of, the different indexes. And also, one other thing, and we're actually going to take a look at this in a second. If anybody out there is using an IRA, the buying power relief that you're able to get on an index futures options position is phenomenal. And you can't get it on equity options. You have to be cash secured. You have to be all these things. You don't have to do that with index futures options in an IRA. It's unbelievable.
That's right. And a lot of firms don't allow you to trade futures options in an IRA. You can do that at Tasty Trade. A little plug there for our friends on the
That's right. That's right.
And I know you'll get to kind of the leverage aspect, but it's important to understand that just because you have that you freed up that capital doesn't mean that capital needs to get allocated somewhere else. The leveraging aspect of it, you're getting a much smaller position being long an E-mini contract versus 500 shares of SPY, which is, the same notional value. It doesn't mean that you have to go take all that leverage that you have and then dump it into some other risky position. It just gives you a little bit of flexibility there to where you can put some additional positions on, but it doesn't have to be all in. You get that question all the time of okay, so I can move my shares to futures, why not put that money into, new positions in Nvidia and Tesla and all this other stuff? You got it. Leverage is a double-edged sword of good and bad. You don't have to get crazy on both directions, in both sides.
Well said.
So if I'm hearing you right, it sounds like what you just said is for every gimme, there's a gotcha. Am I hearing you right?
That is 100% correct, Jim.
That's how I heard it.
Somebody that is, he is a much smarter person than I came up with that. That's
I don't know who it was, but it's a catchy little jingle. I'll give him that 100%.
That's for sure.
No, you're right. And to your point, like here's another thing too. Like, I mean, you could, if you're using futures options, whatever, you're getting all these capital savings, man, you could just take the extra capital and buy some SCOV. You could just take the extra capital and, do some BIL. You don't even have to do anything that has really any risk to it. But because you have the capital savings, it just frees you up and gives you a lot more flexibility.
Right. Those are two dividend paying products.
Yeah, those are
treasuries.
Yeah,
treasuries.
Yeah, just treasury products, or you could do pairs trades. I mean, there's a lot of things you could do to actually take risk off. You don't necessarily have to go with more risk. That's 100% right.
Yes.
So John, let's go to the next slide. So I want to break down side by side. This is based off of last night's prices. So it's obviously different this morning. The market's pretty strong. I mean, everything is up. Market's up. Metals are up. Everything is up. And so the markets, or at least they were before I got on the show. I don't know if they still are. But
no, they still are, but not for long.
Yeah, not for long. You think?
Yeah, right. Yeah, of course. Yeah, we've only been saying that now for it's been about 3-4 years, I think.
And so, 10 years. 10 years.
yeah.
Why stop there,
yeah.
Dr. Jim?
Yeah, there you go. And so SPY, MES, margin, and then MES in an IRA. So here's how it all breaks down. So the price of SPY was $669 last night. Let's say I was looking at a 30 delta put. Last night it would have been the 652 strike. The beta weighted delta of that put is 30, of course, because it's SPY and everything is beta weighted to the SPY. The percent out of the money, I just wanted to kind of capture how far away am I from where the stock is, and is it different depending on what product I use? And we're going to see it's pretty close to being the same, but you might get a little bit of additional buffer when you use futures options. The credit that I'm going to collect on an SPY 30 delta put is $745, so $7.45. But my buying power is $11,000, right? Now, this is, of course, in a margin account. In an IRA, I would be cash secured. So that is still a very, very advantageous position from a capital usage standpoint. So let's make sure that we put that out there very clearly. This is not a poor use of capital. Excuse me. This is not a poor use of capital. This is a very, very good use of capital, right? You're only putting up approximately 20% of the notional value of the position. That's pretty good. Everybody would consider that to be a pretty good use of capital. But look at what happens when you go to MES. So in a margin account, MES last night was 67.63. I'm looking at the same delta put to try to make it apples to apples. 65.75. The beta weighted delta is only about 15 because an MES contract is only for 50 shares of SPY, whereas SPY in equity option is obviously for 100 shares of SPY. So obviously you're getting smaller. So you are actually getting smaller on a one-for-one basis. So that's really interesting when you think about what we try to do with sizing and trading small and occurrences and things like that. The out-of-the-money percentage is you're a little further away at 2.9%. The credit collected is a little bit more than half, which, again, that makes sense because it's a smaller position. But look at the buying power relief, which, again, we all kind of alluded to this a couple of minutes ago, but it's incredible. It's $1,440. Guys, it's 1/10. It's 1/10 of what you would have to put up for an SPY option. And again, you've actually shrunk your size down even smaller. So if you have the discipline, like if you can stick with the program and not necessarily think, oh, wow, I'm saving, 90% of the buying power. Let me do 5 of these. Let me do 7 of these. Like that's where you're going to get into trouble, obviously. And you're clearly kind of, you're doing away with so many of the advantages at that point.
But it's
and
usually,
then lastly, let me just go through the IRA really quick. Let me go through the IRA really quick. So the IRA, because this is the coup de grace, in my opinion. Same price, same 30 delta put, same beta weighted delta, same percentage out of the money, same credit. Look at the buying power. It's only $28.75. Again, in an IRA, anybody in an IRA already knows this. You're cash secured. Like you're cash secured on any puts you want to sell, but not in the futures options for MES, which is amazing. So go ahead there, Nick.
Oh, well, I was gonna say, it's going 5 or 6 or 7 of the MES options versus SPY is conservative versus what most people look at this and say. They say, well, I can do 10 of them or 11 of them to be equal in buying power. I do 1 SPY. Why wouldn't I do 11 or 10 MES? And that's where you get into problems. And with futures, the other thing with span margin is that there's dynamics to what this buying power is. And this buying power is going to change significantly. Volatility is a huge part of that equation. And when you're selling downside and you see a downside move, you typically have volatility expand. And these 10 or 11 contracts that started as the same amount of buying power become 5 or 6 or 7x what that buying power is on the SPY option. So as you would say, there's the gimme and the gotcha.
That's correct. Yeah. I mean, the margin is going to expand more rapidly with futures options than it would with equity options. Yeah. Typically, I mean, I don't know. Tony, I mean, have you ever seen it expand more than 5 to 6x? I mean, I think that's about the ceiling that you would see on futures option expansion.
That's about it.
Yeah.
Yes,
I mean, that'd be a huge expansion. I think normally
expansion. I can't remember the last time it even did that.
Yeah.
Exactly. I think 2 to 3x is probably more common.
Yeah.
Even in a pretty.
I think in nat gas, one time.
That was bad. Which is fine. 2 or 3x, you should be able to hold that, but you're not going to be able to hold that if you're in the 25K account and you're notionally matching these buying powers. That's what I'm kind of alluding to, is that you can't just you got to keep some of that capital on the sidelines. You can't just be matching them.
Yep. That's right. No, that's right. All right, John, go to the next slide. So let's look at MNQ. Let's look at the NASDAQ. We're going to see the same type of story, right? Same type of thing. QQQ versus MNQ. Last night, the price of QQQ was 603. The 30 delta put was 582. The beta weighted delta was a little bit higher because the NASDAQ has a slightly higher beta than 1. So the beta weighted delta of a 30 delta put was about 32. The percentage out of the money, 3.5%. You pick up $864 of credit. Your buying power is about 10 grand. But then you go to an MNQ and a margin account, and what you see is it's a little bit smaller than it would be with a QQQ position. So you do get some sizing relief there. You get a little bit less credit, but not quite as a dramatic drop off as what we saw with SPY versus MES. And again, the buying power is only $1,900. So again, you're at 1/5 of what it would be in a margin account. And then with an IRA account, you're about double that. So about $4,100, which still, I mean, I know so many traders. I mean, I don't know. Do you guys communicate with a lot of traders that are in IRAs? I mean, I do.
Oh, yeah.
Yeah. Viewers for sure who write
second accounts, they have one of each. Yeah, totally.
Yeah, exactly. If you're in an IRA, again, if you're brand new, this is not for you. This is a bookmark it, save it, and check it out 6 months down the road. Check it out 12 months down the road. But if you've been trading for a while and you have some level of experience and comfort with these products, but futures options is new to you, and you have an IRA and you're active in that IRA, this is something that I strongly would encourage you to study further. You don't have to make your first trade today. You don't have to make your first trade tomorrow. But this is something that I would definitely file away. Like, all right, let me look into this a little bit more, because if you want index exposure and you want to do it in a very capital efficient way, man, in an IRA, you just cannot beat MES and MNQ. Or, of course, if you have a much larger account, ES and NQ.
For sure.
Good job.
Yeah.
And so, all right, so next slide. So, John, let's wrap all this up. Let's tie it off with a bow. Man, Autumn was on it yesterday at Costco. She bought the wrapping paper. She bought the bows. Guys, it's the first week of October.
They do have good wrapping paper. You get a good value for wrapping paper. Did you pick up the chicken too, Jim?
The chicken? No, man.
You didn't pick up the rotisserie chicken?
No, I could. Oh, that's so funny. I couldn't. So this is so funny.
What do you mean you couldn't?
No, I'm gonna tell you. So we're back. We're back by the deli section, right? And we're talking about what we're gonna do for dinner, blah 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 blah. I'm like, hey, let's just get a rotisserie chicken, right? Because we're here at Costco, they're really good, whatever. And we don't make it out there that often, a couple times a month, whatever. Autumn says, all right. She's like, go check it out, but only if it's organic.
Oh,
and
no
I was
chance.
Like, oh, I know this is not organic.
No.
I was like, no. So I went back there. Well, I mean, it's right there on the packaging. And I'm playing the long game, Tony.
It's the price.
I'm not
for
just.
$5.
I can't be burning through wives like you do. I'm playing the long game on this one. I can't just be, repurposing them every, 6-7 years.
Well played.
Like I'm in this to the end.
Hey,
remember, revenge the dish served chilled and slow.
Yeah.
Remember that.
The first one gets half and the house.
I'm just saying. It's like, I got to think about this, man.
House. Yes.
I'm just saying. So anyway, no rotisserie. No, but she did get some wrapping paper, and she was very happy about that. So anyway, with futures options, you are collecting smaller credits, but you also have smaller size products and the same distance out of the money at much less buying power and margin, and even significantly better capital efficiency in an IRA, especially relative to being cash secured. So again, I mean, sometimes on these Monday mornings, we go pretty abstract. I mean, last week with heteroscedasticity, that was pretty abstract. Other times, I like to be super practical. And so this morning is very much something that, again, if you've been trading for a while, you know, you could put this into action, I mean, today, if you've got the experience.
You did awesome. I don't know what else to say, Dr. Jim.
Good.
Great job out of you. You got
All I'm saying is I got a round of applause when I came in. I got a you did awesome at the end. Man, it's never happened in 10 years. Like,
we could
this is
bring
so
you
new
out
for
with
me.
an applause too. Can we get an applause for that segment, please? There we go.
I mean, I got to get him a few takeaways, but I'll take multiple applauses.
Yeah.
Here we go. Capital allocation is always a top priority for every active trader looking to maximize their portfolios, which is why paying close attention to the buying power required to hold different products is critically important, and thus a product like futures options is quite valuable for traders in both margin accounts and IRAs.
I don't know what to say. I'm speechless. I mean, this was so good.
I thought it was good too.
Well, thank you both. Thank you.
You're welcome, Dr. Jim. I'm still amazed that you didn't pick up the chicken, but whatever. We're gonna take a quick.
Next time they'll be there.
We'll save this for next week. But no, I got a chicken guy now in St. Pete. Like I got a guy. I'm getting stuff, Tony. I'm getting stuff that was alive 45 minutes ago.
Wow.
Like I'm getting stuff. He hands me the bag. It's still warm.
What do they want?
Like
run
that's
you a
my
pound?
chicken guy.
What is it a pound?
You don't want to know, man. You don't want to know.
It's high?
Oh, are you kidding me? It's $14 a pound.
Oh my God. Options crash course. Tell me a little bit about that, Dr. Jim. Where are you going to be?
Yeah. So this is
the
going to be
magic stick.
The magic stick next Sunday. We're going to be in Detroit. I'm super pumped. If we can make our way through Tony's 5th grade humor. Like I'm super pumped about next Sunday. Like it's gonna be amazing. So I mean, again, if you're in the Detroit area, if you're in the Chicago area, if you're in the Milwaukee area, like make it out to the show. It's totally free, and we're gonna do a crash course live. I've got a fun little quiz. I think I'm gonna weave into the actual presentation. Ooh. And so that's going to be fun. We're going to make it interactive. And I think we're going to have like snacks and drinks and stuff. And so it'll be good, man.
Awesome. Good job out of you, Dr. Jim. You're not going to want to miss that. Detroit, October 19th.
Yes.
Dr. Jim with slides on in October. Nothing better. We're going to take a quick in Detroit. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next?
Market measure.
That's right. We'll be back in 90 seconds. A good one, too. We'll be back in 90 seconds. A lot of takeaways on this next one, just like Dr. Jim's segment. We'll be back in 90 seconds with Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son. Before we get to this market measure, let's take a look at this market. The Dow is down just about 300 points here. SHW, Sherwin-Williams, I don't think anybody traded, but Home Depot down 7, Goldman Sachs down 5, McDonald's down 4, Caterpillar down 4, bigger names like NVIDIA down 250 or so, JP Morgan down around 250 or so, Amazon down $1. It was just down a little bit more a moment ago. IBM is up only small. But those are the Dow stocks that we're looking at here. Right now, you've got E-mini S&Ps up 10 handles. NASDAQ up 168 and the Russell up 9. So you got a tale of a couple of different tapes here. Volatility was just up 10 cents. It's now back down 5 cents. It looks like canceled crash. It really looked like we were going to get some movement to the downside with volatility expanding ever so slightly from highs. You know, you're looking at that, like what's happening. You get bonds going a little bit lower. They've actually rallied back a little bit here. So maybe you got canceled crash and everything is smooth sailing. Bitcoin, 126,200.
Yeah, did we get new highs on spot? I think we did.
I believe you did, for sure.
Just under it. But yeah, I mean, it's having a day too.
Cray.
It's a choppy market. I mean, you mentioned NVIDIA down. AMD has sold off from the higher end of where it's trading. MU as well. Some of the frothier stuff, like, we had that position in Oklo, which I bought in the risk on the downside part of that double ratio. So we did the bat wings. We went really wide on the call spread. on the call ratio versus the put ratio. The put ratio is only 10 points wide. I bought that put just to define the risk on the downside and give yourself a little butterfly, basically risk-free shot on the downside. But that stock is going nuts. On the flip side of that, some of the other ones, like I've been looking at APP. That stock is down to 650. It's gone 750 to 650, or I don't know if it got up to 745 was the high. But there's a little bit of a rotation between the high-flying names.
Oh, yeah. I mean, PLTR up another $7 today. PLTR traded down to about $178 only. It's $180 right now. It closed at 173. That BMNR is up big. You've got some up $4 or $5. You got some stocks here that are a rotation.
Rotation, but I think the point I was trying to make here was that the bid in volatility is not based on what the indices are doing, because the indices have, and for the last 2 weeks, have been basically flat. But you have these moves in single name equities, 3%, 4%, 5%, in both directions.
Yes.
Even on a day-to-day basis, some of these stocks are going up 5% to down 5%. And your realized volatility, your market volatility is coming from single name equities and not from the indices. So if you've been, even if you've been long the indices, you haven't made much. It's been you wake up and you're up, but it's not like the stuff that's moving underneath the surface. It's been a traders
expected
market.
Move in E-mini S&Ps is over 15.5. It was 17 and change early this morning, about 45 minutes ago. So zero-day traders probably working ever so slightly here this morning, not as much as you would expect. Let's see what volatility does now after 9:15. If it collapses a little bit here, /VX unchanged exactly.
Very good.
You ready to go to our market measure sponsored by the SIBO?
Yes, very ready. It's a good one. Gad worked hard on this one. This is an interesting piece. We get this question all the time of trend trading or, fading the gap, going with the gap. We're going to kind of put context.
Fill in the gap.
Fill in the gap. There's lots of things you can do with the gap. So do overnight gaps predict the days or the day ahead, I should say. We're going to be taking a look at this in relation to SPY, because SPY has the gaps, futures trade. So there's not, it's rare that you have a big gap in the futures. It has to be on kind of an over the weekend, a move that happens over the weekend, not really during the week. So getting into the first slide here. So, you know that feeling, of course. You wake up, you check the platform, you see E-minis are up 20. You think we're going to be up 40 again. We're going to take context around these moves, around either buying into those big moves lower, selling into those big move higher, or kind of following the trend. So the overnight moves, we're going to be looking at how to trade those. So we dug into SPY. We looked at 2017 through today, and then we also looked at 2025 specifically, and how the market behaves based on moves in SPY, and we bucketed them into specific size moves, and then we are going to look at the IV rank of SPY at that time to see if there's an indication there. So the goal here is to see if the gaps keep running, or if there's a buy the room or sell the news type event. We're going to kind of put some context to that in relation to 2017 to now, as well as just in 2025. So you got two data sets here that we're going to look at. What do you think is going to be more prevalent? Is it gap higher, continue higher, or gap higher, go lower?
I have to pick one.
You don't have to. You don't have to do
anything. Is it a trick question?
No, it's not a trick question. No.
I would say just because we're at market highs, that gapping higher and going higher would be the one that I would pick at this moment. If we were in a different place in time, my answer would be completely different.
Just like anything in trend trading, you have to isolate something more specific to build a case for it, right? So Not all of these are the same. A 0.5%, a 1%, a 1.5%, a 2 or greater percent move in either direction. They're all different data sets. You can't bucket them all into one, and that's why it's so hard. That all these trend type things are so hard to quantify.
Yep.
So let's get to the study here. So we're looking at SPY 2017 to 2025. We bucketed the data sets based on the size of the gap in the overnight move. And we say gap, but the futures are trading. So there's no SPY has to adjust to whatever the overnight move is in the ES futures. It's not like it didn't trade. It trades, but via the futures. And so we're going to look at all the size of these gaps, and then we're going to look at the implied volatility. So we're talking about low, and this is in the context of IV rank, because SPY volatility will never be zero, or at least I hope not. That would be a weird situation.
Horrible way to make a living.
Yeah, we've seen, what was the lowest when the VIX was like
8-9.
That was the VIX. Yeah, 30-day implied volatility was like 8 or 9.
Yeah, it's horrible.
Yeah, and then we had
question life's decisions.
Fall apocalypse.
I could have been a dentist.
Yeah,
it's horrible.
That's true. It was easy though. You just buy them, and then they go up 5 points every single day.
That was the move. $5.
It was 5 points.
That was the move, and even the S&P top to bottom.
Remember, you used to get like a 10-cent tick in the VIX, and that would be high implied volatility.
High implied volatility.
We got
them.
Look at this fall.
Got right where we want.
This is huge. So we're going to bucket this into IVR. We're going to talk about low, 0 to 15, mid being 15 to 30, high being 30 to 60, and then extreme, we're going to say 60 plus. So we computed the following according to the overnight move in the IV buckets. Calculating the overnight gap, we used, we're going to be looking at the next day move after the open. So today's gap was like, 1/3%. We're looking at what that would equate to the move tomorrow. We're going to quantify the probabilities of closing up the next day, and then we compare the long-term and short-term results. So we're going to look at the 8-year study versus what we've experienced thus far this year. Any questions?
No questions.
Okay, great.
No questions, but I like the new bubbles.
I know, these are stepping the game up. We got sound effects. We got,
bubbles.
Great visuals now. So here's just like, there we go. There we go. So here's how we quantified the gap. So we basically just took at today's open minus yesterday's close. So that's your move. And we divide that by yesterday's close. That'll get you your percent. I mean, this is just a percentage of the indices. It's pretty self-explanatory. And then we bucketed all those. The second step was tracking what happened after the open. So we're looking at the move during the session, and then we're going to look at the next day as well. Pretty self-explanatory. And then for the implied volatility, we did it as an IV regime. So we talk about low, medium, high, and then kind of the extreme volatility of 60 plus IV ranks in SPY. And then we looked at the next day returns as well as the probabilities of them being up after such a move.
Okey-dokey.
So the next slide here. So these tables track the SPY's behavior after overnight gaps, and we're looking at 2017 to 2025, split by volatility levels. The left shows the average next day return, and then the right shows the odds of closing higher. So we're looking at both returns and just the overall the odds of the market being higher the next day after all of these gaps, downside and upside gaps. Many of the NAN, do you know what NAN stands for? Do you need to phone a friend?
Can I phone a friend?
Yeah. It's not a number. So those I know. So you get it on like a calculator if you
I never would have gotten that.
Divide by 0. So it's those entries are just there is no data set for those.
I was actually going with not a natural was what I was going to.
You're kind of close.
Yeah.
Kind of close.
I was trying to figure out how that made sense.
And basically you get some of those results because you're not there's only so many times where IV rank was above 60 on SPY. and you only get a handful of those, and we haven't had those. So you can see here, when you're looking at like our downside 2% gaps, they mostly happen when volatility is high. That's not a shock. And on the upside, again, you're seeing that when volatility is high because you're getting these bigger moves. Most of the time, you're inside that 2% move to either direction, which is what is projected in the VIX from where we are now. So like that is normal, so to speak. I mean, obviously in the moment, it feels like it's
not as normal.
And not as normal. You get the 2% down move and it feels, like things are crashing. But you can see like a lot of these continue, right? So you have the downside move. A lot of times you see the next day return is also to the downside when you're in that higher volatility regime. When you're in the lower vol regime, it's a lot of times it's a buy the dip event or at least a non-event for the next day. You can see both the next day moves when you have these inside moves. I'm ignoring the tails because those tails are much rarer occurrences.
Sure.
We're talking about when volatility is
natural.
Yeah, which is natural. When you're talking about when volatility is low, it usually gets bought up. Those downside moves. On the upside, it's a little bit lesser of a negative correlation there. It's kind of a little bit spotty there. You can see on the will the next day close higher? You have a high, the trend does continue when you have these big moves to the upside the next day. You have a 50 or 44% chance of it moving up the next day. But that's in high, when you have high implied volatility, it's gonna be much more wide of a distribution. When you have low implied volatility, it tends to move, it tends to be a buy the dip, is what it's saying.
Mm-hmm. Buy the dip. Well, we're at all-time highs. Makes sense.
Yes. But this was 2017 to 2025. So according to the research, the golden zone is in that moderate volatility range, which is what we talk about. I mean, when we want volatility to be high, but we want it to be moving, up and down, right? You want vol to come up, comes
Sure.
down. We want to be in that.
Nirvana. That's the same thing we want with price in the stocks too. I mean, they can continue higher, but we want an up and down kind of thing.
Up and down, and you want volatility to change. When you get super high implied volatility, you have these big moves. So 1% to 2% gaps up continue 70% of the time with positive returns, and down gaps often bounce back. It's not a shock when volatility is not getting bid. You're usually seeing a lift in markets. It's intuitive. This is where gap trading still works. While in calm markets, small gaps generally continue, but gaps up 0 to 2% average small gains and close higher around 55% of the time. So again, it's kind of spotty when you're in super low implied volatility and super high implied volatility. The middle range is kind of what we want. So high volatility, when we talk about IV 30 to 60, is a reversal machine. So almost every gap type shows negative expected returns. And the trap here is that chasing those big moves when you have higher implied volatility, that's kind of that's where you get caught, is when you have big moves to either direction and really high implied volatility, you have a propensity to see two-sided action that should be intuitive as well. High volatility tells you that things are going to swing around. And so, the big thing here is to check for implied volatility. You want to see what's happening with implied volatility on these moves. If you have super high implied volatility, maybe you fade that move. If you have lower implied volatility, maybe it continues in that direction in the last 8 years. So getting on to the next slide here. So now we're going to look at 2025 specifically. So this year's data tells an interesting story compared to the last 8-year average. There's a lot of non-results here because we haven't really had low implied volatility for most this year. You had April, which was a huge pop in volatility. And then volatility has stayed relatively bid throughout the year, just despite the last month or so where it really got crushed here. So we've been concentrated in that moderate to high implied volatility regime with some surprising shifts in the behavior. So a lot of these, pretty much all the moves have been kind of a fade, right? So when you look at these moves, like moderate, when you look at the higher implied volatility in terms of closing the next day higher, you've really kind of continued with the trends. So you have the 2% down move or the 1% down move, the 1% down move being kind of the buy the dip, the 1% up move or the 1% to 2% up moves have been in the higher implied volatility have really been a sell event. Like it's kind of been selling into those big moves higher, buying into like kind of the moderate moves lower.
And you have volatility higher, options are higher. It makes a win-win situation. But few and far in between with this market that we've had. Which, by the way, cancel crash here is even the S&Ps are up.
We're up 12. It's moderate volatility.
Moderate volatility. You're right. You're right.
Next slide here, getting to slide 7 here. So moderate volatility, we're talking about the 15 to 30 range, remains tradable but selective. 1 to 2% gap up, still have a high win rate. So you're talking about 71%. And the down gaps bounce aggressively. And this is because of the moderate to higher implied volatility. When it's lower implied volatility, which we haven't really had this year, it's a different story. So high volatility has become extremely bipolar. Look at this, bipolar. I like that. Small down gaps are producing massive bounces. I mean, that's kind of where the buy the dip comes in, averaging a plus 3.87% return with 67% closing higher. And I take that with a grain of salt because we're looking at just 1 year, but a lot of the volatility that we've seen has been very, very headline news driven. It's been less about kind of the underlying stocks themselves. To talk about a AMD type move where it's up $60, those have been kind of rare generally. But any gap higher in high volatility has been kind of a fading move. So if you have big moves with big implied volatility, you typically take the other side. That has kind of been the what has worked this year. So in moderate IV, stick with the classics. You buy small dips, and then you play for kind of the continuation in these bigger moves if volatility remains low.
Good job out of them. But you got more to go with a takeaway here.
Yeah, one more slide for the takeaways. So overnight gaps matter, but the volatility changes everything. So you have to look at implied volatility. You can't just expect things to continue just because they have that big move. Moderate volatility is still the best zone. And we talk about this all the time of like, you don't want super high implied volatility, even when you're trading in like single name equities, like your Oklos and your Rigettis, those, they look really juicy, but there's a lot of risk in those. And so you don't want those super, super high implied volatilities. And if you are trading those, you stay small. You don't want the super low stuff because you're not getting paid to take the risk. You want it somewhere in the middle. And that's what all of our studies come down to. So the bottom line is that we're always looking at implied volatility. A big move in low volatility acts nothing like a big move in high volatility. When you have high volatility, you should expect wider distributions, which is what we see in the data here.
Good job out of you. Good job out of the team. Nice work there. We're going to take a quick 90-second break as even the S&Ps are up 13 and change. NASDAQ is up 139, both off of their highs. NASDAQ off of their highs by about 100 handles. Even the S&Ps off of their highs by about 20 handles. Russell up 18, just a skosh, $5 off of their highs. The Dow, which was down 300 when I quoted it, is no longer down 300, down 165. Cancel crash. Volatility in by 2 cents after being up 10 cents. Still a very tight range here. Mid-range for volatility. Bonds down 14. Nice scalp on the bonds there earlier.
Can we take those off?
Say again? No, you got to stick with it.
You got 40 some odd days. Yeah.
You did nice. Bitcoin.
You did nice.
No, you did nice.
No, you did nice.
Bitcoin 126,000 continues to rally, just about a 2% move. And look at Ethereum catching up there with almost a 3% move, $132 move in Ethereum. Oil up almost 70 cents, 69 cents. And gold up $64 and change. You got some big movers on the upside. This is the Dow Jones list. You can go down here and try to find whatever list that you want. I know Nikki likes the 100 list of the NASDAQ. I prefer the high option volume list. Pick your poison, but AMD up 43. Nice sale and calls in there when it was at or around its highs. Tesla up $12, MSTR up 10, Coin up around 10, OKLO up around 9. You can see here all of these stocks are up quite nicely here, leading the market a little bit higher, climbing the wall of worry. And speaking about the wall of worry, we've got Quentin coming in from the trade desk.
And Ryan from Tasty Crypto.
Crypto's big deal today. I'm glad we got Ryan. Timely for him. We'll take a quick 90-second break and come back. We got more Tasty Live after this.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tony, we're back.
That's right,
So
son.
bad.
We are back.
I don't know. Do you do a dad? Dad, we're back.
I know it's got to be hard for you.
Yeah, that's kind of weird. It's a different because you can call me by my name. I mean, I'm a little kerfuffled.
I know it's tough for you.
It's a weird one.
I'll bring us in and out from now on. I won't let you do that again. I just wanted to try it.
That's all right.
Nigga, we're back, my son, and you know what that means. We got this man Quentin.
Give us our little
I don't know if you're worthy. Yeah, you're worthy.
He's worthy.
He's worthy. You're
Thank
worthy.
you. I
You're
appreciate
worthy.
that.
You're worthy.
Thank you.
What's up?
Quentin, welcome from the trade desk. What's going on today?
Fellas, how's it getting? Matt, AMD is what's going on today. The talk of the town.
Yeah,
right?
AMD, definitely.
AMD, Micron, AMAT.
Yeah, and then Bitcoin. Got Brian coming on in a moment.
Don't
Bitcoin.
steal his thunder, all right?
I apologize.
That's my guy. That's my guy, okay?
I apologize. But yeah, we've got AMD. I've got some questions about, like, let's say you've got a position on an AMD. Let's say you had a strangle or iron condor. I guess if it's an iron condor, your risk is already defined.
Yeah.
And then, maybe you just close that if you're already, close to max loss. But let's say you've got a strangle on. How do you sort of manage that position? I mean, I've got my own thoughts, but I want to hear from you guys.
You do like the
You cry a lot.
Yeah.
Cry a lot.
The Matt Damon meme where he from Saving Private Ryan, where he's like at the end, like that sort of thing. I mean, the mechanical thing is you roll up the puts, and
it's not going to save you or help you or anything.
Or you close the
this
puts.
This is one where the stock wins.
Yeah.
I almost, if I could talk to myself in an intelligent way, I would probably say close the trade and do another trade in the same stock, similar to what Nick did, either sell a call, naked call, because you're going to have short delta, or a call spread, or what I was suggesting, maybe like, a closer at the money call and a further out of the money put. So that would be like almost like buying the guts and selling the wings again. But you'd have to do it as like just closing the trade and then opening another one. I think
which is eating the loss. I mean, in some regard.
I mean, you're realizing the loss that you already realized because you have it. We're not accountants here. The amount of money in your account is what you have.
Yeah, the Netflix shows.
Yeah,
Right.
no, I was.
Yeah, no.
You're moving to a new position. You're realizing that loss and you're reducing your risk moving forward. You're saying, you know what, this was I hit a tail, I caught it, and it ripped my face off, and now I'm going to manage the position and have a little bit less risk.
30% move in a stock, 25, 30%, whatever it is. You
in a mega cap stock, in a big stock. This isn't like some junky penny stock that move.
$100 billion stock. It's not playable.
I saw some situations today, like already this morning.
It stinks. It's so bad.
Yeah.
Yeah, with like some excessive risk, and then it's sort of just like, I mean, of course you could deposit if like you're negative, but the situation typically is to, unless you want to deposit, just close out the position. Because even if you roll it, like in terms of what we look at, like the buying power, you don't get that much buying power back in a situation like this.
Yes.
Even if you were staying small and mechanical, this was a tough one.
Yeah.
For sure.
Yeah, unfortunately.
You can't, those are not moves that you can manage through.
It's got to be such a hard conversation with the trader. You know what I mean?
Yeah, I would say in situations like this, a lot of the customers do understand. I mean, they sort of already know what they're getting themselves into.
Yes.
With the higher probability trades, there are those tails that you have to worry about. Mm-hmm. And so when that happens, customers are typically understanding of their positions, and they're sort of just like, emotions aside, like, what can I do?
Yeah.
Let's just get out of this. Like, it hurts, but how can I solve this? Because like the P&L issues are one thing, but then it's like the margin call issues that are another.
Yeah. It always comes down to size. I mean, that's always
yeah. Yeah. So I mean, if your size was in check, you shouldn't be in a margin call. I wouldn't think. Of course, things happen.
You just curse whoever put you in that trade. You can blame us. We sold puts though. We sold puts last week. We took this off. We didn't catch this move. It would have been nice to catch that.
I will say the calls are very expensive because I was looking at it today.
They are very expensive.
Very expensive calls
right
now. And what, you sold one at the open?
The 250s. He was scared.
Not bad.
He was like,
I'd be scared.
He was like, make it a spread or sell the puts. I'm like, no, Johnny, we're gonna take $100 out of this. We took about $100 in like 15 minutes.
Yeah, I thought.
And now I gotta take him out to lunch because He doesn't have
All right.
the money for lunch today because he doesn't have the cojones to sell
Hey,
the
good on
calls.
you. You know.
So I'm gonna take him
good
for
on
lunch.
you.
Taking care of your dad.
What do you want? Where do you want to go?
Home.
I want to do top 20 symbols really quick.
Sure.
Let's do
All
it.
right, top 20 symbols and their IVRs. We've got at number 1, AMD at 61%, of course. Number 2, Tesla, 30%. Meta, 49%. GLD, 33%. NVIDIA, 14%. Palantir, 38%. iBit, 45%. Amazon, 38%. Micron, 45%. Oklo, 41%. Intel, 61%. Robinhood, 34%. Apple, 22%. SMCI, 20%. MSTR, 15%. Oracle, 64%. SLV, 54%. Microsoft, 30%. SoFi, 35%. And ACHR at 45%, rounding out the list.
Yeah,
Anything surprise you? Typical?
I mean, the market's been all on, all off in
That's a good way of putting it.
in baskets, right? Like, so it's like everybody's off the quantum stocks today. And
Everybody get back in.
yeah, like it's all on, all off, day to day.
FOMO. The FOMO.
It's a FOMO,
Yeah.
and I talked about it a little bit. Like from an index level, it's not much movement today. Like if I told you in a vacuum, E-minis are up 13, you'd think it's a nothing day. Underneath the surface, you're seeing, baskets of stocks up 5%, offset by another basket that's down 5%.
Yes.
Where you're having these sort of single name tails.
Yeah.
And the indices themselves have gone kind of sideways.
Sideways, yeah.
This
the most
isn't
part.
something I've thought about much like until now. Do you think that's like a product of the low implied volatility environment, that it's more like single stock moves rather than the big indices?
Definitely.
Yeah.
Definitely something you're going to see because AMD going up 25 or 30% is not going to be in the volatility of the overall market.
Yeah.
And I think just generally over the last couple months, you've had kind of a move towards the stuff that is volatile.
Mm-hmm.
Like you haven't really had the same index level volatility that we've
Yeah, not as much to trade.
used to in the early part of the year where, you could get paid for buying calls or selling puts or trading strangles. Like you were getting paid on those because volatility was high in the indices. Now that volatility has come out, speculators look for volatility and you're finding it in your, AMDs, Oklas. That was a put in PayPal. I closed out of, we sold that last week. I think it
Covering
was
some profits. That's good. Good
yeah,
on
it
you.
was a fast market trade. But yes, I think that's kind of what's happening right now is that it's not sexy to buy upside calls in SPY right now when you could buy calls in Oklo and they 4x in 24 hours. Why would you do anything else?
EE or one of these other stocks.
yeah.
Whatever. Sure.
Yeah.
Sure. Totally agree.
So, yes.
All right, Quentin, good job out of you. Does this man get a DDT also?
Sure, why not? Give him the DDT.
Let's
Come
go with
on,
DDT.
everybody
Let's
gets
get,
a DDT.
Let's get who is our next person to come along. It's Ryan.
There we go.
From the crypto headquarters. What's up, Ryan? How are you? Crypto on fire today.
October, baby. You remember that? Shoot, I ruined that.
Riptober.
No, October.
October. Sorry.
I like Riptober better.
Riptober too. Doesn't matter.
And HODL. Remember HODL?
Was it HODL?
Yeah.
HODL. I got it.
We're-
How are you, Ryan?
I'm doing well. It's good to see you guys.
You better be doing well. I mean, this is your time to shine. Bitcoin just under 126,000. Ethereum with an equally big move, just under 4,700.
New all-time high
As
for
expected.
Bitcoin. Not quite there for the rest of the tokens. ETH, we need to get over, let's call it about 5,000 for that to be a new all-time high. But yeah, feels good for sure. Are you guys surprised, though? It is October, as we mentioned.
Yeah. You gave us the warning.
I was surprised by a 2 standard deviation move on October 6th.
Yes.
Well,
Okay?
no.
I mean,
In end of September, we were at 109.
yes,
It was the death of Bitcoin.
it was. It was.
And then Ryan came in and he said, no.
He did.
It's October. We've got
did.
October coming.
He did.
And all of a sudden, we're back at highs.
Did you expect a 2 standard deviation move?
Yes. I mean, you get used to it, but...
Was this a 2 standard
I mean,
deviation?
when I look, Bitcoin's only up 1% today. I think we get, I wouldn't say distracted, but we anchor in this big 6-figure price
Yeah.
when...
You move the decimal. That's what they need to do. Is you just move it, make it a tenth of a Bitcoin number, and then it's only
And it's everything's
12,000. Then it's less than the
It's
the Nasdaq.
It's 0.126 million. Okay.
Yeah.
This is how we're going to start to price these things.
1.26 million. How does that sound to you?
Sounds.
It sounds cheap.
Sounds cheap now when you put it like that.
Very cheap. Yeah.
Sounds real cheap.
Yeah.
Well, it's actually not one of the biggest movers, though. So we got a new all-time high. I've got a list of a couple tokens for you guys. We can take a look at biggest movers. I want to look at some relative performance, too, and then also put a little bit of context around what we've seen historically in the fourth quarter in terms of both upside moves and those dips, if you're looking for, again, just some perspective around if you get a pullback, what historically have we observed? If we start to see this continue to rip, it's not going to go up 1,000%, but what might be realistic to expect? But to start things off, Bitcoin up about 1% now, ETH up a little bit more last I checked, but not the biggest movers on the board. These are the 5, though, that are Algorand, Chainlink, Hedera, HBAR there, Dogecoin, and the Polygon token, POL. You can start to see here that we do have a little bit of a broadening in terms of outperformance in the market. Last 3 months have been pretty good to the altcoins. I don't know if you'd go so far as to say it's altcoin season. Seeing some signs of outperformance there.
Is there a month for altcoin season?
Not necessarily a month, but definitely a period in the cycle that we've observed historically, where eventually that capital rotates out of Bitcoin and chases performance in other areas of the market. And that tends to be kind of the last stage. I don't necessarily think we're there yet, but you're definitely seeing some signs of outperformance. That said, if you look at this, if we go to the next slide here, we look at this on a year-to-date basis. There's still a lot of stuff that, well, it's bounced off of the lows. If you look back over the last 6 to 9 months, there was a period of time where this got really beaten up. So Bitcoin has been that kind of a place to hide out, I suppose, at least in crypto. Seeing the rest of the stuff really just kind of play catch up to Bitcoin's all-time highs. That's why I say I'm hesitant to kind of call altcoin season, but certainly have been some good trades in there. If you got long ETH a little while ago, Solana's up a decent amount here. But year to date, still, most tokens are underperforming Bitcoin. Bitcoin's up about 34% since the start of the year.
We've been trading it via IBIT. I know Mikey's been doing a strangle throughout the whole year. Volatility has been getting pumped in a little bit over the last 2 weeks or so. Looking at IBIT as my proxy here, but I'm sure volatility itself is higher than the last time we were at
it's picking up a little bit, but still, when we look at whether it's implied for a handful of the tokens that we have options on, or it's realized volatility on a 30-day basis for many of the other tokens, still very low levels historically. We'll see whether or not it changes. Maybe the market's matured to the point where you don't have this insane volatility, you still have these high levels, and so you're not going to get back to 100%, 120%. You might, but today, most of the tokens that would typically have that realized volatility are trading closer to 50, 60, maybe 70% is your real high.
Yeah, which is lower than when you're getting.
Well, in some cases, it's 50% lower than the high for realized 30-day volatility,
which typically happens on these big moves up.
Yes,
you would if we get another day like this and we're talking about Bitcoin at 130, expect volatility to get in.
Yeah, I would think so. A couple of charts here that maybe put some of these moves in perspective. So we talked about a couple of charts here that maybe put some of these moves in perspective. So we talked about October and more so the fourth quarter of the year historically being like a good time to be in crypto for what it's worth, right? I don't know how much you read into that. It's fun to look at. But if we go back over the last 5 years here and we look at the fourth quarter and zoom in there, what are the biggest intra-month moves that we've seen to the downside in terms of expectations? And what we've seen is that the biggest dips coming in December of 21 and again in November of 2022, which I should mention was right around the collapse of FTX. So kind of worst case scenario for the market at the time. But you saw dips intra-month in November of that year in December of about 30%. Now we know that 30% dip in November continued on. Obviously, you can see in December down another 13% there. But when you think about, okay, what would be a dip I'd want to step into if I'm bullish? 30%, 35% maybe is your max there, at least what we've observed. But then in general, it's pretty normal to get a 10 to 15% pullback. So that's what I would look for if I'm still bullish and trying to jump into something like this. I'd look for that, 10 to 15% range pullback.
Yeah.
On the flip side, though,
only 10 grand, 10, 15 grand on the
On big,
so,
yeah,
which is
12
what we've been
12,000
seeing.
and change.
Like
Yeah, right.
107 or 109, which was
Yeah.
the lower end of the range. That was kind of the dip buy.
Easy to say now.
Yeah.
Easy to say now.
Yes.
Then when it happens and it's down, because it happens so quickly, it's down 5 grand, it's down 10 grand in like a day.
Yeah.
And it's like, oh, well, maybe I don't want to step into
Right.
this.
Of course.
But maybe this helps to put some, kind of a little bit of a roadmap, I guess, put some context around what we could see. On the flip side, in terms of, you don't want to get greedy. It's easy to get greedy. It's easy to get FOMO in markets like this. And I think that's true of some of the meme stocks and some of the high flyers in the tech space. But if we look at the next slide, what are the sorts of moves that we've observed to the upside? And I would argue that at $126,000, you're not going to see the same percentage move to the upside. But historically, you have seen back when the price was much, much lower, you've had 50% moves within a month. Most recently, in November, we saw a 50% move. If you recall, we went from about 60,000 and change to kind of mid-90s. So
The
you did
Trump
get
election.
Yeah, you do get those, those big moves at times. But I think again, when you look at what would be realistic intra-month, you could probably get a 20% move off of these levels, and that's again an area where I'd take some off the table. You never want to go no coin,
of course,
but
can't be a no coiner like this.
But Tony's not a
No, I'm not a no coiner.
I know.
Not a no
He's a multi-coiner.
But I'm relatively small now. It was much. I had more earlier.
Yeah, stop that.
I don't think there's anything wrong with that.
Hodl.
I would be. If you just look at where we were, this time, last time we were all-time highs, right? And so you got that big dip down to 75,000. You're kicking yourself for not taking a little off the table to be able to buy it back when you were able to sell it at 110. So again, I don't think you go to zero in terms of your overall allocation, but you manage this and trade it like anything else. You want to take some off the table, redeploy on the dips. You will get the dips.
Yeah.
So those are some moves intra-month, guys. That's where we're at. I think, again, when you look at what's happening in the market here, this isn't crypto specific. This is just broadly related, to kind of conditions that we're seeing, what you're seeing elsewhere.
Yeah.
Right?
Been risk on everywhere. So,
Yes.
this
no fear.
can move like this.
Which
too.
is fearful at times.
Sometimes.
Even the S&P's up 14, holding steady. Looking at the expected move for the last 45 minutes ago.
Volatility
or so.
up.
What's that?
Volatility
Volatility is up 2 cents. $13.12 in the orders for even the S&Ps till the end of the day. Small expected move. Volatility up by 2 cents. Nick just pointed out Dow down 116. We'll take a quick 90-second break. We'll come back. We got Liz and Jenny next. Good job by all of you. Peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll head by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
This is Chicago, We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me, which I think she's on the left, I can't tell which side right now, is Jenny Andrews. How are you, Jenny?
I'm great, Liz. How are you? How was your weekend?
I had a wonderful weekend. It was beautiful outside.
I know. And you had a big fundraiser in a bar. Like, you had a hoedown. I saw a picture of you all dressed up in your cowboy.
You're making it sound like it was low class. This was the highest class thing I've ever been to in my entire life. It was a farm-to-table dinner at a ranch, and it was beautiful.
Okay, never in my wildest dreams would I think a hoedown is low class. I mean, sounds like fun. So, but you went to an evening where you dressed in a cowboy hat, cowboy boots.
Yes, and there were horses all around us. It was beautiful. White lights everywhere, gorgeous white linen, music playing, drinks were flowing. It was a wonderful night. It was a good fundraiser. So yeah, it was fun. But I texted Jenny and I go, I started the weekend as a showgirl, and I ended in a cowboy outfit. I was like, what's happening?
I did go see the Life of a Showgirl movie event, launch party event, and it was good. I thought it was really good. It honestly made you like every song even more listening to her explanation of them.
Did it really? That's wonderful.
Oh yeah, it was really good. It was really good.
How is Lily's Homecoming? And then we're gonna get into AMD.
Yeah, no, we've got a lot to talk about. AMD, the yen, Oklo, like there's a lot going on in the market. So
Archer Aviation.
Yeah, there's a lot going on. And actually, so Homecoming was great. The Homecoming was great. But let's get into the market. Let's go into the platform. Let's get in the market. There's a lot going on. And actually, Liz, when there's stuff going on, every time we've come up with, and I hesitate to say like new strategy or, something different, it's not like we're just sitting there out of nowhere and say, oh, here's a new strategy. we come up with it out of necessity or based on our positions, or there's something going on where we're trying to change it, and then we come up with something. And so today I came up with something in the shower. It's where I get my best ideas.
Okay, do me a favor though. Yeah, I'm looking at yours right now. Hit the green thing in the top so we can see the top of the screen. If you look at that white bar on the top of your screen, go all the way over, hit the green, because then it'll make it. There you go, full screen.
I got it. It wasn't full screen. It was just some kind of weird drop down.
Okay,
it was appearing out of nowhere. Okay, Liz mentioned AMD. AMD up $45. Crazy.
It was up higher. I think it was up 30% today.
I thought it was up $60 at some point. Yes, I mean this is bonkers.
AMD. Can't stop, won't stop.
I mean, this is why we say, like, we hate naked calls. I hate naked calls. I'll say it.
You had a strangle on there. And it was great. I don't know if you heard Quentin. Quentin from the trade desk came on, and he was wonderful. He said, I'm talking to a lot of people. He's like, but a lot of the people who understand these high probability trades understand they're coming at it with a sense of, like, not panicking, looking at this being like, okay, this is where we're at right now. What should we do going forward? Like, they understood their risk. So it's good.
Okay. But and I know you get burned too many times like this with naked calls. You just don't do them anymore.
I know. I heard.
You heard?
I heard. We don't like it. Hold on.
What are you doing?
Sorry. I want to make sure I have the chat up too. Not the chat, the Teams, because you're running everything today and I did not. So just in case John McGloin, our super producer, or anybody there wants to talk to me, I'm available.
All right, so Liz has got that up. Also, we are taking live tweets. Send us a tweet. Include the hashtag LIZJNY. I will show you. Just like Bob on Fire puts hashtag LIZJNY. And here are the weekly earnings. Today, Constellation Brands.
So Jenny, my question is, on a day like today, are you in being like, we got to get into Constellation Brands? Because there's so much other stuff going on.
I know there's a lot going on. And I'm keeping myself busy with my new strategy.
I know Jenny's got something for me that she wants to show. Let's do a run through of everything first. Spoo's your own, and I use this term loosely, only up 18.
Hey, but I didn't see them much higher than that.
No, they were higher. I think. But you're looking at SPX. Oh, look at that. They were definitely higher. It's so funny when you go on there. I was like, no, they were up huge. And it's
so high, 67.38. So 4 points higher.
Yeah, 67.38.
Yeah.
So we never reached the elusive 6,800. We went on Friday. Remember, I was asking you if you think we're going to hit 6,800 in ES. So
yeah.
And the print I saw on Friday. Oh, no,
it did.
So the only thing I saw on Friday was, and I texted you, I was like, it was 6799.99. I never saw the 6,800.
No, I thought it hit it, but like just hit it, and very, very briefly.
It just crazed it. It's so funny.
And did you bust out your 6,800 hat for the weekend?
No, but I'm going to sew one together because I think we're heading in that direction.
Yeah. Now today, how high do we get? 67.94.
If you look at the expected move for the cycle, go to the trade page. I'm pretty sure it brings the expected move to, what was it? It's up or down? 12. And where are we now? So when I was looking at it earlier, the expected move brought you to exactly 6,800.
I did do the 0 DTE at 9 o'clock. At 9 a.m. we were up like 9.
Yeah, you should be out.
I don't. So today I took a page out of your book. Today I wanted to risk less, so I just did the $10 wide iron fly for 810.
Oh, okay. So then you might.
So that one probably not.
Yeah,
probably not. Probably not out. Okay, all right. So a few hot topics. Popping into Tasty FX, the yen is a hot topic. And interestingly enough, when we had on, so I'm going to go to USD, JPY, Japanese yen, go to the trade page, and you look at this move. And it's crazy, Liz, because it was, you see this 3 days up, like up. This is when Glenn was on.
And we yenned it. That's what we were saying. Yen goes with it.
Yeah, like trend, like the yen go. If you're trading the yen, go with the trend or something like that. So after this 3 days up, we actually put on a position wanting it to go even higher. To go even higher. And the day after we put that on, it was down.
Well, today, actually, what is that green bar that's right there?
This is our.
No. So you see where I'm saying, like, it goes all the way down, then it gaps up. There's a green bar, then a red bar.
Yeah.
Because it never sleeps.
I think this must have been like
Overnight.
last night. Overnight. Yeah, overnight. So we have, I think where this dotted line is up here, this is our closing order. So everyone's going crazy about this move in the yen, but we were hoping for it because we put out.
No, we're baby FX traders, right? So it's great. I love being in the FX markets. We're baby FX traders. We were looking for that move. We were looking for that move up, like you said, last week, but we didn't get it. Now we're back. We could close this if we want to.
No, well, I mean, so
I think our order's in. I think we hold.
Yeah. Our since we put that position on, it's only up $7. Our order's in, our GTC is in to take it off. So we're just, but I guess, I guess it didn't work. It was some kind of study, and it was like, if you get this movement, there seems to have more of a trend, and it didn't really work because then it turned around. So maybe we're lucky to get our money back because we were down $90 or so in it. So I don't know.
Just got out of my SPX trade.
Nice. Which one did you do today?
The put spread.
Oh, just the put spread.
Yeah.
I'm surprised you just got out now because at 9, I think they were only up 10.
I got in at like 9:15.
Oh, okay. Yeah. Yeah, because anyone selling a put spread at 9 probably got out at, within minutes, 10 minutes or so.
Yeah.
I think I don't know.
No, but I'm also trying to take 50%.
Yeah, I take much bigger percentage when it's just one side.
Yeah, for sure. For sure.
Okay, so I don't know if you want to just leave this and hope for hope that we get a
we
little
have
more
our closing order in. We're not. Why would we panic now?
Yeah, we leave it. So this is the move everyone's talking about, big move, but we act like we've been here before.
Act like you've been here before. Okay, perfect. Now that's the end. AMD. What else is on top? Bitcoin can't stop, won't stop. We don't have our Bitcoin guy on today. You'll notice Dan is missing. He had an eventful weekend, so he's not here.
He's not here. No, he's not here today. But yes, so Bitcoin, we've got new highs. Are we getting new highs in Bitcoin? Today we've got 125.5.
I don't know if that's all-time highs. Let me look.
I will do this $.
It's right there. The last 3 days, it's kind of touched it.
So we can see here's like the long look at Bitcoin.
Wow.
But you can see, okay, so this was back in August. So I think today is the first day we're like breaching that August high.
Just like that, we're back. It's October, so you heard it here first. Well, you didn't hear it. You heard it on Tasty first. It was Ryan Grace that talked about October.
So in IBIT, we have just a Jade Lizard, and we keep adjusting it. Bitcoin keeps kind of going through our Jade Lizard. Here, it's not quite. So we have our 50% GTC. We'll just leave that. We don't have just a bullish trade in IBIT. We just have a Jade Lizard. But we do have a bullish trade in Ethereum.
A naked bullish trade. We're just long a call.
Yes, we just have one long call. Oh,
I use naked. That's not naked. I'm sorry. It is naked. We have an unlimited profit potential there, but it is a defined risk position.
Yeah, defined risk position, one call. It was a zebra, and then we changed it. I think we've had multiple positions in ETHA, and somehow we have just a long call right now.
Yeah, our ETHA's doing pretty well year to date in the position. Okay.
I'm going to see if we turned it into a zebra, what kind of credit we could take in.
There's 46 days left, so it's worth adjusting if possible. Yeah, it's the same price.
So a zebra is 765, and we'd sell out that long call and take in 237.
That's not bad. That's not a bad.
No, that's not bad. I mean, I think so. We're taking in $239.
Yeah, let's do it.
So, now just because this could kind of set up my new strategy.
Oh, okay, good. Okay, excellent. I really don't know what it is, so I'm excited.
Okay, so what's the benefit of a zebra? You have unlimited profit potential to the upside, but it's defined risk. So if
it also takes advantage of vol skew slightly, that you can actually do something against it if you want to maintain your position. Okay, but go on.
Yeah, so unlimited profit potential to the upside, but it's defined risk. If this falls down, all we could lose on this is what we pay for it, $765, right?
Yep.
Okay. So but we had unlimited profit potential with this long call. But by, closing this and taking in another $237, sure, why not?
Hold on. If we're I don't know what your trade is, so I apologize here. But let's just kind of talk through this. Why we're switching it back to a zebra is because number one, you're taking in credit. You can only lose 7 instead of 10. And number two, if it's already at 35 something, 36. If it falls back down to 32, we have extrinsic value in that. It's actually beneficial to us in the 46 day. And if we thought it was going to fall back under 26, we'd close this and take our profits anyway.
Right. Okay, so I'm going to ship that, and we'll take in $2 in credit. Less at risk. We have still the same unlimited profit potential. The upside is if we had 100 shares of ETHA, but it's defined risk, and if it falls, then we'll get some extrinsic value out of this.
Got it.
Okay, so this is the zebra is great. You talked long ago about, what was it, UNG or something?
Yes. No. Well, PLTR, I do the zebra all the time.
Oh, yeah. PLTR. So let's say, for example, PLTR, and you put the zebra on and you keep moving it. And so as the stock goes up, you're partaking in the upside, but if it falls back down, you've got defined risk, so you don't lose all of your profits.
You can only lose back until the last time. You can only lose what you've got in there then.
Right. So if you have a stock like PLTR that has run up, would you rather be long the stock, or would you rather have a zebra? Zebra, right? Because if you're long the stock, well, if the stock falls back down, you can lose all your gains. But if you have the zebra and you keep ratcheting the zebra, you can only lose what your new zebra is worth.
Correct.
So Liz, brace yourself. So this has been bothering me. I've got long stock in quite a few positions, and I think to myself, geez, if I wish I could sell this stock and turn it into a zebra, but I don't want to sell the stock for tax purposes. Okay. Then I thought to myself, well, this is so stupid. There are synthetics for everything. So I could create a zebra position and using my stock is synthetically create a zebra position. So
it's not the collar, because the collar caps your upside.
No.
So what you're trying to do, which if I'm understanding correctly, and you can work with me here because we've been trading together for a long time, you're trying to create a position where you have defined risk to the downside, but unlimited profit potential to the upside.
Unlimited and give up zero and give up. So normally a collar will give up. You won't give up anything because you're selling a call to pay for a put.
But your gotcha is you're capping your upside.
Yes, but you're capping your upside.
Okay.
So how do I create a zebra type strategy where I am not giving up any theta, but I'm not capping my upside? And so how do I turn a stock position into a synthetic zebra? So my only at risk is the cost of the zebra, but I don't have to sell my stock. I'm keeping my stock.
All right, talk to me.
All right, here, I'll pull up an example. So I'm going to go to Intel.
Do we have a stock position in anything?
We're not nothing that's going to make sense. Nothing. We don't have any stock that's just skyrocketed or doubled or tripled or whatever.
Okay,
you know what I mean?
Okay. So
but lots of people out there do. So and again, bear with me because I just came up with this today. So here is Intel, and the stock has gone
from 24 to 37. Yes.
And then do you remember you said when are you going to sell it? And I said when it hits 40. Well,
yes.
We were almost there today. Today we were at 38.68. So we're getting there. And I know I said I was going to sell my Intel at 40, but I'm not going to for tax purposes.
But if you have unlimited profit potential and define risk to the downside, that's fine. But you have the stock, so you're getting creative.
Right. So how do I protect how if I would rather have a zebra on, how do I create a zebra and keep my stock?
Okay,
and I think there are lots of people out there who, and I'll get lots of emails to say I don't want to sell my stock. So how do I create a zebra but still keep my stock? Which
right.
Okay.
Now the other thing that most people will do is move the collar up with it, which is fine because then you're getting the upside, but you're capping the upside. Meaning if she puts the collar on at 40, if Intel gaps to 50, she's capped out at 40. You can keep moving it, but yes.
Right. So, you know what? This is tricky. This is a little tricky because we do have a zebra in Intel.
Go to PLTR. I don't think we have anything in there.
Okay. Now it's going to be a lot more expensive in PLTR because
we get it. Yeah, we understand that.
Yeah. Okay. So in PLTR, let's say I had 100 shares of stock. I'm gonna walk through this and see if it works. Okay. So in PLTR, here's 100 shares of stock. I make, $100 for every dollar up. I lose $100 for every dollar down.
Gotcha.
Here we go. Then if I wanted to protect myself to the downside and and do a collar, I would buy this 165 put for
200. Yeah.
Yeah, for $9. And then I'd have to sell a call for $9. Right. So
you're capped at 200. You get to make from 180 to 200, but you're not paying any extrinsic value. So this works, but this is a zebra with a call against it, by the way.
Yeah. So here, so it's here you have a collar, which is like a call spread. This is a call spread.
Yep. Collar is a call spread. Yep. Long stock. You have the collar on there equal to a call spread of the same strikes. Got it.
Yeah. So this is like having the 165 200 call spread.
Yep.
Okay. Now I'm going to clear this. If I put on a zebra here, and again, we're going back to thinking okay, you got long Palantir at, 12. Okay. Yeah. So at 180, you've got a lot of profits here. So I know that the zebra is going to be expensive, but it's not going to be nearly like what your profits are in Palantir. So with a zebra here, where you would sell the at the money. So basically, you buy 270 deltas, sell a 50. It's weird because it's trading 180, but it's saying the 50 delta is 185 because there's so much skew.
No, we get it. You're looking at the extrinsic value. You're going to have to actually take that down to the 160. We don't care how much it costs because I just want to wash extrinsic value. So take the 65 to the 60.
So yeah, you could do that. Whereas So you're just trying to wash extrinsic value. So I'm paying $750 twice, which is $15, and I'm getting $17 here.
You're getting 15 in extrinsic value because that's the in the monies, but it doesn't.
Yeah. 15 in so basically here you're washing extrinsic value. This is $4,000. It's not cheap, but you made
still less expensive than the stock. It's still less expensive than holding the stock. It always is.
Well, and then to the downside, if Palantir has a huge move down, you won't lose more than $4,000. You won't lose more than $4,000. So, which is like nothing compared to what you've made on 100 shares of Palantir.
Yes.
And if it becomes out of the money, you can sell it out. It's got extrinsic values. There's a lot of benefits of the zebra. So now if I go to the analysis page, this is what the zebra looks like. Your risk is capped to the downside here at this $4,000, but you have unlimited.
So you're where it wants to go for the next 46 days, and then lather, rinse, repeat.
So you're not capping yourself with that short call. You're not capping yourself with the short call on the collar, but you have your defined risk on the downside, similar to a collar. Okay. So my question to myself was, how can I turn all my stock into zebras? Because I don't want to.
Okay, if I'm looking at this correctly, that buying that one is the same thing as the stock. Is that what you're going with? Are you trying to do a call spread on top of your stock?
No. So okay. So what is synthetic? What would so a zebra is buy 270 deltas, sell 180 delta. What this in the money long call with stock? How do I create an in the money long call synthetically with stock? It would be buying 100 shares of stock
and buying one of those.
So we were at the 160. So if I buy 100 shares of stock and buy the 160 put, long stock, long put equals long call.
Correct.
So if I buy 100 shares of stock and buy 160 put, I am synthetically long that 160 call. That's synthetics 101. This is like long stock, long put. I'm long this call.
So then are you just going to buy one more of those additional calls and sell one of the calls? So there you go. No, you have the stock position in.
Yeah. So you have long stock, and this long stock, long 160 put is synthetically long the 160 call, and then you have the 160, 180 call spread. So this is a zebra. So this will look like a zebra and mimic a zebra.
And this absolutely will, and that's pretty smart. So if you don't want to get rid of your stock here, you don't.
And it gives you, and it'll give you all your buying power back. It will give you all your buying power back
because you're buying that put, and you have the stock with it. It's the buying power, and then it might hold up the width of the spread, but that's fine. Do you know what I mean?
So when I go to the curve view, remember the zebra, the max loss on the zebra?
$4,000.
So P&L at expiration, $3,943. And you have your unlimited, So I am done. I am done like collaring these stocks because everything is getting blown through my calls on the upside, and I'm changing my like any stock that I don't want to get rid of. I'm throwing these on top of it.
Okay, so let's talk through. I like it. I like it a lot. I'm very, very excited. And it's right. Like you're using Synthetics 101, which is what you and I've been very creative with on these shows over the years. I really do like this. So let's talk through. This is what my favorite thing to do is. I love when we meet like Tony from Mexico and other people. Let's talk through the pros and cons. Okay. So you're right. You synthetically created the zebra, but synthetics are synthetics, right? So we know when you don't like a zebra with a call against it. Totally get it.
There's no call against it.
No, there's no call against it. What are the downfalls here?
It's the same as a zebra. I mean, this is synthetically a zebra. So it's the same. This will act.
You have to move like you ratchet your zebra up in the same way because your stock just remains, but you would move your put with your long call.
Like you know how we say if you move and you're trying to ratchet, like you close the whole position and you reestablish, you would just have to close this whole position and reestablish, right? So but
hold on, I just want to answer one thing from the chat right here because I think this is very important. It was from Ryan. He said, "Why do this instead of a regular zebra?" I need to make this crystal clear. She's saying it's stock that she doesn't want to get rid of. She'd rather have a zebra instead of the stock, but does not want to get rid of the stock. That's why you'd use your synthetics to create a zebra-esque position where there's unlimited profit potential but defined risk to the downside. I just want to make that clear.
Okay, yeah, and it's only if you already have this stock. Let's say you already have this stock. Like you have Palantir, you bought it at 10. It's 180. Yeah. You don't want to sell it. Again, we get emails all the time like, I don't want to sell this because of tax purposes. You don't want to sell it, but you want to protect it. Collars were the way of, oh, I'm protecting this with a collar, or I'm buying a put spread and selling a call to pay for the put spread. And I just did that in Oklo. I just said in Oklo, oh, I sold 2 calls. They were so far and to buy 1 put spread. So for every like 1 put spread I bought, or I would sell these far out calls. Well, it's only up $8 today. It was up $15. Oklo was up $15. I don't know if you saw this.
I did.
So it was like some of the calls I had some scattered. And I thought, I'm tired of this. Like, I'm tired of selling these calls, is blowing through them. And this is what forced me to come up with like layering on top and creating the zebra over my stock, or turning my stock into a zebra.
Because the zebra on paper has, like you said, if you started with a zebra, you'd be ratcheting it. Palantir, I don't own any stock in Palantir, so I wouldn't do this in Palantir because I have zebraed it since 12. A child gave me this idea that we wanted to be long Palantir, and I've always zebraed it up. If you start with a zebra, stay with a zebra. But if you've somehow sold puts and got yourself into a position where you have the stock and then it's up, this is a great thing to put over it. It's very complex. I understand, Jenny, you and I get this, and our viewers are really smart. But it is pretty complex, what this trade.
So, but yeah, like same thing. Bought this at 10. Oh, okay. How much is the zebra now? $4,000. Well, okay. The zebra's $4,000, but I bought this at 10. So like if something happens and the stock falls, I got $4,000 at risk in every one zebra. But I know, and I threw mine all the way out. I put them all the way out through earnings. I put them all the way out in like the November cycle through earnings, so that no matter what happens or through earnings, I'm protected to the downside. Now, I'll lose some of my profits, but I'm not going to lose them all.
Yeah.
And then Intel's the same. Where I have stock in Intel, and it's much cheaper. You're going to look at this. It's much cheaper.
You've got a cheaper product. You're looking at Oklo and PLTR that are in the hundreds. It's going to be way cheaper in a cheaper product.
Right. You can see that Zebra and Intel is $7. So you've got $7. You can... Basically, it's going to cost the same, right? They cost the same. Your risk is the same. Throwing that on over your stock, but then you've got the defined risk to the downside, and you're not capping your upside like the collar does.
Well, and I also think it's a little bit of a mental game too. When you've got a zebra and you see that ratchet, and you know it goes up. When you're doing that, you know you can only lose down to here. I like this, Jenny. I like that you synthetically created. And you know what's so funny? It's a simple synthetic that we talk about on a daily basis. Long stock, long put equals long call.
I mean, Liz, I said like, how many times I said, I'm not selling any more calls in Oklo. And then I thought, well, I need to protect myself to the downside. And
you need to protect yourself from yourself because you kept
I need to protect myself to the downside. So in order to, buy some put spreads, I need to sell some calls. And do you know how many thousands and thousands of dollars I lost today on my short calls in Oklo? A lot.
Buy them back?
No, I rolled some, I moved some. I've got some here. got some here at 144, I think, in the 11 day. I moved some. No, the 11 day I have the 160s. The 11 day I have the 160s, and then I moved some out to the 18 day to the 155s. So I still have these short calls, and that's the like raging over those short calls is what forced me to is what forced me to come up with, like, how do I turn this into a zebra?
I mean, do you know what's so funny? What I love about this strategy too is that it's kind of like what I tell my kids: break it down to its simplest form. You wanted stock, what a synthetic stock position is, and then you can create the zebra around it. I like it.
Yeah, right. Like, because the question would always be, oh, well, if you didn't have stock, you could just have zebras and you don't have the risk to the downside. But, well, I don't want to get rid of it. So I'm, how do I keep
I just want to be crystal clear. There is still risk to the downside, but you're capping your risk to the downside.
Your risk to the downside, like you could see your risk to the downside is basically like same thing of what you would pay for a zebra.
Correct.
If you look at something like, yes.
You have unlimited profit potential, but defined risk set up to the downside. Yes.
I'm tired of the calls. Killing me. They're killing me, Liz.
It is pretty interesting because when you start with a zebra, you keep a zebra. And I'm a big believer, and I've done this a million times. My IRA is all zebras. My other accounts, I've got stock in them with strangles around them because I want the leverage. Do you know what I mean?
Yeah, I mean, like, here's my issue. And here's my issue. Short-term gains versus long-term gains. And if I'm putting on zebras, it's short-term gains, right? So that's like one of the issues I have sometimes. So like, here's one that Liz and I both bought. My brother was like, oh, I think you should get into Southern SO. And so I did buy some and you bought some, but I did calls or zebras or whatever. But then I thought, you know what? Why do I want to do that? I hate paying short-term gains.
Oh, in the zebras?
Yeah.
Yeah, no, I don't, Jenny, I'm not gonna lie to you. I know nothing about taxes. I really don't. I don't know. I don't know. And like I said, I do zebras exclusively in my IRA because they are
astronomical. In your IRA. Yeah,
they're astronomically cheaper, like astronomically cheaper than anything else.
Yeah, and that makes total sense. Sense.
Like that's what I've got. Robinhood, all those things that I have zebras in, I lather, rinse, repeat. Put them on, put them on, ratchet them up. Put them on, ratchet them up.
That makes total sense because it's not like income tax.
That's what I'm saying. I know nothing about taxes though. I go to a tax professional.
No, I know you go to an accountant, but everyone should be aware of, it's good to be aware of short-term gains, long-term gains when you're trading. And options in trading, it's taxed like it goes into your income tax, right? So it's something to be aware of, which I'm always mindful of because I don't want to get hit with a huge tax bill every April 15th. And it's just something to be aware of. So anyway, here, zebra or stock, honestly, I might do stock with that strategy of creating a zebra around it. Because watch, we don't have a position here. So let's say you buy 100 shares of stock, and then the zebra would be sell a 50 delta, buy 2 70 deltas. But instead of buying 2, you buy one of these puts. And I know this says $5,000, but
so the problem is you have to have the stock, Jenny. You have to have the stock in first. So
it will release the buying power.
Do it in something cheaper. Put one in an Intel. Let's get rid of our Intel position, whatever we have in there.
Okay, yeah. Okay.
Okay, so let's just do it in something cheaper. What do we have in there? Zebra, great, perfect. Let's close it.
So 34.37, is that the zebra 70? Yes. It is. So all I'm going to do
is buy one call back and get the stock at the same time.
I'm going to sell one call out, right? Sell one call out, buy 100 shares of stock.
You got to do the stock first, then go in and hit one. Yeah, there you go.
And sell one of these. Okay.
It's going to tell you it's $1,300 debit. I don't believe that to be true.
Okay. So then we've got our 100 shares of stock. We have our call spread. And then if I buy this put, this is fine. Like finishing the zebra, and this typically will release all the capital. And I think we have to wait till like overnight or tomorrow or whatever.
Well, stock's got a 3-day stock's got that 3-day settlement, so I think that's when you have the stock beforehand. But yeah, put it in, buy it. Let's do it.
But I want to show the like real effect of like, it releases the capital.
You won't see that until 3 more days.
But then this will be a test. Because again, this is new. This will be a test. Like, does this should look just like the zebra. And we'll watch it and see how to manage it. So here we have our defined risk of $677, which was the cost of the zebra. That zebra was like $700. And we have the unlimited upside. It should behave just like a zebra.
It behave.
I mean, it should. It is.
It is.
I think the question is going to be like management. Is the stocks going up or down?
Yes. So this is what we're going to keep an eye on. I like it. Intel is a little bit easier of a nugget than to do in SO. We'll take a look at the buying power in a couple days as well.
In a couple days, we'll see what kind of buying power this position's using.
Yes.
Yeah. So anyway, that's it. That's what I'm doing around all my stock that I don't want to get.
So what's interesting is it goes in as I'm just kind of looking at this. It goes in as a married put and a spread.
Okay. And I don't know, like this is going to look weird if we push this out on the follow page, but
oh yeah, but you know what? We are weird. Hold on, I'll push it through.
Here, I'm pushing these out. I'm sending all this to the follow page.
Okay, I'll do the other side. Put Etha in there too, because I didn't do that.
Yeah, it's all in there.
Okay, that's so funny. Yeah, let's let it go. I mean, honestly, and then this show, you can go back and watch it. I know what we're talking about is heavy stuff, but it's really basic synthetics.
Hey, synthetics, right? Like
it
if
is
I
really
want to replicate that long in the money call, long stack, long put is the long in the money call.
Yeah. Yeah.
Yeah. Okay. Yeah, and trying to think. In Archer, all we have is one short put. Do you want to roll it up?
I want to create that same thing we just did in Intel.
Yeah, let's do it. All right, let's buy out our short. Let's buy back our short put.
Okay, thank you. I was like, no, I don't want to roll that thing up. I want more money.
Okay, so let's think about this. A November zebra, sell a 50 delta, buy 270 deltas.
Just wash the extrinsic value. Yeah. I mean, the deltas are kind of squirrely. The deltas are squirrely when you have such skew.
Yeah. So I'm paying 93 cents twice. I'm getting $1. I'm getting $2. So I'm washing extrinsic value. That's all I want to do. All I want to do is protect myself to the downside, have unlimited profit potential to the upside. So here's the zebra, $357. I'll make money 1 for 1 to the upside as it goes up. My risk is $360. If Archer falls back down to 7, doesn't matter.
Perfect.
Okay. Curve view analysis.
Perfect.
Here we go.
There's your zebra, unlimited profit potential with a defined risk set up to the downside. Perfect.
Risk $362.
Got it. Now, let's go in and adjust the position. It's going to go in as a married put and a call spread.
Yeah, so I'm going to buy the stock and my zebra again.
Sell the 13 call.
Sell the 13 call. And instead of buying 2 11 calls, I'm going to buy 1 11 call, buy 1 11 put.
It's $800. You're only using $800 here.
But again, I think it's going to come 3 days. Like when we look at our capital required, I want to see what this is using. Because for me, for me today, when I put these positions on over my Oklo.
No, because you had the existing stock position.
Yeah,
so
yeah. It freed up a lot of buying, a lot of capital, right?
You know what's crazy is this is great for concentrated stock positions.
No, I know. Yeah, I know. This is the 2025 collar.
Concentrated stock positions. Yeah, got it.
Right. Yeah. Okay. So then so we look at this curve view analysis. My risk $369, same as the zebra. Same.
Yep. So we'll keep an eye on how the capital required shakes out. But I think if you had this stock already for a couple days, it would look like that. So,
and then when I mentioned like taxes, I'm not trying to skirt the system, but if your stock keeps going up and up and up, what are you making money on? You're making money on your stock. And you're not capped there, and you're making money on the stock. And if you want to hold the stock forever, you can keep moving this, moving this, moving this, moving this. You can keep moving it with your stock, and you're washing extrinsic value. You know, again, here's what I need to realize. Like, you're still going to make money one for one. Let's see, 13 to 14. You know, you're up 136, 230. You're still making money one for one with the stock. So you're not losing out. Normally, if you're buying puts against your stock to protect your stock, you're losing that money every month. You're losing $500, 600, whatever you're spending on your puts every month. You're losing that. And I never want my cost basis, my total P&L in a position to be less than what I've made in the stock. That means I'm giving up too much on my protection of the stock.
No, I agree. I'm very curious to see. Like I said, I love this. I love it. I love it. I love it. We got to keep an eye on it and see. I think you might have to wait for a while to adjust it. I think the caveat might be, you know how with the ratchet, we can move it up pretty quickly. If you get the move you want, we'll have to keep an eye on these. But that's great. This is a high class problem. And guess what? I don't know. We work out problems.
Like when I put this on in November of my Oklo, I thought to myself, like, I might just have to leave this till November.
I think that's the caveat. We might, if it's going up, the ratchet might not be as easy. But we'll guess this is what we're here on the show. I love it. I love learning and growing on a daily basis.
Yeah, practicing.
Yeah.
Order contains equity leg and more than one option leg. So will it not send it?
No, you're gonna have to leg into it.
Yeah, I think that
just buy Archer and then put the
you got to put it in over it. So. To your point, someone with a concentrated stock position. So here, let's say I have a concentrated stock position. And I want to do this. I would do it one for one over my...
Sure wish we could trade options in IG.
Yeah, no kidding. So then I, buy my 170 delta, sell my 50 delta, and then buy whatever call is the 70 delta, I buy that put. So I'm paying $185 for this. I'm
laughing as I'm saying this because we have a friend, Cutter, who, deals with people with concentrated stock positions. And he's like, I could write this on the wall and nobody understands it. But our viewers are smart enough to understand this.
And so here was my first question when I was putting these on. I thought, well, okay, I'm paying $185 for this. Am I just like throwing away $185? Am I just throwing this $185 away? But no, because at expiration, if Archer's at 13, this 11-13 call spread will cover this. So it will be like I'm not paying anything for it, right? So
I do think the gotcha is this has to stay on. Where we get, if you gap up $10 in Archer, I'm making that up, you can ratchet the options right after the gap up. I think it's different with this.
Well, I don't know, because the 11 put with stock is synthetically the 11 call.
I know. I'm just saying that's the only thing I can think of that might be an issue.
Because come expiration, if I have this 11-13, if I have this on that I paid $1.85 for, I don't want to just like outlay $1.85. But if we're at 13, then that 11-13 call spread is worth $2. Is worth $2 instead of worth 93 cents.
I think at expiration this is good. We're going to tweak. We're learning as we're going, right? We laugh and learn every day. But this might need to be done. And I like that we're farther out in it in 45 days. This might be like an 11-day trade.
Yeah, I don't know.
It could wind up being that again.
But I just felt like, okay, I'm going to sleep better at night. Having these on over some bigger stack positions. We'll see. And
I sort of feel like these aren't, how we say I'm an overtrader, and a lot of times with the collars, you'll go short term, because they're cheaper, right? And it's easier to manage when you're moving them. Yeah. This might be something where it's a set it and forget it mentality, where you're going to do this, you're going to sleep tight at night, and then maybe you can go out and have a cocktail lunch instead of trying to move all your collars all day.
Well, I mean, we talk to people who manage positions, and if they're collaring things, usually when they're putting that collar on, they're not dealing with it every day. They're like putting it on, 3 months out, and then
because they're dealing with other people's money, and when they're dealing with other people's money, you're like, I'm going to put this 6 months out. I'll deal with you in 6 months.
I'll deal with it later. So, yeah, so it might be a 45 day, although what you do want too is if it goes down, you've got that extra extrinsic value that you could, I just got to the point where I like Okla was killing me with all these calls that it was starting to turn where my P&L and Oklo was starting to turn where I was starting to make
You
less
weren't making money. Yes.
like I wasn't improving my basis. I wasn't improving my basis. These calls, buying them back, rolling them out, dealing with these calls, it was actually hurting my basis, even though I've been, selling other stuff all year around it. So I had to come up with something else.
I like it. You get a gold star. You know what you get, Jenny? Here, I'm gonna, hopefully this will go into, what I love is our AI where they give us, there you go. I can't bring it any farther.
Thank you. Certified badass. Certified badass. So now we have a couple of them on. We have one on an Archer and one on an Intel. We'll watch it. And again, I don't know that this isn't like a starting trade, but
I agree. It is not a starting. We started with it here, but it's not a starting trade.
Just to watch it.
Yeah.
It's not a starting trade, but it's something that it's definitely not a starting trade, but it's something that if you've got a concentrated stock position and you think, oh, gee, I wish I had a zebra instead.
Yeah, no, I like it. I think it's great. Okay, do you want to pop into maybe Twitter just because it's 43 already? We're good. I think you got to Bob already, which was great. There's more.
Okay, Frank with the calendar. And thank you, Frank. Eric, happy Monday. Go Cowboys. Let's see, Ivy rank bouncing up to 17 today. I put 6 iron condor tranches. And I think we're still, where's SPX? Boo's up 22. You should be good, Eric.
Yeah.
Yeah. You should be good.
The white one. I like it.
Mm-hmm. Jackie, I went all in on Meta at 698, possibly waiting for a while before my next SPX trade.
All in with Meta? I mean, are you bullish or bearish?
I went all in Meta today.
Meta's the only thing that's down a ton today.
Meta, it's down 650. He went all in at 698.
Take a look at the Meta chart, though. The only reason, only because, take a look at his Meta chart. Now, I have, this is a very similar thing to what we were talking about. I have long Meta shares, and I've been collaring them, collar. And what saved me is Germany.
Putting the collar on over.
Look at the date we went to Germany, and then it totally fell out of bed.
Yeah, right here. Yeah.
So I am saved by the collar. So once again, I mean, this is an interesting thing because I'm long a put, short the call. I can only lose. It's very zebra-esque, but this is a big animal because it's a $700 product.
Yeah. But you're now.
Oh, my zebra is I think it's like the 725. I mean, my put is the 725.
Right. What I was going to say, now what?
Oh, I'm done with Meta. I'm walking away. This is
okay.
I'm not trying to readjust. If this gaps back up, great. I think I've got a long time for it too. I think I put my zebras on pretty far away.
Yeah, you could take your short call off. It's probably worthless.
It was 60 cents. I actually left it because I was like,
oh, you're gonna be mad. You're gonna be mad because you know what? On Friday, I left some Oklo calls that were $2. I'm like, I'm gonna leave them. I'll get the $2, and today they're like $7.
Oh. Brutal. Yeah. Okay, fine. You've inspired me.
I buy back the 60-cent call.
You've inspired me, and I will do it right now.
Mm-hmm. Definitely.
Okay.
Okay, I just want to glance at some of our positions. Micro crude, we sold a put on Friday or Thursday, Friday. It's up 26%. Do you want to buy that put back? We had a little bit of a bounce in micro crude. Little. Or do we want to wait for more?
No, honestly, if we're going to be sitting on things for 45 days and everything else, we're going to overtrade the other stuff. How about that? Is that fair?
That's fair. We've got too much going on in this account.
And can you put I stopped at Intel. I need the 3 Archers and the Meta.
People are not going to know what we're doing. We're going to have to talk to Nikki and Mike about our new zebra strategy.
They finally started embracing our zebras.
I know. Okay, so anything that catches my eye. AI.
Citigroup catches my eye every time, but it's a false It's a false start because it's a rolled
These
zebra.
are calendars. Yeah. Just leave them. They were 2 calendars, the 105, 102 calendar.
And obviously the 105 ran off. We have 11 days through earnings, yada, yada, yada. Okay.
Yeah. Okay. AI, we have a short put. It's up 59%. Do we want to move it out in time?
Sure.
To the November.
We
looked at this before. The problem is in November.
That's fine though. You can go all the way down to the 17 and a half.
Yeah,
or you can go to the 20. Let's go 17 and a half. Take the extra. We're moving our strike by $1 as well as taking an extrinsic value.
That's fine. AI. Okay. And what do we have in Amazon? A short put spread.
We have a short put spread, and that's barely coming back. It's got 4 days.
What is this? Why did we put it on 3 days ago? Oh, because someone said Amazon was going to go up in a week. And this was what's your assumption, I think.
Okay.
I don't know.
But we put it on 3 days ago. We're going to leave that.
Amazon. What did we do? Yeah.
We just sold the short put spread.
That's it. This is the only Amazon trade we have in 60 days.
Okay. And there you have it.
Calendar and Disney, all these products we put calendars on they've all fallen from the middle, from the center strike.
Which is crazy because the market's up, and everything has fallen. But this just shows you it's a tale of two cities. You're not, don't get me wrong, SPOOs are up 23. And I do want to see the VIX has been keeping its wings up with everything being up. But it's kind of a single stock market, really, right? With certain products, single stock, right?
Yeah, just like a rotation, people moving money out of some things and into others.
No, I don't know that anything else needs to be seriously managed.
I'm just going in and throwing in GTCs.
I want to take a look at this is very, very small, but I want to take a look at our gold silver pair because I don't want to forget about them.
Oh, it's not winning.
Silver's down 17 and gold is up 10. We're down $7. Yeah.
Yeah, it's not winning. It's not winning, but we'll just keep an eye on it. I think that's something we could keep on for a long time.
Let's take a look at our SPX upside broken wing butterfly.
That also is not going to be winning because...
No, it won't be, but I just want to take a look at it because we have but look at this. We had 11 days for 67 and 80 as our short strike. That's not bad.
No, that's not bad. So we'll leave that. We're just going to leave this.
Mm-hmm.
Starbucks, we have a long in the money call, which is like stock. Well, no, where is it? Maybe it's not so...
it's the 45-day. Yes, you can see it's the 45-day with an iron condor over.
No. It's all 11-day.
No, I'm sorry. 45 days we had it on. So if you look...
Yeah.
That's how you can tell which one is our long call. I apologize. Yeah, 45 days in the position.
So, and we sold a Jade Lizard over it. It's crazy because now this call is so far out of the money.
Yeah, the call is so far out of the money. That is nuts.
I think, and maybe it was getting out of the money, and that's why we were like, well, no, just today it went out of the money.
Starbucks is down 371 today. That's a big move down.
That is a big move.
So funny because you hear all these crazy up moves. 5% move down, that hurts.
Yeah. That's a big move down. Starbucks is one of those that's at the lower end of its range, just like Target's been. I want to see, Target's another one where, it's really never had a bounce.
No, it hasn't.
I feel bad. I think Starbucks and Target were my two recommendations for the stock market club.
And then we laugh. You should have had him zinging it in Oklo and Archer.
I know. All right, let me pop back into Twitter. Ashvin, small scalp. I don't like holding calls very long, so in and out for a $20 winner.
Good job, Ashvin. Love it.
Naked positions feel so much better to me with ability to manage. Yeah.
No, I agree with you because if you're going to scalp in and out, you'd rather be long than short, right? So he bought one and then sold one. Buy to open. Yes.
No.
Yeah.
Sell to open. He sold it and then bought it. I get why you're out for a quick $20.
Yeah. Okay. Yeah. Good job, Ashvin.
All right, Eric, done for the day. Wackadoo. Taking home 1408. Great, after 1.5 hours. Thank you, Mr.
That's a good usage of 1.5 hours. $1,400.
Yeah, no kidding.
Yeah, so you're about $1,000 an hour. Good job.
Awesome. All right, we're running out low on time.
I wanted to. Okay, can we go into the crypto? Can you just hit go to trade crypto? Let's take a look at this. This is a hot topic. I mean, we don't have Dan on today, but we're gonna go into it anyway. Everything is up, right? So this is one of those where
So what is I mean, here's Ethereum.
So $5,000 is where Ethereum's top is.
Yeah,
XRP is up. But so when you take a look at percentages up, they're all kind of up. So your Solanos, your Bitcoin, everything is up if you look at percentages because the prices are so different. Do you know what I mean?
You know, it's funny, like when Ethereum hit, and I don't know how long ago it was. So let me take a look. I'm gonna go $/ETH. So when we hit, how long ago was it that we got close to hitting 5,000?
We didn't get, I don't know that we ever got that close.
Yeah, I guess, yeah. No. So it might have been August. It might have been August with like when Ethereum got high at some point, that's when I switched and like unloaded my Ethereum coins and switched it to Ether. And it's interesting because in my son's account, which is a smaller account, I got rid of his Ethereum coins, switched it to Ether. Now and that was just like long. It wasn't any kind of premium selling. It was just like long. Instead of being long Ethereum coins, it was long like Ether in the money calls. And so it's just now like his Ether position is just now back to break even because I remember at the recent high in Ethereum getting out of his coins and switching it to Ether. So it's that Ether is just coming back now because it was, and I expected it to be a loser because it was like, oh, Ethereum's bounced back up. Let's get out of this and have less risk on with just like Ethereum calls or zebras or something defined risk.
Yeah.
And that's just now back to scratch.
That's interesting.
Yeah. Mm-hmm.
Yeah, but Ether's new. So that being said, we were in Ethereum before Ether.
Yeah, right.
So yes, just a little FYI, like you were in Ethereum before Ether. Ether's new.
Right. No, it is new. But I'm just saying, it's kind of like, when we talk about the zebra, if you're just long Ethereum, that's not undefined risk where you could use a zebra and Ether and then that's defined risk.
Yeah, right. Right.
And I wonder, maybe I'll take a look at IBIT too, because I could do that new strategy against my IBIT stock.
You can do that against your IBIT stock. I think I think the problem with this was it's pretty expensive. That's why we always wind up buying.
Well, I don't know. Every time I did it, it gave me a lot of capital back.
You have IBIT in your account already, like the stock, not puts or not.
No, stock.
You're going to do us a public service announcement in your account and see if it gives it back to you, okay?
I'll see if it gives, yeah. So like and again, I didn't go out and buy IBIT stock, but I was selling like puts. And at some point I ended up getting along some IBIT stock. So instead of just having puts, I have some stock. I'm going to go do it and I'll let you know if it gives me capital back.
It's your homework for tonight, Jenny Andrews. Tomorrow when we're live from the SIBO, you're going to let me know.
At this point is that it's expensive. IBIT stock, 100 shares.
It was always expensive to sell puts, meaning it's holding up more margin. You're better off going out and buying stock.
Yeah. So I'll see. I'll let you know.
Okay. The two public service announcements I was going to make, because it's already 10:55, is that Jenny and I will be live from the SIBO on Tuesday and Wednesday this week. We will be in studio on Thursday for Red Shirt Thursday. And on Friday, I think we can let the cat out of the bag. We're back.
Morning show. We're doing the morning show on Friday. I don't think Vanetta knows yet, but once I will say, I think we're going to be dressed normal on Friday, is my guess. Unless Vanetta comes up with something crazy.
Do you watch the morning show with Jennifer Aniston and... I missed it. I got to watch it. Maybe we can get them on our morning show.
Have you been watching it this year?
No, I haven't seen it in years. I watched the first season, then I haven't seen it.
Oh, it's kind of scary. So it was kind of scary as far as, and Tony was talking about it today, like everything that's going on with AI and how they could like take you and make it look like you're saying something you never said, or so basically that's what happened to Jennifer Aniston in this series is they made it look like she said something she never said, so she could be in big trouble.
Wow. I mean, before you could edit it to make it look like it was something they never said, but now with AI they can probably do that. That's kind of crazy.
Right. Yeah. So don't cross anyone, Liz, or they're going to be AI us right out of here.
Don't cross anyone. Oh gosh. Okay. Well, Jenny, I think we're done. Let's pop out the platform. I want to make sure that pop out the side. I want to make sure I've got to everything that is pushed through, so we can we can scare the children with all the stuff we did today.
I know it all seems like a lot.
No, I think it's great. I think our viewers are smart enough to understand.
I know there might be a lot of viewers who are like, hey, this doesn't apply to me. I don't have concentrated stock positions. But there are a lot of viewers who do, who are going to say, hey, thanks, good idea.
Yeah.
Okay, so
Etha? Is it the bottom?
What did we do? Oh, we changed our long, deep in the money call to a zebra.
Correct.
Intel, we created that new trade.
Love it. So yeah, and that goes in as 2 because it goes in as a married stock position and a spread. So
it's funny because a zebra is synthetic long stock, but now this is the synthetic zebra.
It's funny. Okay.
It's not a joke. I'm not telling a joke. Okay, then Mike recruiter bought back our put.
It's a derivative of a derivative of a derivative. So there you go. Okay.
AI, we rolled our put. That's about it.
So Archer, we have 3 Archer positions, right? Because yes, you went in with 3. Okay.
Well, we had a short put. We closed that, and now we have the new.
You know what I don't have, Jenny? AI.
Oh,
that's the one thing I don't have. So I have the micro. There we go. Okay, good.
Okay, and we're out of time.
Yes,
Liz, have a wonderful day.
Thank you. I will see you tomorrow on the train.
Everybody out there, remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and, of course, Ryan. It is Crypto Monday, and crypto is a-mooning, which you just love to see. If you want to join us on the YouTube channel, we're streaming live there. Just pop over to the Tasty Live channel, throw in your trade ideas, questions along the right-hand side chat. I'm going to put the Tasty Crypto newsletter in the chat right now. But yeah, how was your weekend, everyone? We were just talking about the football games and how they were just absolutely insane, especially the afternoon games. They were just like every single team scored 30 points or more in the afternoon.
I didn't get to see as much of it as I wanted to. I was at my kids' football game. We're 6-0, by the way.
Hell yeah.
Ooh. Yeah, we're kicking ass. But yeah, wild games, man. I mean, just wild games. I mean, we were talking about the Carolina and who'd they play again? I forgot. The Carolina, Miami, right?
Miami, yeah.
Miami, yeah. I mean, Miami was up in that game. They lose that one. That's just wildness. I mean, I don't want to, but I have to. I mean, you guys, your Buffalo Bills, there's a difference between giving away a game and getting beat. I mean, they actually played you guys pretty tough last night.
Oh, absolutely.
I wouldn't have expected that, but it's a blip on the map. I mean,
I think in the NFL too, right? You can't turn it over one, and you just can't have 100+ yards of penalties.
You need that game, though, right? I mean, if you're undefeated, you need that game.
Yeah, and it's a divisional game.
Yeah, and Philly loses a game. Philly was up in that game, weren't they? Weren't they up like? I think they were up in that game.
Oh yeah,
I thought, and they lose.
They
that
should
one.
have absolutely won that game.
Yeah,
I was thinking, I'm like, I wonder what the odds were for Denver to bet Denver live. It must have been at like plus 4,000 or something like that because they were down 2 touchdowns, and it's Philly. Like,
Bo Nix wasn't having a great game neither.
No, but Denver's legit.
Yeah,
good for them.
Yeah, it was that week in the NFL. It felt like
the bets didn't hit for me, at least. Next week.
Hey, we had no pain. The Bears were on bye. It was perfect.
It was perfect.
It's just amazing.
I did have a rough college Saturday. I thought Texas was going to win. I thought Penn State was going to win. And I think I had another team in there. And, the first two just really did not do well. And so that didn't go well.
College has been tough, and I wonder if it's due to the transfer portal. It just seems like the consistency that you were used to in prior years isn't there. All the teams are evenly matched. You get an 18 versus a 3, and it's just upset central every weekend. It seems like. I don't know. It's been challenging for me. I'm just not very good at this.
The teams, yeah. The just because you have a 1 or a 2 or a 5 next to your name doesn't necessarily mean you're going to dominate the game. I would say you're right.
It's fair. We get a nice game tonight. Kansas City, Jacksonville. I think it'll be fun.
What's the line on that game? Double digits?
It's like 3.5, 4.5.
Is it in Jacksonville?
Mm-hmm.
I mean, if it goes the way the rest of the weekend is going, you should be betting on the Jags, man.
This is the week of upsets, that's for sure. Quick market update. E-minis up 24, NASDAQ up 200, Bitcoin up 2,200. Bitcoin futures reaching new all-time highs at 126.4 was the high today. But we've just had 1, 2, 3, 4, 5, 6 big green bars in a row. Over the last 6 trading sessions, we've gone from 110K to 125K. On the way to $1 million. Lot of bullish stuff going on there. Even Ethereum seeing actually a much bigger rally today, up 164, 3.5%. So yeah, everything else kind of moving in lockstep with the market. You've got some other big names moving around. Natty Gas up 2%. Gold and silver continuing the charge. Gold is at 4,000. Like what is happening here? Is this going to 5 like this week?
Which one?
Gold.
I was just about to. I'm curious, and I was just about to. I gotta ask this question in the chat, and I'm curious if you had to get long one right now, and again, because I think the charts are really interesting, both of them in unique ways. If you had to get long one right now and stay long for the next 24 hours, if it's gold or if it's Bitcoin, which one would you do?
Bitcoin.
Man, the relative strength has been, I mean, up until recently, has been in gold. Just for the next 24 hours?
Yeah.
Yeah, I guess I'm going to lean on the crypto side of the market naturally, but just given I think you still have a little bit of catch up here. I mean, gold has been leading. I agree. And I do think, again, we talked about, dollar strength and rates and that coming into play here. The dollar weakness maybe is starting to kind of, I don't know, putter out a little bit. I think you could see some strength there that could weigh on gold, maybe more so than Bitcoin at this point. But similar drivers, I just probably would stick with Bitcoin after this move.
This might be a landslide poll, but we'll see.
Yeah, both doing really, really well here. GDXJ too, outside of just gold, when you get into the miners, get a little bit more leverage, I suppose, in that sense. Also just ripping. Silver, platinum, copper now, Jamal, everything.
Why not?
Yeah, copper. I mean, like you said, like copper, we talked about last week, it's even joining the party after really just having no liquidity and being a tough trade. All of a sudden, it's back again. And then gold as we speak. I mean, it's mooning. I feel like it's just run like $20 in the last like 10 minutes here. I mean, it's really made a move.
Yeah, we've got interest rate cuts on the horizon. The government is chilling. Last week we looked at the prediction markets, and it was like 30% or 40% betting on October 15th or later, and the rest was within this week to next week. Now we're looking at 72% that this government shutdown will last past October 15th. Only 24% for next week, only 5% for this week. What we've shown with some of the data we've looked at is that the longer this lasts, the worse it tends to be for the U.S. dollar, and the markets continue to grind higher, especially now in this low vol environment. So we shall see. We shall see.
We shall see.
But all signs point to another week and a half or so of government shutdown at least.
If we're going to get this type of action with the government shutdown, the market's drifting higher, a few things here and there where you can sell vol, big moves from names like AMD, because of deals. If we're gonna get that, I'm fine with it, honestly, because it gives you so much to trade. Everything's not the correlation. I think is. I feel like there's not as much correlation, right? Like things are sort of trading on their own. I think it's nice when that happens. When we have high correlation, obviously volatility is a little bit higher, and it's just it's more of a downtrend. It's a little bit harder to trade that environment versus this type of environment.
Yeah, even though you have relatively low levels of volatility, it's not that just persistent grind lower in vol. And then when you look at, let's say, sector performance, there's some dispersion as well. So you have opportunities, right? I mean, you have this market where it seems to reflect kind of pro-growth, inflation up, asset price inflation up. You've got tech doing well, energy starting to catch a bid. On the other side of that, real estate underperforming here. Staples have been relatively weak against that. So there's different things that you can kind of bounce in and out of, to your point, versus it's everything's just going one way.
Yeah. I see you've got crude oil pulled up there. I've got...
We're here. I mean, like, I literally just pulled up crude.
Well, I mean, they've got your platform up on the...
Oh, yeah, okay.
So I can see that. But yeah, some bigger moves in crude recently, too. You're seeing some of the futures fly. So, yeah, love to see the continued two-sided action. But yeah, the E-minis, when you look at SPX implied volatility for the rest of the week, we're looking at 60 points through Friday, which is basically nothing, all things considered.
Do we think things change if they announce a deal? I mean, do we think, there's a few, like you said, there is some dispersion right now. Do we think there's not that? Do we think correlation changes? I do wonder about that. I wonder. I have no idea, honestly. And I don't necessarily have a reference. I mean, when I think back to 2018, I don't remember anything majorly changing once they announced the deal, but...
I think we've gotten so used to these government shutdowns, these debt ceilings, that going back to what you referenced, and even prior to that, when you first started to have these discussions around, you go back to like the Republican GOP Tea Party and the debt ceiling fights back like probably 2011 to 13, 12, somewhere around there. I just think we've gotten so used to it that it's, I guess, less impactful. Certainly in this environment, we're probably front and center. It's like Fed's cutting rates into what seems to be a pretty robust kind of economic environment. Now, there's an argument on the labor side. It might be a little bit shaky. We didn't get the NFP number due to the shutdown. But just generally speaking, when you look at globally what's happening with economies, where you look at where the U.S. is, seem to have inflation and growth kind of ticking higher, and the Fed's cutting into that. And I think the analog for that is like 1998. So it could go on for some time.
Craziness. But yeah, betting markets have it another week and a half, 2 weeks at least. So yeah, we'll see.
What was the AMD news today?
Good question.
A deal with OpenAI, some 6 gigawatt chip. I don't know what the hell it was. I don't know. I don't know. Have you seen these memes where they keep showing like? Have you seen these memes?
Sure, it's wild. Reset.
These memes where they have a power strip, and it's like the plug from the power strip plugged into the power strip. It's like the way they keep showing the money that goes from these companies, the OpenAI to the other one to to Oracle, back to OpenAI, like. I honestly don't know. That might make, if there's one thing that makes me a little bit nervous, it is that, I do believe in the AI story, but I don't exactly know how these deals are working, if that makes any sense. I don't really care. I haven't investigated that much. I really don't care in a way. I don't care about his news as much as I used to once upon a time when I traded. Unless the reason I ever really cared about news, and again, this goes back to when I was trading at prop firm, is because I had massive positions in some names. And so you do care about that news. You want to know. If I have a one lot, I'm not really as concerned.
Yeah, this is insane. It's a crazy move, though. You look at November options, they were trading for, like the 200 strike was trading for $300 yesterday. Now it's trading for $3,000. Insane. But yeah,
I saw the strangle in here. I might be crazy, but this is a scenario where I talk about, I know there's earnings vol, but I feel like with this move, you just got vol on top of the earnings vol, and I think you're able to harvest it. We'll find out.
Yeah, 20% increase in the 5-day IV change. So definitely getting some implied volatility infused into this gigantic move for sure. But even still, realized move 28%, implied vol increase 21%. So you're seeing the actual move outpace the infusion. But yeah, if it chops around here for a little bit, you could see this come down from the 70s back down to like the 50s-ish. But yeah, that's that on that. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. Why don't we get to, 58% in your little poll here. 58% would also choose Bitcoin. You can't say gold when Ryan's on the show. I
think you can. Look, I've been long gold up until recently. I don't have a position right now, but I've been in GDX, GDXJ, some of the miners. Been trading around, not so much gold related, but trading around, if you guys want to go outside of crypto at some point. A lot of these, I guess, it could be like the uranium play. Yeah. The larger theme is AI power, which I think should take us more into natural gas, which we can talk about, and infrastructure plays there. But as you guys know, been a ton of vol in some of these small scale nuclear reactor names that aren't exactly profitable, but hopefully have some revenue streams, seem to be on the horizon. At least there's some trading opportunities there.
Yeah. A lot of people are moving towards those small scale nuclear reactors because something has to power the AI boom, and nuclear power, when harvested correctly, can be cheaper, sustainable, more green than other products. But yeah, what is your favorite, let's call it crypto adjacent product? Like you mentioned uranium, natural gas. Like what are you leaning into the most?
In terms of what I've been trading right now, I've been trading CCJ, so that's Cameco, that's a uranium miner out in Wyoming. kind of been on my radar really since I was doing the show with Victor a long, long time ago. I think the stock
I was going to say that.
$18.
I remember that. I remember that.
These things take a little while to play out.
We were in the little building over there. I remember.
Yeah. URA is an ETF. It's going to give you exposure to a handful of these related names. Look at the weightings of the different holdings to kind of get a sense of what's driving the performance there. There are some Sprott is the company, Sprott minor ETF. So you can, just like with gold, you can have exposure to a broader basket of uranium miners and also junior miners, so a bit more risk and volatility there for sure. And then the small scale nuclear reactors definitely have popped up more recently here. Extremely volatile, SMR, Oklo, which I know everybody's been trading. But I think the other way to look at this is, well, certainly that's the direction that it's going in over time, and I think that new administration here is helping to kind of spearhead some of that movement. Like, these data centers are being built right now. You are seeing some issues with kind of grid capacity or just issues with power on the East Coast. You're going to need a bridge in the near term, and I think naturally that takes us to natural gas. And so when you look at some of the stocks there that would give you exposure, one way you could do this is just through some of the energy ETFs, the industrial ETF XLI or XLE. I think that's a broader way to express the view around the theme. But you actually have some of the infrastructure plays, Williams companies, I think it's WMB. You have General Electric, GEV, General Electric, Vernova. If I'm saying that correctly. There's turbine plays here. There's the infrastructure play here. So I think that's another thing to just keep on your radar. And look, the market has been well ahead of this. The prices all look the same, whether it's small-scale nuclear reactors, uranium, or natural gas infrastructure plays. What's the fair valuation? I don't know. But, that's definitely the theme. And so if you see continued demand for it, we should, probably see these at higher prices in the future. Now, is that 1 year out, 2 years out? Maybe it's not tomorrow, but that's also on my radar.
Love it.
URA 90 IVR, pretty interesting, honestly. I hadn't really looked at this one. I think if you can find, ETFs, regardless of how volatile the environment is, if you can find an ETF and you can sell some vol in there, it's probably not a bad idea. I'm looking at the strangle in there, 45.59. It's kind of nice. Everything you said also made me think of a question. The last blackout, if I wonder what happens if we have a blackout in the U.S. It's been a long time. I had to look it up. And I remember this one. I don't know if you guys do, but it was August 2003 was the last major blackout in the U.S. And so I wonder what happens if we have a blackout. Does that make uranium stocks go nuts? Like, we should be more on uranium now, and, that kind of idea. I wonder. It's something to think about.
I think there's a trade there. I think you want to be long this stuff for that catalyst. Hopefully it doesn't happen. But, that's the direction that it's going in, right? When we look at just the constraints or the drain on the grid, and you have all these issues with the grid, and we've seen some of, the shortcomings or the results of even just the impact that weather has had on the grid in, say, Texas, for example. We have to do something differently. And I don't think that it's going to solely be renewables. They're going to play a role. Solar's going to play a role. Wind's going to play a role, right? But it's not going to be enough. And I think that's where nuclear over time makes a lot of sense, and it's a lot safer. It always has been a lot safer, but it gets a bad rap, and certainly post-Fukushima, people were afraid of it.
Yeah, that, and again, another one I remember the Chernobyl disaster. That was 86. It's funny because now I'm the old dude. I hear Tony saying this shit when he's been on the show. I remember last week, Tony said, yeah, I remember 10 Mile Island. Dude, that was 78, 79. Nobody remembers. None of us remember that. But I do remember the 86 Chernobyl thing. And so it's interesting now that nuclear power has become more of what it is. Obviously, over time, you figure out how to deal with things. But it's you can see it in these stocks. You can see the movement. We talked recently about groups of names moving. Uranium is definitely one of those groups right now.
Yeah, I can't say I remember that. I was just an idea during the Chernobyl. And our boy Glenn, he was years and years away from even being an idea.
Dude, listen, 86 was not really a good year, okay? Chernobyl, the shuttle disaster, it was really not. It was really not.
Yeah.
It's no wonder I messed up.
But yeah, it's crazy how you have a couple of events like that. Obviously they're massive events, but I feel like right now we're finally, the last year has been the only time that I can think of where the public perception of nuclear energy has been positive.
Shifted for sure.
Yeah. All right. Let's pop over to the slides. Let's get a little crypto update on this fine Monday morning. But yeah, this is the second week we've had you on, and crypto hasn't stopped rallying, which is great.
It's October, my friends.
Yeah. Oh yeah, I forgot.
So we'll talk about seasonality in the crypto markets here in a little bit. I've got some slides to possibly put some context around things. But yeah, it's bullish out there. A lot of green on the screen. If we just flip over to our performance dashboard here, we've got our what we'll call crypto majors. So these are the larger market cap tokens. And as you can see, price momentum, which I measure just via exponential moving averages. It's a way for me to stay on the right side of the trend over multiple time frames. And when they're all lined up, I feel pretty confident, whether it's selling puts in the ETFs or it's just staying long and staying on the right side of the trend. For most of September, we had a sideways chop until kind of the end of the month. September historically has been a bad month for crypto in terms of one of the few outperformers on a 10-year look back. But all of that daily price performance or that momentum that was negative has shifted to positive for these larger market cap tokens. And you can see it playing out in the market. A little bit of catch up to gold here. Bitcoin, new all-time high. ETH, not yet there. Solana's trading well. Ripple, you name it. They're all trading much better than they were last month. And you're starting to see a little bit of a broadening or continued broadening of that outperformance versus Bitcoin. So I wouldn't call it altcoin season just yet. There's a lot that's still underperforming, and I don't think we're in that kind of full-blown like blast-off mode that we've discussed. But outperformance year to date when we look at Bitcoin Cash, BCH, XRP, ETH is trading better against Bitcoin, but Bitcoin's still up 34%. So if you've just been long Bitcoin up until this point, I mean, that has really been the trade. But again, we're starting to see a little bit of an outperformance. Volatility ticking a little bit higher here too, but nothing to write home about. If we go to the next slide, you'll see that, again, the smaller cap tokens that we do track, at least relatively speaking, smaller than Bitcoin, starting to trade a bit better as well. Price momentum shifting in some cases to positive or to bullish, into neutral territory for a lot of these out of that bearish period that they've been in. So things like Cardano, up 50% in the last 3 months. One I will highlight here that's interesting when you look at the chart, possible breakout underway. Aptos has been a pretty poor performer, and that's APT towards the bottom of the screen there. Just jumped almost 30% in the last week. Well above $5 now, is trading closer to $4.20 or so. So you can see most of that monthly performance coming in the last week here, and really the last 3 months. So year to date versus Bitcoin, and this is where there might still be some trading opportunities. You have a lot of these tokens that have just had a huge pop, and granted, they are very, very volatile at times. We're talking about something that's $5 could go to $10. Has been, I think, closer to 10, 12 at one point. But it's down 72% versus Bitcoin. So there could be a lot more room to run if you're a momentum trader, you're looking for some of these breakouts. And that's something that I would keep an eye on. Aptos is one that has popped up on my radar recently. And then just jumping to some even smaller market cap stuff. This gets us more into kind of meme territory when we look at things like Pepe, some of the other underperformers here. Also starting to see a little bit better performance from a momentum perspective, kind of out of that really bearish territory, kind of chopping sideways now. So we'll see. Maybe there's a bottoming that's ongoing in a number of these. But my attention and my focus would definitely more so be on the top three, things like Bitcoin, Solana, Ethereum. But just generally speaking of the tokens that we track, everything's trading a lot better, certainly a lot more bullish out there. But again, sticking with Bitcoin, that's making new all-time highs versus some of the alts. Maybe they play catch-up. Maybe ETH gets to 5K, and that's a new all-time high. But really long and sticking with Bitcoin has been the trade.
Yeah, I think when we look at Bitcoin dominance over the lifetime that we've had this show on Mondays, it's still been, even at its lowest point, it's been 50% or around there, where its high has been around 60, 65. So. And you did see a rotation from Bitcoin kind of into Ethereum, into that huge pop from sub 2K to where we are now. But I think if you're trying to pick these ones, it's a lot harder than to just invest or trade Bitcoin, Ethereum, and Solana?
Yeah, that's how I think about it. Long-term investment in the larger market cap tokens, I might trade around that position. And there will be trading opportunities at times, shorter-term opportunities, I think, in a lot of these smaller market cap tokens. But I tend to kind of lean on the bigger stuff. If you jump to the next slide here, to your point, Mike, Bitcoin market cap dominance picking up a little bit here, still close to, not quite, but close to 2/3 of the market at almost 60%. ETH BTC has traded a lot better, as you mentioned, over the last 3 months. Solana versus Bitcoin up 37% in the last 3 months, but still short term, we haven't really seen that breakout versus Bitcoin. Solana kind of going back and forth in terms of outperformance versus ETH, but right now we've got more neutral momentum there. You can see it's up about 7% versus ETH on a 1 month though. And then keeping an eye on Doge as a proxy for the meme coin space. In that stage in the market that we've historically observed where it's altcoin season, it's blast off mode, as we like to refer to it, where the crazy shit happens, you can just see these massive rips. So we'll look at Doge priced in Bitcoin as kind of an indication of that, trading a little bit better, but again, price momentum has not flipped bullish there just yet. So we shall see, but Bitcoin again hitting a new all-time high here today. On the next slide, we've got to look at volatility, which when we look at these one standard deviation moves, and these are just weekly expected moves based on either the implied vol or the realized vol on the spot price for the tokens, what do you want to see? You want to see a series of higher highs and higher lows in those implied ranges, and that's very bullish. And so when we look at Bitcoin, market is pricing in on a 1 week basis, within a one standard deviation move, almost 132 on the upside and 118 on the downside, serious higher low there. ETH looking for about a $400 move, takes you to just about a new all-time high, right above a new all-time high here at over 5,000. And then Solana, same thing. So we're seeing the options market in terms of volatility start to price in, a more bullish environment as well. One thing I will note is XRP vol, given how it's traded historically, it's very low right now at about 40% realized on a 30-day basis. So you got a much smaller move there that can change in an instant, as we know. But those are the expected moves. And that's a look at performance and kind of the overall market dashboard.
Love it. Yeah, XRP, when you look at a daily chart, really narrow range, shockingly narrow range over the last 2 weeks, kind of banded between 2.8 and 3.2. What do you make of that? Because XRP obviously has had a big run up from the beginning of the year, starting around 2.3, 2.4, now sitting at 3 on the lower end of the range after skyrocketing to almost just above 4. Do you expect this is this kind of like a churning of the current price?
Yeah, I think, you see with many of these tokens, you have these long periods of consolidation, and then there's a catalyst that possibly brings in new money and, also brings in a lot of levered positions. And sometimes too, what exasperates some of this volatility is that in the perpetual futures market, those shorts just get auto liquidated and you get these spikes and you kind of consolidate within these new ranges. In terms of catalysts, there have been some changes to the SEC's approach around ETF approvals, and that was, I believe, mid-September, so kind of quietly, maybe under the radar. October is the deadline period for a handful of ETFs as well. So 2 things here. Going forward, given the changes to the approval process for commodity ETFs, which digital assets fall within, it's very likely that you see faster approvals for a variety of different ETFs. So you get all sorts of crazy levered ETFs that possibly could kick off some yield via derivatives positions, whatever. But generally speaking, all of the ETFs where the applications went forward and then were kind of kicked down the road, those deadlines, I believe, come up here at the end of this month. So it's possible that we get a decision around Solana ETF, an XRP ETF, and a handful of others. That could be the catalyst. But I think with a lot of this, right, it requires new money, where in this market, given the finite size of it, or the small size of it generally speaking, it just kind of sloshes around. Then you have the ETF approvals, the institutional capital goes into things like Bitcoin, and we're seeing more signs of it today going into ETH, but it's not necessarily piling in to something like XRP. So maybe when you have an ETF. I don't think that the flows are going to look like they do for Bitcoin, but that could help and catalyze some movement to the upside. But again, I think that's the other reason why, ETFs like the ETH or IBIT are kind of big sponges for new capital versus it going into a lot of these other tokens.
Yeah, and speaking of IBIT, ETH actually pretty big volume today, 28.8 million shares, but we've consistently seen IBIT exceed share volume relative to SPY in the NASDAQ. Right now, we've got 37.5 million shares traded today. SPY, you got 27.5. Qs, you've got 21. So IBIT leading the charge in a big way in terms of tradable products today. And it doesn't really surprise me considering the E-minis and NASDAQ have basically gone nowhere over the last couple of weeks, where Bitcoin has had a big move to the upside. So there is more velocity and volatility there. But just something interesting to call out. I see this like every morning, it feels like, where IBIT leads the way, and then later on in the day, maybe SPY and Qs catch up.
Yeah, I mean, part of it is the cheaper price point, and the other part is, it was just kind of hanging out, drifting, right, for a while there. It just seemed right for a catch-up, and I think finally the market helped it catch up here compared to SPYs, compared to Qs, right?
Yeah. I think when it comes to IBIT and ETH, like you said, really digestible price points. You can do a lot of different things in there, specifically with options. ETH 70% IV rank with a 80% IV, that's nice. And then IBIT 46% IV rank, but 55% IV. The bottom of the barrel in IBIT that I've seen is like in the high 40s. So even with a lower IV rank, you're still getting plenty of premium relative to the stock price. I'm right in the middle of the range here with this strangle I've got on, the 65.75. But like I've said, if we do continue this rally up to 75, I'll just shift this whole thing up. So I'll move my 65.75 up to a 75.85 or something like that, and just lean long perpetually. It's been fun. It's been quite the ride.
Oh yeah. God, there's so many different things to trade right now. Like that is one where I just took a zebra off. That was the second zebra I had in there during this move. Both worked out well. And now I am looking at a strangle in there. But I got to find something else to close because I got too many good things on right now, it feels. But I am definitely eyeing up a strangle in there.
Yeah, I actually don't have anything on an ETH.
Same.
Maybe throw something on in there. 30-40. It does use a little bit more buying power than I would think, but you could just go and buy these wings. Do something like that. Or just play for a continuation ripper. But yeah, I think I want to get long in there considering the buying power requirement. I think I want to get long if we sell off a little bit. But yeah, a lot of realized volatility in there, implied volatility, what have you. Any other things you've got your eye on?
Well, I'm looking at crypto market seasonality through the lens of Bitcoin. I've got a couple slides if you want to take a look at that. And I think one more maybe important headline, I suppose, to mention is that the Grayscale Ethereum Trust and exchange traded product or ETF that they offer, they've decided to move forward with staking the Ethereum and passing those yields on, or those staking rewards on to the end user, the investor. So I think you probably will see this from others. I don't know if this was something where they had to wait for the SEC. I didn't see the announcement related to that, or they might just be moving forward with it in this environment. But that's a big deal. And I think that's the other thing to just kind of key in on, right? Like, you need new money to come into the space, and it needs to be from much larger participants, generally speaking, to kind of see this market cap of the entire crypto space rise. And new products, even though they're not necessarily kind of crypto and the decentralized nature of it, that should bring in new money into the space. And so I think that's going to be a catalyst where you're going to get a lot more of these different exchange traded products and different ETFs that'll give you, or as an institutional investor more so, give you access to some of these tokens or different parts of the market maybe you wouldn't otherwise be going into.
Love it. Yeah, I think that would only incentivize more people to get involved, especially when you think of like the dividend investor, where once you see something like this where you're getting a yield from it, I think it opens up a whole nother realm of people that are willing to participate in it for sure.
Great.
So if we jump back to the slides really quickly, guys, this is kind of fun to look at. We joke about it being Uptober, and what that refers to is the month of October has been by far, on a 10-year look back, it's been the best performing month for crypto, for Bitcoin, I should say. Let me clarify, for Bitcoin. We always kind of use these interchangeably, but looking at Bitcoin here. So Bitcoin seasonality, you're looking at average monthly returns over the last 10 years. And you have to consider that, at one point 10 years ago, the price was a lot lower than a six-figure value here today. So you can get some much larger swings, of course. But generally speaking, September is a period of underperformance, and we see that more so. You have more underperforming months in the last 5 years, which we'll look at in a second. But October, on average, has been up about 20% over the last 10 years. So Uptober, Q4 tends to be, for one reason or the other, one of the best periods to be long crypto. So if we look at the next slide, we look at the last 5 years here, you'll see you get a bit more volatility throughout the year. But again, that Q4 performance tends to be a good time to be in the market. We're looking at 17% for October. So still Uptober, and if it plays out in the same way historically here, if it rhymes, the beginning of the year tends to be a pretty good time to be in crypto as well, throughout the first quarter. So we could have who knows, another 3-6 months of decent performance ahead of us if everything holds up. And, I think that's true of equities as well. But wanted to look at this because you're starting to see the headlines around Bitcoin seasonality, around Uptober, and coincidentally, the start to this month has been an absolute ripper. So, maybe there's something to this. That said, what I think is more important is looking at what's happened during those Q4 periods over the last 5 years to put a little bit of context around this. So if we jump to the next slide, I want to look at intra-month drawdowns over the last 5 years to hopefully give everyone some sense of, what could you see? We get very used to these big moves or this volatility at times, but within a bull trend or a bull market here, if we're looking to buy the dip, what might we expect, right? Is it 5% down? Is it 50% down? Like, what have we typically seen historically? And in these markets, historically, you've seen some of the larger drawdowns around 30% on a monthly basis. Now, that doesn't mean that 30% is it. You could see that evolve into a 40, 50% drawdown. We saw that in 2022 when FTX collapsed. Probably the worst, I think, situation for the crypto market, but down 30% in November 2022, down another 13%, depending on what closing prices you use. You could probably get an even larger number. But when you look at pullbacks in the market, on a monthly basis, they've come to the tune of around 30% at the worst, but generally speaking, I would say, probably between 10 and 15%. So if you're looking for a pullback, it wouldn't be out of the question that you get a 10 to 15% pullback here. Just looking at the last 5 years of data and looking specifically at the fourth quarter, which tends to be the best performing quarter historically. On the flip side, if we look at what are some of those upside moves that we might come to expect, and again, you have to consider that these prices in terms of the underlying spot price are all over the place, but it's not out of the question to see a 30 to 50% move, though they are much less frequent than, let's say, your 10 to 20% upside move, which again is in line with what we typically see on that quarterly basis or what we've seen on a monthly basis on average. But the last time we had just an absolute crazy month to the upside was in November of 2024. Price of Bitcoin went from about, if I recall, it was about 60-some thousand to about 90,000. So about a 50% move in terms of the price. So I don't think it can go up 1,000% in a month, clearly, but if you're looking at how do I maybe time this market, what can I use as a potential roadmap or framework for that, maybe looking back helps, right? It's not indicative of what's going to happen in the future, as everybody knows. But with the data that we do have, you look at the last 5 years, Q4 has been a pretty good time to be in the market, and this is what we've observed.
Wow.
Yeah, the 2024 move, we were at like 40K, jumped up to 65, almost 70K in a matter of 4 weeks. So,
well, that was
big
the
move there.
the real excited nature surrounding basically the change in government, right?
That's
And
right.
What was about to happen, and a crypto friendly government was on the way in. So definitely, because honestly, when you look at it, I mean, 2020, 2021, those time periods, you see the big bars there. I mean, those were times where obviously the adoption wasn't what it is now, and you can see the calm outside of the November blip, right? Big move there. So. It reinforces what we were talking about, how last week, literally, how things have calmed down in the crypto space, right? For the most part, like these 50, 60, 70% moves haven't happened as much. Not to say it can't, but I just think it's calmed down some.
Yeah. It's been up and to the right with lots of volatility, but that's why you got to love it. I mean, Ryan tells us all the time, like there's times where you consider getting in, there's times where you consider hedging a little bit, maybe rotating out of something, rotating into something else. But that's why it's so important to look at the relative strength compared to Bitcoin, because that's when the opportunities really kind of show themselves. Like when Ethereum was sub 2K, we were talking about how the ratio of Bitcoin to Ethereum was at 5-year lows, essentially.
Mm-hmm.
So if there is capital that flows in there, what does that look like for Ethereum? And you can paint this picture, especially when you relate it to Bitcoin or weigh it against Bitcoin, which has been so dominant for so long. It starts to open your eyes to other opportunities that come about just because of the divergence from the ratio, sort of like a pairs trade in a way, where you're looking at Bitcoin's move relative to others, and then you weigh the total liquidating value of everything, and you can sort of paint this picture.
There will be a time to get out, though. I don't think, obviously, after I say that, I don't think it's today. But I think, what is helpful for people is just to try to gather some insight from a handful of different indicators. You talked about relative strength versus Bitcoin, but even just looking at RSI as an indicator, looking at when you're in, historically overbought conditions. Let's call it above 80 on your RSI if you want to use that. I don't know how much weight you guys put on technicals and kind of go back and forth there, but I think some of these things are kind of helpful, right? Another way to look at it would just be, all right, what's total crypto market cap? Now, this time could be different, but generally speaking, I think you're going to see, as we have in terms of magnitude of returns, you have diminishing returns here. And so this cycle, could crypto total market cap double? Maybe, but it's not going to do what it did last cycle, because now we're talking about something that has a multi-trillion-dollar market cap. So it's unlikely to go up 5x, 10x. But could total crypto market cap get to 5-6 trillion? Right? That would be one thing that I would have on my radar. I would look at RSI. I would look at if you want to use Bollinger Bands, or you want to use moving averages and how far they kind of extend from one another, or how far the price is from an average price, could give you some sense of when you want to take a little bit off the table. Because the last thing that you want to do in this market, when you have the size of the gains that some people get, just depending on when they've been in the market, is you don't want to stay too long. You don't want to be greedy. We were just talking about, okay, it went up 50% in November into the election. And then shortly thereafter, hit an all-time high around 110, 112, somewhere around there. And then by April, had pulled back to 75. And if you didn't take some off the table, whether it was at 95 or 100 or whatever, maybe you timed it perfectly, you're really kicking yourself at 75. And you can buy back in at those levels. Now, that just happened to be where it bottomed out. But you need to trade this. I don't think you go to 0% Bitcoin in the portfolio. But if you have some gains, I think it's prudent to take some off the table. Maybe at all-time highs, maybe it goes to 200,000. I don't know, but if you've been riding this from 75 and you got it up to 125, it's not bad.
Yeah, and we've actually been using Bollinger Bands for a Tasty FX platform, just looking at pairs, finding relative extremes. But yeah, I mean, anything that's visual that helps you make a decision or just gives you context around the move, like the recent move we've had in Bitcoin futures is basically breaking out of the upper bound of the Bollinger Bands if you just look at the default settings. But there's been plenty of times, and this is the beautiful thing about two-sided markets, where you've had plenty of times where it's reached or exceeded the upper bound. You've also had plenty of times where it's reached or exceeded the lower bound. So even if you were just trading on that, getting in and getting out at those points, you've had a lot of opportunities to take profits and get in at lower prices, even just the last year where I'm looking at right now.
Ooh, do Ether.
What's up?
Do Ether.
Yeah.
I think I want to get longer too. I was just thinking about since you said it, and I was looking at it, I think I want to get longer. I think that's going to be my next zebra play probably.
There you go. Yeah, I mean, the nice thing is it's still super small, $35 if you go to ETH. So you can do anything you want in there with a small account. All right, beautiful stuff.
Yeah,
is
man.
that it for the slides?
That's it for the slides, guys.
Sweet. Awesome. Thank you for that.
Yeah, great stuff.
Love to see it. I'm going to pop over to the YouTube chat, see if we got any burning questions. Bollinger Bands? No, I use a Ouija board. That could work too. Hey, whatever
works.
Yeah. If you have spirits that you speak to or they speak to you, as long as you're making money from it.
Lunar phases.
There you go. There you go.
Dreams even.
Yeah.
Yeah.
A dream can be
Sometimes it just
powerful.
comes to you. You have that instinct, that intuition.
Yeah. Speaking of lunar phases, isn't there supposed to be like a giant moon or something today?
Oh, really? I hadn't heard about that.
Yeah.
What, like a super moon or something?
So, yeah.
Oh, really?
Super moon. That's
Isn't that what they call
the
it?
giant moon.
Moon phase? I don't know. I hadn't heard that. Yeah, that's boy, what does that say for the markets? I'm surprised there's no articles on that shit yet. I mean, is it yeah, full moon, 99.7%. So they basically have a full moon. Yeah.
I'll check it out.
Harvest moon tonight.
There you go.
That's what it is. Harvest moon at 10:47 p.m.
Oh yeah.
I'm guessing.
I mean, that harvest moon is
Eastern?
usually looks gigantic.
Central time. Yeah, I think you're right. Yeah, it's a full moon, but it's a harvest moon. Whatever that means.
What other indicators do you use?
I use RSI. I use exponential moving averages, which I think we have on the charts at times here. You go back to early Tasty Live days. It was called Tasty Trade at the time for everybody that's been around. And I love this indicator that Steve Miller, Slim, came up with, which is the Slim Ribbons. And it just gives you, that momentum view of whether you're in bearish, kind of neutral or positive bullish price action momentum. And that just is going to measure exponential moving average crossovers. And then we apply that to different time frames. That gives me some signals. So I use that. Use volatility, right? The vol, and look at average trading ranges. Try to come up with, I have a variety of different models, and not things that we use on the show here, but essentially give you a trading range based on some of those inputs. But I think the way that we kind of simplify it is to just look at the spot price and the implied volatility, and at least you get a one standard deviation move. You get some idea of what's realistic, I suppose. And then one of the ways you can use that too is, depending on what's happening with the volatility, if we see that volatility is starting to contract and that price is kind of staying where it is or moving lower even, and the range that's expected is starting to move lower, that might be a bit of a sign too. Versus, okay, I've got volatility ripping higher, price ripping higher, and the expected move is indicating a series of higher highs. As we know, there's typically a positive correlation between vol and price action in the crypto markets. At least there has been historically. So that's an indication of, are you still in this very rip-roaring bullish environment, or is it starting to slow down a little bit? 90-day moving average, to just try to stay on the right side of the trend is another indicator that I look at. And then what I'll also measure, one last thing I'll say, is I'll measure, how far away is not only the price from the moving averages, but are the moving averages from themselves over these different time periods. Because at some point, this just gets too extended, and you could look at that from a volume profile perspective as well, right? If most of the trading activity is occurring around a certain price where the market is generally in agreement from a supply and demand perspective that is, a fair price, then when it gets outside of it, not that it can't trade, not that Bitcoin can't trade to 200,000, but over what time frame and where are there buyers and sellers, I think is a good indicator. So there's a lot there, but I go off of that, and then whenever there's a big ass moon.
Yeah. Hey, that's today.
Get your trades in, folks.
Yeah. But yeah, you've talked a lot about staying on the right side of momentum with these things, given the nature of the market. So that speaks to the moving averages that you talked about. What are the three? Is it 7, 14, and 21? Or is it?
I think it's 8, 13, and 21.
Okay.
But yeah, you can, I mean, even if you wanted to just simplify it and use a 50-day and a 200-day and just, people look at the Death Cross or Golden Cross or whatever. None of this stuff is perfect. But again, in a market like crypto or Bitcoin, where most of the flow is on one side, and that happens when you have forced selling and you kind of have these environments where positions are being unwound. And I think some of the perpetual futures auto liquidations amplify that too. But you just want to stay on the right side of that trend. All that said, I think the most important thing to be aware of, though, is the economic environment that you're in, and that's true of any long duration asset. If it's an environment where there's recessionary fears, or you're just seeing like a slowdown in the data, all the data that's reported does matter. Now, some of it's reported on a lag. Some indicators are certainly backward looking, as everybody knows, versus some stuff that's a little bit more forward indicating or forward looking. But when that's slowing down, there's an environment where you absolutely do not want to be in Bitcoin. And that's when growth and inflation are collapsing. We're not seeing that right now. But that's the thing that you got to pay attention to more than anything. And maybe you get some of the price signals in the market and that helps you out. But if things are starting to slow down, do not fight that trend on the downside either. Just go to cash.
Yeah. And we've talked about this before, the correlation with Bitcoin specifically to SPY, the Qs. It's relatively positive. It's not like 90 or 100, but it's above 30, 40, 50. So like Ryan's saying, when you have a general market consensus that is drifting up and to the right, you should expect to see Bitcoin doing the same thing, although it'll be more volatile naturally. But you want that volatility if you're diversifying into it, especially if you have a large chunk of S&P exposure or NASDAQ exposure. It makes a lot of sense.
Yeah. One more for everybody. I know it's not in the platform, but what I've witnessed recently or observed probably over the last couple of years, one of the biggest drivers short term in terms of crypto market volatility is bond market volatility, the MOVE index. And maybe this is true of saying, okay, what we just discussed, the VIX trading higher too, you're seeing position exposures being taken down given higher volatility as like risk rules come into play. But bond market volatility seems to really impact crypto prices. Whereas when the MOVE index explodes, and maybe it's just because all of fixed income is used as collateral within the system. But when the volatility of that collateral, as measured by the MOVE index, starts to explode, crypto doesn't seem to go up. I don't know exactly what the explanation is, and maybe it's just it's a coincidence. I think not, but that's another indicator to keep on the watch list is the MOVE index, just like the VIX, right? If the MOVE index and the VIX are exploding, I think it's going to be tough for crypto to go up.
Yeah, I mean, I think it totally makes sense. Actually, it kind of correlates to the idea of the market is probably struggling. There's a lot going on, and if people are running to bonds, bond vol is up, probably market's down, correlation's up, right? VIX might be up. So yeah, I think you're right. I think there is something there.
Yeah, whenever general markets are, and you have to think of it too, like if the general market is selling off in a way where the VIX curve, the volatility futures curve is flattening out, maybe going to backwardation, the speculative, more volatile assets are likely going to be one of the ones that are hurt the most. Makes sense. But at the same time, you'll have opportunities to get back in if that does happen, and likely at lower percentage prices relative to something like the E-minis or NASDAQ. So plenty of opportunity. That's why we love the volatility of it. And I think looking at these things and just putting context around the moves, having the ability to get in, get out, or even just rotating in or out. Like if you're in MicroStrategy and you see a massive move to the upside from 300 to 360 and you still want to be long, maybe you rotate out of that and you go into Ethereum or Bitcoin. Like you can go from a super volatile product to a lesser volatile product and still get that exposure. So,
well, two things. I mean, to piggyback on that, like it or not, it seems to me like the adoption of Bitcoin and how it's become a little bit more mainstream has created a situation where, at least that I've noticed, especially since going back to last year, that time period in November, where it basically kind of moves along with the market. It's highly correlated to the market now. If markets are doing well, Bitcoin's going to do well. So to that point, bonds, if there's something that flares up with bonds and bond volatility and market volatility, it's going to reverse. The other thing is you just pulled up MicroStrategy. Is it a little weird here that MicroStrategies and Coin aren't on all-time highs?
I mean, it's tough to say.
Or even close to, MicroStrategy's not even close.
MicroStrategy had its massive run up to 500, 525, sold off aggressively. But I mean, this is a super levered product, and yes, it's not at highs like Bitcoin is, but when you look at the move that Bitcoin has had over the last 6 trading sessions relative to this is up almost 100 points from the low. So still a relatively strong move compared to Bitcoin. But yeah, interesting to see that it's in the middle of its trading range.
I mean last November it followed suit, Yeah. Not right now. Kind of interesting.
Maybe it's lagging. Maybe. The poll, 57% would invest in Bitcoin relative to gold for 24 hours. I agree. Can't go against the Tasty Crypto family, right?
Looking at the last month in here, we've got Bitcoin up about 12% now versus gold. If we just use XAU spot gold, up 10%. Last 3 months though, gold up 18%, and year to date, gold's still crushing it, up 50% versus Bitcoin up 33%. So decent outperformance there.
I mean, it's been crazy.
Why not both? See, that could have been the thing.
Yeah, I know, right? I know. Well, somebody said, why not both sell them? So there was that too. I guess I could have put both of those on there. But
yeah.
I just wanted to see how people felt. And I honestly thought this was going to be a landslide when we put it up. I thought people were going to say mostly Bitcoin, but there's 43% of the people that say gold. That's why we do the polls.
I'm going silver, actually.
Hey. Yeah, silver's been crazy. I mean, all of these. And this maybe people were just waiting for October to strike. I mean, because I was seeing gold and silver rip higher, and I was waiting for Bitcoin to rip higher. We're finally getting it. Love to see it. That's it though. 11:58. Thanks for tuning in. If you got any further questions, you can find us on the Twitter sphere. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Ryan is at Ryan Fred Grace. Give Tasty Crypto a follow as well. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. Just head over to the Tasty Live YouTube channel. You can click on that, sign up for free. New updates every Wednesday, new editions every Saturday. Got to get it. A lot of similar data points. So stay on top of the crypto markets with the Tasty Crypto team. But yeah, we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient, and Tasty Live does it again. They teach it in a way that is fun, it's easy to understand, and you're learning from people that have done it for 40 years.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results?
Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
What is going on, everybody, and welcome back to another Risk and Reward. Today's Monday. We got another solo session. We will be back with Gus in the Orca indicators because we all need an update on that. But what's going on, Grumpy Mike, Maui, Rancher, everybody? Hope everybody's doing well. I know it's been a weekend, second week coming off of the government shutdown, so we'll see how the market wants to digest everything. We took a couple trades today, so we'll break down both of those scalps that we took, see what went on there, and then also we'll get into the Tasty Trade platform and put more trades on for the week so we can start the week off fresh. What's going on, Bob? Hope everybody's doing well. When is Chris back? I know, congrats again to Chris. Chris had a baby, but I think Chris is going to be back TBD, to be determined. But he'll be back soon. What's going on, Scramble? What's going on, guys? Yeah, no, it's been a little while. We need our macro updates. We need our in-depth macro updates. So we might all need to be knocking on Chris's door. Hope all is well, Emmett. Hope you guys are doing well, Dan. It was a tricky morning, to say the least, this morning. I'm not gonna lie, it was a tricky morning. I'm gonna break down some of my thought process. I did take a couple trades. I'll break both of those down. I was forced to manage them, but we'll get there. RC, what's going on? Big Deal, what's going on? Hope you had a great weekend, Big Deal. It was good. I mean, it's been really warm out here in Chicago. Can't complain. Whenever you get sunny weather in October, 2 weeks away from Halloween, 3 weeks away from Halloween, and it's still warm, I mean, there's not much to complain about. Not much to complain about. Good afternoon, bro. Is that a dirty chai? No, it's not. It's actually a little bit of my caffeine for the day. I'm not too big on caffeine before noon. Sometimes I would drink some coffee here and there. It was kind of nice at market open. I felt that like lock-in effect a little bit at market open, but in terms of caffeine running in my system, not a big fan before noon. So this is right on the dot at noon. I think I got this a few minutes prior to this, but usually just some water or a nice little Celsius. I was saving the caffeine for this afternoon. Usually I like to save the caffeine right before a nice shoulder session in the gym. So what's going on, Juan? The Scalper King, no, not today at least. We were forced to manage our position, so we can jump right into the TradingView platform. I took a couple trades today. We'll talk about both of those. The market's been super choppy. I know we got a pretty big expanded move over the weekend, and then pretty much quiet all throughout today. No news Monday. Got to cut back on the caffeine in the morning. Oh, you got to cut back on your caffeine in the morning. Yeah, it was one of those things. Caffeine's a sneaky one. Caffeine's one of those things where I was never a big proponent of caffeine, especially, now being in Chicago. I thought, the caffeine vibe would kind of fit the aesthetic, maybe some coffee in the morning, but it wasn't my thing. After the first couple weeks, I'm like, you know what? My energy levels are off. It's just completely different from there, long story short. But we took a couple trades today. I'll go ahead and pull up the settings so we can look at the execution marks and we can see exactly where we were entering, where we were exiting. We'll break down the entries, where I was adding to the position, where I was looking to scale out of the position, and pretty much how much we were risking on those trades too. Because I know we had a couple questions last week in terms of like, how do you figure out where you want your stops to be? How do you know when you want to stop out of the position? And that can be the difficult part when it comes down to scalping. So we'll break down all of those details. Can't complain, just need to maintain a good theta. Delta short, I feel you, Maui. I'm leaning Delta short as well. We're gonna get into the platform after this. For the most part, almost always leaning short Delta, but I have some positions on I wanna show you guys. We still got some SPY, we still got some QQQ on, and those are negative Delta too. But with that being said, market open was at 8:30 this morning. And let's just make sure this vertical line is 8:30. This is 8:39, so we're gonna move that over a little bit. 8:30, just to give us a visual on where the market opened up at, because like we've spoke about before, we've cranked the data and we've recognized where most of the volatility is coming in and out of the market and where the market is most liquid to be able to scalp, be able to get in and out without having to go through much slippage in your positions. So with that being said, the market opened up. We're trading near our level of value. This level of value is gonna be where a very high concentrated, where there's a very high concentrated level of trading activity within this range. And this is all from last week. So These levels of value that we're going to be breaking down starting today by the end of the week are going to be data that is being pulled from last week. So these are the high volume nodes, all of last week. Now let me zoom out a little bit. Let me go to a 30-minute or 5-minute, get a wider view on what we were looking at. So each one of these vertical bars, again, is just the different trading sessions throughout last week that we were using. If I go here, let me adjust this a little bit so it's easier to see. So you can see this shaded area over here is going to be where most of the trading activity occurred on NASDAQ. So that's why I was kind of eyeing it. That's why I was paying attention to it. I found that level attractive. And if I use the fixed range volume profile over here, it'll give us a visual on where we pulled that from. If we can find it, fixed range. We can find it, there we go. So if we take this volume profile is going to show us where about 70% of the trading activity occurred within that one standard deviation. So that's really what we're looking for. And that's where we have any type of indication in terms of like what we're even looking for as a scalper once the market is even opening up. Like what do we even look for? What's attractive to us? I keep losing this thing. Where'd it go? Fixed range, where'd you go? There we go. So we're gonna start from here. Keeps taking it from me. We're gonna start from here to here. So we can see within all of the trading activity from last week, we can see that in one standard deviation or 70% of the trading activity occurred between 25,152 and then 25,000, which happens to be the whole number too. Grumpy Mike, or Big Deal, I think you were talking about that 25,000 round number. I know people are really fond of those, and that just happens to line up with our first standard deviation of the trading activity that we're pulling from the volume profile from all the trading activity that occurred last week. So because we're trading outside of that one standard deviation range, we were feeling pretty bearish on it. And now let's zoom into a smaller time frame so that we can pick apart exactly what we are looking for. Now that we see from a higher time frame perspective, what opportunity we were even trading. So now if I go down to this 1 minute, what tool is this? Looks like some Bollinger Bands. Never been a fan of like the Bollinger Bands. I'm not an indicator hater at all, but any type of volume-based indicators, I tend to be a little bit more fond of. I don't know how you guys reflect on some of those indicators. But the market's opening up, and whenever the market opens up on something like NASDAQ, I ask myself, are we trading in a balanced market right now, or is the market trying to trade out of balance? Are we in kind of this price discovery mode, which is a term as old as time? So the market opens up, we start to trade on top of that level of value. Now, right here was a little bit of a premature entry, right? I'm thinking, okay, we might be shifting to a balanced market. This is a little bit more of a guess, right? Not that all of our trades aren't a little bit of a guess, right? But I'm thinking, okay, we're shifting from a balanced market to imbalanced market, or we have the opportunity to. So I'm gonna go ahead and turn on the executions now so you can see the exact price points we were getting in and out of these trades. We are full on astrology now. No, not there yet, not full on astrology, but a little bit of data and volume profiles. So we like to focus on those standard deviations to take some of our trades off of. We don't really like patterns or stars too much. No astrology shows just yet. So with that being said, we took a couple shorts this morning, looking for that move back into balance. And really, this is gonna be a lesson on just being able to manage that risk, because that's what I was forced to do this morning. But we were looking to get short around 25,165. We got the pull in short that we were looking for. We got an opportunity to add to our position again. That's what we did here. I know it's not super clear, but we can get it as clear as possible. So we re-added to our position. Now, what I really want to pay attention to is the fact that our first add was 165 and our second add was 145. So because of that, I know our average price for those two contracts is now going to be in the middle of that. So if both of those price points is 20 points away, I know in the middle of that is going to be 10 points. So I know our average cost basis at the time of trading this was about 25,155. And as we began to consolidate throughout the day, we weren't getting any type of directional opportunities, so we were forced to stop out of the position. And since our average entry price was 25,155, we stopped out at 25,177, which is about 20 points away. So we know 20 points on one micro is gonna be $40. And if we have 2 micros on, it's gonna be about $80. And it was about 22 points. So it was a little bit over 80 bucks on that trade, which we were forced to manage. And one of the reasons why I'm a big proponent of using a stop loss is just because there was another trade we took over here we managed really well, but if we didn't stop out of those positions, we would have been forced to sit through all of this drawdown in this position. And I think that can get very difficult, just trading through all of that drawdown. And the main points of today was just really understanding when our trade thesis is still valid and when it's not valid, because the most popular questions from last week was just knowing, how do you know when to get out? How do you know when you should or shouldn't be in the position? And that really just goes down to knowing if your trade thesis is or isn't invalidated yet. So before we think about adding to our position, before we think about getting more aggressive, is our trade thesis even still valid? And because the market ripped above this level of value, which was the one standard deviation move that I was looking to short, because it did that, I then know that rubber band kind of effect is snapping. I now know my trade thesis is invalidated, so I don't want to be in that position anymore. So with that being said, those are the 2 positions that we took today. Super choppy morning, really not much else to do in there. Quantum computing stocks really taking most of the attention. So other than NASDAQ, not much going on. We can dive into some of the quantum computing stocks that are popping off of as of late as well. I'm gonna go over here to IONQ. These quantum computing stocks are another one of those underlyings that feel very difficult to get involved in. But they're in play right now. There's a lot of volatility, and the options chain have some opportunity on there. RGTI is still extremely bullish. We were looking at that one today. Since some of these are cheaper underlyings, we can look at some potential zebras to throw on in some of these underlyings. RGTI popping off. But I'm of the side of quantum computing stocks or they might be in a little bit of a bubble right now. That's kind of the edge I'm on. And let's jump into the Tasty platform as we look at some of these quantum computing stocks, because we might have to put something on in here, even if we have to give ourselves some extra time. But after we started consolidating on RGTI at around $30, we broke out another $10. We could sell a call vertical on RGTI. Let's go ahead and look at INQ at the same time. Let's see, INQ, we got RGTI, we got INQ. I know we have QBTS, we have QBT, we have IBM. IBM and NVIDIA haven't gotten as much attention lately. IBM, I think, a little bit more than NVIDIA. NVIDIA's been a little bit more quiet lately. We could look into the 2026. NVIDIA been very quiet. IV rank of 14.5. Go back to RGTI. It's either going to be RGTI or INQ. We're going to go. We have earnings November 11th on RGTI, and then we have earnings November 5th on IONQ. Let's see, 71 million shares traded on RGTI. IONQ has 23 million shares traded. So RGTI is a lot more trading activity than IONQ. Let's check the market cap. 11 billion. IONQ 23 billion. Okay. Can't find that 30 delta, Dan. Simply stated, I sold short puts in U, RGTI, QBTS, RKLB, and AMD. So you seem pretty bullish, Rancher. Since the shakeup, you might be sadly Eddie. We have a position on in U and UNH. U we put on, I think, a week or two ago. when we were talking about some of those video game stocks. We're still in UNH. This one's panning out a little bit better over time. Still waiting on that one to come through, but really want to do something in quantum computing. These are in play. These have a lot of volatility, and the options chain is pretty attractive on some of these, which is surprising on some of the cheaper underlyings. So I'm not opposed. Let's go a little further out. We can go to 46 days. Hopefully, we'd hope to manage this before earnings. I know earnings is around the corner, but I wouldn't even want to be in this when earnings rolls around. So let's just see what that's at 130. I'm actually surprised we're even getting that much premium off these calls on this rip up on RJTI. I mean, volatility even looks like it's expanding on this rip up. Yeah. Let's see, what if we were to do something like, sell a little at the money. Sell a little at the money, maybe buy. I can't even get the 70 deltas. This thing's ripping too far. I can't. We can get 92. I mean, 100 or 92 synthetic short on RGTI would be about $3,600 worth of buying power. No 70 delta that we were looking for. AAOI. We can take a quick peek. AAOI, Applied Optoelectronics. This one's up on the day, 25 IV rank, earnings November 6th. A lot of earnings around the corner, a lot of earnings. But still not opposed to RJTI or IONQ. Let's see, 46 days. What would this go for? Just wanting to get a little short delta in the quantum computing space. Or we could be patient and not try to pick off the tops on some of these quantum computing stocks. But if we can sell some premium against it, I'll feel pretty comfortable. And again, I mean, these spreads aren't too bad on RJTI, but we have to consider earnings coming up around the corner. Let me see what we get. Let's check a smaller duration. Let's go 32. See if we can get something in here. Gotta get a little exposure. We gotta get a little exposure in the quantum computing space. A little bit. At the money, 43, 48, $5 wide, 157. I'm forcing it now. I'm trying to squeeze out some of that premium on the spreads. Forcing it. Let's do a little tour to market and then go through our watch list and circle back around to some of those quantum computing stocks. But those are on the radar. But we got some Baidu. This is again after we put this position on, we got some pretty bullish Chinese news that affected all their stocks. Sold and out of the money call spread on Baidu. We got Oracle. We got Oracle on in there. We had sold and out of the money put spread on Oracle. This one's doing really well today. Oracle's up on the day. So I think we have Dan or Big Deal. Somebody's over here buying. So if you just keep buying, we would appreciate that. 46 days left till expiration. We're holding this one all the way to Thanksgiving. And then we got QQQ. These ones got 11 days left till expiration. Same thing in SPY. Need another week and a half for these ones to really just play out and honestly play out so that we can just redeploy this capital in another opportunity. And then we got Unity Software. We put this one on the other day when we were talking about a lot of those video game stocks. Pretty much break even on the trade right now. And then we have UNH. UNH, we still have 46 days left till expiration. UNH is one that we could take off by next week, maybe even by this week. I mean, we're almost up 50% of the potential profit on something like this. So Theta's doing its job on UNH for us. Theta is doing its job. Let's see if we can go. There we go. VIX still down on the day. VIX still sitting at about 16.5. It's been really quiet on this end of things. But with the market still sitting at all-time highs, again, it wouldn't be too far-fetched if we see some type of pop in vol. It's very needed at this point in time. SOXS most down on the day. We got Beyond Meat down on the day. IV rank and volatility going crazy over there. QUBT. We'll go LES. Sort this by implied volatility. Get another opportunity on. We'll get a quantum computing trade on just so we have some exposure to that space. And then we'll get on a little bit more delta here too. Since the market is going to be boring all day. And again, before we go into this list, I mean, with NASDAQ trading at all-time highs, I mean, this price action is just atrocious. I mean, anybody that else, likes to take some type of scalp opportunities as we're ripping, within the last 10 minutes as we're talking about how ferocious or ugly this price action is, it's looking like we just took some of the highs in the pre-market. And it's looking like its last high to take is 25,241. Another reason why I can just never get around not using a stop loss with futures. I just don't know how you can mentally stomach just sitting in a trade that's ripping against you 100 points or 50 points or whatever it might be. If you're not, that's only if you're not using, the futures as a hedge, but this is where it can get kind of difficult. You know what I mean? Like, I know sometimes we can get stopped out of a position, and it runs back in our favor, and that's probably one of the worst feelings as a trader, getting prematurely stopped out in a trade. But also, stomaching 100, 200 point moves against you is pretty difficult at the same time. Gold is another market that has not been playing nice lately. Another one that's been really impressive. Gold is one of those markets that has those elevator down type moves, and then we just grind straight back up. That's what it seems gold's personality is. Like, if we zoom out a little bit here, you can see we get those quick sell-offs on gold, and then we get bought up pretty quickly. We get those quick sell-offs, and then we get bought up pretty quickly. It's kind of felt the same on NASDAQ, another quick sell-off, kind of made lower lows here, then we're getting bought right back up. But this is definitely a very trending asset. Like with something like gold and NASDAQ, they just have completely different personalities. We know we have the upwards drift on NASDAQ too, but these metals, they behave completely different. So it's only right we check out gold at the same time. We could check out some gold. 28 IV rank. Let's go to GLD. Let's see what some of the premiums are going for in here. Take this down to the hourly. We got a gap up on gold, a continuation. Dollar's still looking weak. That gold chart looked like it's going to the moon. Bob, you sound like the high schoolers nowadays. We're going to the moon. You sounding like the youngins nowadays. But we might have surpassed the moon, to be honest. We might have a little bit. Don't want to force anything in here either. This is oh, there we go. Let's go back over here. 46 days left till expiration. Again, not going to force anything in here, but I'm not opposed to the zebra trade. I know something like gold can be very volatile, and gold could just keep ripping to the upside if it wants to, but managing the zebra positions aren't too difficult to do, especially because right now I'm not able to get enough premium on some of these more so directional premium trades that I'm looking to get on. So we can look at this put zebra. We can go sell that at the money. We can go buy 2 of the 70 deltas. I'm going to try to get that extrinsic value down as much as possible. It's going to be difficult on this one. There we go. We're getting that at around -45, -45. That's going to give me short 87 delta, $2,000 worth of buying power. We can look at the call vertical. Not opposed to this zebra right here. This call vertical, the at the money call vertical is going to give us 220. That's pretty good. 370, 375, 180. That's pretty good. 140. We could go 370, 375, $5 wide. $325 worth of buying power. 61% pop. Short 7 deltas. It's not bad. That is not bad. Let's even get filled on this one. We'll adjust a little bit. We're not going to give them too much. We're not going to give them back too much. Too much credit. Just go one. See if we can get filled there. There we go. We got filled on the cost spread there in gold. So we'll get that one up on the follow trader page too, and we'll see how gold pans out. It's nice to get some exposure. You know what I mean? Again, I know I hop on here and I trade so many futures. I'm trading NASDAQ futures. I'm such a futures trader. I know all I talk about is futures, but outside of the scalping and things like that, it is nice getting exposure to another market without having to, manage the trade on such a short time window. You know what I mean? So like getting some exposure to gold, when you're trading directionally, you're trading gold directionally. Typically when you're scalping, you have to be very opinionated in terms of your direction, and you also have to be very opinionated in terms of when you should be getting out. You got to be so opinionated. So still getting exposure to a market without having to directionally be so opinionated is nice. You know what I mean? Have time work on your side a little bit too. And obviously the risk profile is going to be completely different. But it's nice to get something in gold. Nice to get something in gold. Did we get filled there? There we go. Up a couple bucks on gold already. It's working out. It's working out. Let's look at some silver. Silver, kind of the same story as gold. Not much of a difference here. Another underlying going to the move, and nothing is stopping these markets. Nothing is stopping these markets, all-time high markets. There we go. Maybe nothing in silver. I know these markets in silver are a little bit wider than they are in gold. A little bit wider. Tesla's just one that you can never count out. I mean, we had the breakout on Tesla, we had the pullback, and then now we're right back where we left off on Tesla. We're gonna go AMD. Huge moves on the day, up 45 points. Even after the sell-off, after the gap up. 60 IV rank, earnings November 4th. Earnings. Got Path, Fig. No, that doesn't look very attractive. Iron, Oklo, SOXL. CYTK, let's check that out. Cytonautics, never heard of this company. 21 IV rank, earnings November 5th. Up 3.5 points on the day. Cheaper underlying as well. Let's go to the smaller time frame so we can get an idea on what the last few hours since the market open has been up to. So it looks like this had a little bit of attention last Friday. Got a lot more volume traded on this one, and then a little bit more today. Million shares traded, nothing too crazy. Market cap is 5 billion, so it's not tiny, but it's nothing too massive either. It's not a small company by any means either. Not a small company by any means. But we're gonna stick with some of the big boys. We're gonna stick with some of the bread, the underlyings in our bread basket. So we have Apple. Apple IV rank is a little bit lower. We got earnings October 30th on Apple. Let's see some of our Meta. 47.5 IV rank, down on the day on Meta. Earnings October 29th. For the most part on earnings, that is what I'm going to have to be mindful for a lot of these premium positions for the most part. And let's go ahead and check out. QBTS, some more quantum computing. QQQ, ORCL. We still got to get some quantum computing exposure in there. This isn't a bad one, actually. I like QBTS. Let's go out on the daily. Everything actually looks the same. QBTS looks exactly like RJTI looks, and RJTI looks exactly like IONQ looks. Everything looks the same. So one goes down, They're all going down with it. Let's go ahead and check out which one has the largest market cap. So IONQ is going to have a $23 billion market cap. RGTI has an $11 billion market cap. QBTS has a $6 billion market cap. QBTS is a $35 underlying. We got a $41 underlying and a $78 underlying. Could go with the more expensive IONQ $1 billion cap, $23 billion. It's the most expensive underlying as well. Has a, I think RJT has a little bit more volume traded on it. Quantum is a bubble. Yeah, kind of in the same boat there, Dan. It's one of those things where it's like not trying to call the top on something like the entire quantum computing sector, but also wanting some short exposure to it whenever that bubble does pop. I'm hoping I can buy all these puts back by the end of the week. Gotta be careful here. RGTI. I think RGTI, I'm not against even the zebra in these to get a little bit more directional, because even with something like RGTI, right, if we go up another dollar or two, we could manage our risk because it's going to be 1-to-1 with something like a zebra. So if we, shoot up $1 on RGTI, all right, we're going to make about $100 on our zebra if we have 100 deltas on. So I don't think it'll be a very difficult position to manage. Whenever trading directionally, I just think, okay, what is the ease of getting out of this position? That's kind of what the thought process is when trading so directionally. And using those zebras is such a directional strategy, because we don't have any extrinsic value on there. IONQ, let's see how the IONQ zebra would be looking. I have yet to see a real-world example of what a quantum computer can do better than a traditional. So Julie is a perfect person for these quantum computing conversations. I've learned a lot about quantum computers from her. But when it comes down to that, what it could do better, processing speed, but at the same time, we have access to these tools and computers that have great processing speed already. Quantum computers is going to be really interesting. I don't think for the public. I don't think quantum computing is going to be necessary for the public. If anything, quantum computing might be more of a business to business type of transaction. So whether somebody is running, I'm blanking on it. Whether somebody is running a crypto farm, right? A data center, anything along those lines typically need very high processing power, and I know quantum computing can help out with a lot of those. And also the cost of quantum computing is insanely high, and I don't know how that's ever going to be adopted by the masses. I mean, MacBooks are already some of the most expensive computers to get, and a quantum, right? Like that type of technology is probably just going to be for business to business. I don't even think it's necessary for business to consumer at all. Spooky action from a distance. I don't know if you're talking about spooky action from a distance in terms of quantum computing, because those are some very powerful computers, but definitely some spooky action. Exactly, Errol. When was the last time you were like, my CPU is totally maxed out? You don't want me to answer that question, Dan. No, but I was speaking earlier today because I really want to build a PC. So I'm such a Mac guy, but I really do want to build a PC. It's just I know, guys that know PCs like Garrett and the team, they're gonna be on my head if I get a PC that's pre-built. I'm sorry. I know building a PC is kind of the move, and I want to do it because it'd be a great learning lesson too. And maybe when we do that, maybe we build a quantum computer. Maybe we build a quantum computer. Maybe. No, it doesn't look like we're not gonna go with the zebra and some of these quantum computing underlyings. All the help would be great and needed, because I know if I set up the computer, I know once I hit that on button, the screen is going to be blue once I get it going. QBTS was used to break RSI encryption and used by... Oh, I didn't know that, DB. Did not know that. Again, a lot of great use cases for the retailer, for the consumer, maybe not. Maybe not. What a bubble, though. I mean, it sounds cool, doesn't it? Like quantum computing. Like, that sounds so futuristic. It sounds cool. And the market, I think, also thinks it sounds cool because it seems to be a bubble right now. If we can't snag a decent credit for this, we're going to be a little bit more hands-off. And honestly, I don't even mind getting a little aggressive in terms of being at the money because I'm still selling premium. I still have time on my side. And also, it's still not going to be as aggressive as putting on a zebra. So $1.82, we can go at the money in IONQ. I know a lot of us are trading RJTI right now. And again, I want to be a part of that move that all of us are a part of, but I might go with INQS on this one. I can get $1.65, 63% pop, not bad, $335 worth of buying power. We could go with RGTI. Again, I know we're going to run into earnings on both of these underlyings, but we can get something on in one of them. In one of them. Long gold. Do you long gold right now, Peanut? That's one I'm going to have to sit on the sidelines. It's a tough one for me to long at these price levels. It's a tough one. I'm not opposed, right? I'm still leaning long, same boat as you. Hard to get involved there, though, for me. IONQ, November 21st. We do have earnings November 5th. That's my dad's birthday. Seen my parents' birthday everywhere lately. See if we can get filled. We'll go $1.78. Should get filled on that one. We'll give it some time. Fast. Real businesses are not in the business of cracking ES encryption. Sell vertical in gold, crowded trade. You got a little short delta in gold? I know if you guys just joined, we sold an out of the money call spread on gold. We just got filled on IONQ. Gold, we got on a little bit of short delta in gold. We're so overextended to the upside. Not that this has to be the top, but we did get some short delta in gold. IONQ. Quantum computing industry, we wanted to get some short delta in. Could be a little bit of a bubble. Don't want to, again, guess the top in a name like this, but we wanted some short exposure on that. So we put on more short delta here, guys. Look at that. Us not putting on more long delta at the highs again. When's the last time you guys have been on here with me and we're putting on long delta at these highs? I feel like every time we're on here, we're trading at the highs. What does your dad think of trading or of you trading? So, my dad heard an ad on the radio. I promise this wasn't like 1990. This was 2016, 2017. I think I was a senior in high school. And there was this like free seminar thing that they were doing downtown Colorado Springs. And it was just something that when you go there, they're going to teach you this stuff, and then they were just going to upsell you on whatever it is that they had. But my dad heard about it. He wanted to just go check it out, get an idea of, what this stock market thing could be, because it was such a foreign concept. You know what I mean? So my dad's born and raised in Jamaica, just for a little bit of context. So hearing about the stock market, hearing about this, that, and the other is like, it sounds like a world for those people. You know what I mean? So he heard that ad, and let's just check out what NASDAQ is doing at the same time. He heard that ad, so he went downtown, checked out the free thing, came back home. It was my oldest brother. He was born and raised in Jamaica too, but they had came back home and they were sitting in the kitchen, and my brother had his computer on the countertop, and I thought he had like some beats. I was like, "Is this man producing?" And bro thinks he's Jay-Z. Like, what's on his computer right now? So I asked him, I was like, "What's on your computer?" He's like, "Oh, it's stock market. You buy here, you sell here. You keep the difference. You got to factor in the commissions because." A commission-free broker was not, right? That was not a thing. Like, what, commission-free, what are we talking about? So anyways, he explained it to me. He's like, you buy here, you sell here, you make or lose the difference. And I'm like, whoa, you're telling me if I buy or sell here, I can make or lose real money. Like, you're telling me, like, I understand the risk involved, but you're saying right now in this kitchen, if I click this button, I can make or lose real money. He's like, yes. I'm like, done. Say less. Why is not every single person in my high school talking about this? Like, completely understand the risk involved, but the fact that opportunity is available, what are we even talking about right now? Like, is this registering what we're even going back and forth? Like, it's such a new concept, you can't even believe it. So anyways, my dad wanted us to go check that out downtown too, just to get us some exposure to the industry and just business, whatever it might be, right? So my siblings and I go downtown like the next weekend. They were here for like a few weekends before they then go to the next city to try and upsell some other people on some stuff or whatever it is that they were selling. So my siblings and I, we go down there downtown. We sit down there. The first things that they do is they walk around the classroom. It's like classroom setting. They walk around handing a piece of paper to everybody. And we're drawing in like support and resistance, okay? Guys, I know I talk about candlesticks and I talk a little bit more about charts, but I'm really not like that support and resistance, like, oh, the market bounced right here a couple times. Let's draw a line right there. But like that was the first thing that they had us do when sitting in that classroom setting. We drew the support and the resistance. We drew all those things and we had to turn it in at the front. And then they went back over all of the information that we just talked about, took us through that whole training thing, whatever, at the end, and they upsell you on whatever it is that they're trying to upsell you on, make it seem like you, whatever, you know what I'm talking about. So that was my first exposure to it. After that, I went home, did all my research on YouTube, Google, all those things, and I was like, people have been doing this forever? You know, like people, this isn't a hidden world that nobody knows about. Like people are online talking about this, doing this, have so much information, right? I think around that time is when I think my dad and I even came across Tasty at that time, right? We knew of Tom because he had that, the hat was so iconic. The cherry, the red. So it's like during that time, whenever you start searching about trading, you get curious in 2017, 2018, that's typically the type of information you're gonna come across. It's whoever has great resources to learn from is probably where you started from. So long story short, that's kind of how I got into the market for the first time, but I just couldn't believe that there were other people like Tom out here doing this for the last, 150 years. It was a cool, it was a very interesting industry. That's really what it was. I had the same feeling. Yeah, 100%. I think a lot of us kind of had a very similar feeling. Like I also don't think it's a coincidence all of us are here right now going back and forth on a topic that we all find interest on. You know what I mean? That's not too much of a coincidence either. Sad that modern high schools do not have anything on finance or fintech. Yeah, like, I mean, I didn't even know, I don't know, just so much information and so much in depth that you can go in certain industries that you don't hear about. Or serious STEM, yeah. No wonder why other countries, Edwise, are so far ahead of us. Yeah, I'm starting to learn that a little bit too. Like I was having a conversation with my girlfriend the other day, and she was telling me a story about when she was high school and like, when the teacher was doing this and this, and like, I'm just recalling stories about my high school too. And I'm like, wow, just looking back, we were in some of the worst environments and conditions to be learning and getting educated from. Like when I really look back at some of those situations and I'm like, wow, those years really shape you, your critical thinking skills, your this, that, and the other. And the education really is kind of poor in certain areas, depending on where you grew up from. And I'm like, we could do a little bit better here. Now that you get older and your frontal lobe develops, you're like, even though my teacher was just big chilling and we were able to do whatever we wanted, like at the time that was fun. But when I look back at it, if I have kids, I probably wouldn't want that for them. BT. So yeah, long story short, my dad was extremely supportive. That's why even when I had gotten the opportunity with Tasty, it was just like it was such a blessing, honestly, because that was when I was just in school as well, and like the market was very new. Like you kind of you understood certain things here and here, but to get an opportunity like that's where you can kind of be more so guided in the right direction of things in the industry was super helpful. I remember waiting in line at a buffet watching a guy read the paper that had the stock quotes in front of us. Then he jumped out of line and went to pay a phone as my dad. What he did, he said. He stock trades and that makes you jump out windows in the 90s. Wow. Well, I'm glad none of us are trading in the 90s. Because if that was the case, I might have been through a couple windows already. BT, up on the day. Let's go to the daily chart. I know we got a few more minutes here. If we find something attractive enough with enough premium, not opposed to getting another trade on here. Dude, I was the same. I didn't even know nothing about the stock market till 2019. But I remember as a kid, I teletext on TV, the SPX quotes when I started trading in 2019. I started calling them. See, that's dope. That's dope. So it sounds like 2016, 2017, 2018, 2019. And you know what's funny about that, guys? Like if you got involved in the market around that time, like over the last 5 years, it's more been socially like acceptable to be trading and to be a trader and an investor, right? Like prior to 2020 even, prior to 2019 even, like 2016, 2017, 2018, it was more of an industry that felt like it was just so new and almost just felt like such a developing industry still. You know what I mean? It was almost like a secret society. That's what trading felt like. It felt like a secret society. Now it's a little bit more mainstream. Now it's a little bit more popular. Rancher, I just saw you throw the term penny stock out there. And yeah, I mean, penny stocks were a lot more popular even in 2016, 2017, 2018. And in my opinion, I think there was actually a lot of opportunities in penny stocks in the early days when we were printing a ton of money prior to 2020 in terms of like trading wise, not investing wise, because like 90% of penny stocks go bankrupt, but it was just a different niche in the market. It was a very volatile market. And it was very player versus player in the penny stock range because there were smaller caps, there were such small companies, not a lot of banks and institutions and algos were really trading down in those penny stocks. It was really like player versus player. And that was another very popular niche in the stock market trading industry that really got popular in the 2010s era because of some other personalities that a lot of you guys probably know about as well. I was in grade school during the 1987 crash, and the nuns got angry. Probably long Kodak on Black Monday. Oh, wow. I wonder if as I age and I get older, like, yo, I remember, son, I was trading Black Monday. You know what I'm saying? Like, you know, it was back in, you know, I was 25 years old, and, you know, your dad was trading. You know, I feel like there's no prolific times where I could recall and be like, yo, I remember I was trading Black Monday as a 25-year-old. Like, we have no big events, I feel like we did back then for me to recall on. For like 10 years from now or 20 years from now for me to recall on. Yeah, my dad didn't understand it much. I've always wanted to understand it since my dad didn't. Yeah, I feel you 100% big deal. And honestly, my dad is a real G. Like, my dad still encouraged me and pushed me to this area of the market when it was new to us, new to our family, you know, and he still encouraged me to just, you know, stay curious. Retail traders came alive, 1,000%. Retail traders are being acknowledged now. You know, and I got to say hats off to Tom, right? You know, Tasty and Tom did an amazing job of democratizing the finance world, especially when it comes down to trading and investing and getting retailers the tools that they need to be able to be a part of all of that, because it was so gatekept. It was gatekept by the industry professionals as well, right? Like that's just what it was. Now retailers are able to take part a little bit more. You know, and then also it allows retailers to break into the industry too because of that. That's what I'm saying. I don't know if anybody's seen the tweet that I put up over the weekend, but on Friday, I put a screenshot on Twitter. It's a 16-year-old trading NASDAQ, right? He's up maybe $1,000 on his position, whatever it was. I think they were using the TradingView interface, but it was a phone screenshot. He posted it on his Instagram story. I follow him because he was another young guy that started to really cultivate an audience online, and he's like 15, 16 years old. And he put a screenshot just saying like, man, I can't believe the first day trading meeting is canceled. Like the school canceled it for an assembly. And I just thought that was so interesting, profound, funny. I mean, all the above, because I mean, we have 15, 16, look, are they trading for real? I have no clue. I mentioned that in the tweet, but the fact that there are this many young people engaged in the market at an active trader level is just surreal, right? Guys, think about it 5 years ago. Think about it 10 years ago, 20 years ago. Think about it when you guys were in high school. Could you imagine there's hundreds of kids trading, building groups, trying to build trading groups in person, like, you know, trying to dive deeper into the industry with each other? Like, you know how it is at that age. Like, you feel like you're cooking something up. You're about to, you know, pretty much be Mark Zuckerberg. You're about to do something. I just can't believe that many 15, 16, 17, 18-year-olds are that exposed to the market, because although, yes, some of them that are, you know, chasing quick money may get weeded out over time, right? Stock market is not a get-rich-quick scheme. You try to get rich quick, you're going to go broke quicker. That's what it is. You don't learn that, but as a young person, you think that. So ones that get weeded out, sure, it'll happen over time. But just imagine those ones that stick with trading over the next 5, 6, 7, 8 years. Imagine how much experience those traders that are starting at 15, 16, 17 are going to have. Right? I remember I had made a comment before and I was like, man, I wish I would have learned about the stock market 5 years ago. Like, I can't believe I was only 18, 19, 20 when I first stumbled upon the market, right? And then somebody commented on that comment saying, man, you're lucky. I'm 28. I wish I would have learned the market at your age. And it was funny. It was just a chain reaction to comments. And somebody that was 35 commented to the 20-year-old. Was like, well, you're so lucky. I wish I would have learned about the market when I was 28. Now I'm 35. And then someone that was like 50-something commented to the 38-year-old saying, wow, I wish I would have learned the market when I was 35. I'm 55 now. You know what I'm saying? You see the point I'm getting at already, but I thought that was fascinating. I was like, we're always going to be saying that. We're always going to wish we stumbled upon something a little bit sooner. But now we can just be happy that we have the tools, resources, and education to take advantage of opportunity that we do have now. Let's see, what do we got here? I started trading bonds in the late 80s. Stocks I started probably about 93. Okay. So tell me this, guys. Why were trading bonds so much more popular back then? Like, why does, and I don't even think it's my generation anymore. I feel we have a new age generation of traders too that are, in the high school range. I don't think those are Gen Zers. I could be off. But why were bonds so much more popular back then? Was it because guys like Tom was trading bonds in their prime back in the 80s and 90s? Like, is that why it was popular? And you don't hear about bonds amongst the young crowd as much anymore? So it feels like it's sometimes talk for me. Mutual funds was 98. Okay. And much more available for the little guys because of the platform like Tasty Trade, 1,000%. You'll remember the dark sell-off days of 2026, 2028. Ayo, Dan, what you alluding to there, Dan? I will say, us getting bought back up from March of 2020 has still been very weird in terms of how quick we got bought up and how quick we never return to those levels again. Trading the tariff tantrum like a boss. Be patient, Earl. You will witness it. Appreciate that, Dan. Most definitely. Damn, mine warned me to not get in. He'd rather I had find a job to join union, retire. Again, it was one of those things where I think, because another thing to keep in mind is, and I know we just got a couple minutes here, is my dad wasn't one to, we weren't one to like take risk, right, at all. Like, if anything, it was the complete opposite. So I think that sometimes you just have to take a risk. Honestly. I think sometimes you just have to. But with that being said, I know we all got a lot of stories that we can all resonate with. But we are going to need to wrap up here. It is crazy how life shapes us 100%. Fig, big move today. Is it the start of a bullish trend or just another bearish trend? We will see how the market digests all of that, guys. We got on a couple positions today. We got on some short delta in gold. We got on some short delta in some of the quantum computing stocks. We took a couple scalps today on NASDAQ. We needed to manage those trades. We broke all those down. But we will be back tomorrow. Be sure to stay tuned for more segments coming on next. Big Deal Dan, T-Port, Jason, Grumpy Mike, everybody. Appreciate seeing you guys here. Stay tuned for more coming on next. We'll catch you guys next time. Peace.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
takes the guesswork out of retail trading.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Understand I got a plan, but I bet you didn't know that I was dangerous.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Now, welcome to the Monday edition of what it is that we are trying to do. Man, I'm so glad that you guys are here. Thank you guys so much, because without you, we could not do what we do. So thank you guys so much. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube, because you can join the conversation and join the discussion and communicate with your brethren who are also watching the program. Of course, for the 88th day in a row, you can celebrate if you are a bull, and you can commiserate if you are a bear, but it is indeed a good time had by most. But a couple of housekeeping things. So number one, guys, don't forget. So John, if you've got that art card ready for the Detroit show, don't forget, coming up next Sunday, so this will be in a week and a half on October 19th, we've got an option crash course live right outside or right inside. It's somewhere around Detroit, give or take maybe 50 or 75 miles. That's going to be October 19th. It's a Sunday night. It doesn't matter who's playing on Sunday Night Football. Don't even worry about it. It's probably just the Dolphins and the Jets, right? It's probably just like the Seahawks and the Cardinals. You don't have to worry about that at all. Come hang with us. It's going to be amazing. We're going to have so much fun. There's going to be snacks. There's going to be drinks. It's going to be great. I'm even going to be there. And so that might be a bit of a gotcha from your perspective. But still, it's going to be a good time had by most, I think. And we're going to get to go through a crash course live. I've got a fun little quiz that we're going to take while we're doing the thing. Like in the middle of the deal, like you guys are going to be quizzed. Like in the middle of learning, you guys are going to be tested on what you are able to retain. I think it's going to be super fun. I cannot wait. That's October 19th. Go to tastylive.com/events and you can sign up. We need bodies in the seats. We need heartbeats in the room. And so I really, really hope to see you there. So thank you, John. Some more housekeeping. So this week, I am actually going to be out on Friday. Friday is actually Autumn and I's our anniversary. So not a month anniversary, not like a monthly deal, like the first of the month type thing. Little bone thugs for you guys. No. This is Friday, October 10th. It's going to be 16 years if we make it till Friday, which I checked the prediction markets this morning. It's only about an 80 to 85% probability, but let's assume that we do make it to Friday. That's 16 years. October 10th is 16 years. I'm actually going to be out on Friday, not because of the anniversary. I am actually going to, and I need y'all's help for this. So on Friday, like my kids are homeschooled, like Autumn schools them in the house. Like it's amazing. It's incredible. Like it's so much work, way more work than we have to do. I can assure you, but they're homeschooled. But every Friday they actually do like a weekly school thing, like a little co-op program with a bunch of other families, a bunch of other like little kids or whatever. It's amazing. Well, this Friday, I'm actually going there to speak to these kids about what I do for a living. What should I tell them? I have no idea. I have no idea how to describe what I do for a living. Like, of course, I make B- math jokes. Like, I got that much. But what do I say after that? Like, how do I describe what I do for a living? So I need you guys to help me out in the chat box. The kids are going to be, aged from the range of, 6 up to 17. Like there's just going to be kids of all ages that are in the auditorium. And so help me out in the chat. Not only can we pump the algorithm to convince it or fool it that this is quality program, but it will also help me figure out what to do on Friday. So I will not be in the office on Friday. There will be no live show on Friday because I will be doing that. But John, go ahead and bring us into the market here. Let's take a look and see what's what. Do we still have a market? Oh yeah, we got a market, and she is stronger than ever. So if I go in here, EMA S&P is up 32 on the day. Wow, risk-free instrument, also known as the NASDAQ futures, extremely high-risk product, up 237 on the day. You got the Boomer struggling a little bit, down 32 here on the day. And then you've got the Russell 2000 futures index up 19. Man, there's just strength all across the board. Obviously, the Boomers are struggling a little bit, but that's 47,000 on the Boomers. Man, look at that. 47,000. Crazy, crazy, crazy stuff. And oh, by the way, if you have a question for me, I'll drop that in the chat box as well. And I will try to get to as many as I can here in the next few minutes. But yeah, market looks super strong. I mean, look at gold, man. Look at this thing. Look at this thing. The shifties are celebrating. They're partying like it's 1999, which makes sense, because Peter Schiff was calling for gold 4,000 back in 1999. He's been doing it every single day since. And so from a consistency standpoint, you really got to hand it to my man. You got gold up to 39.84, up 75 points. Got silver, Hunt Brothers looking pretty good too, up 53 cents on the day. You got silver up to 48, about 48 and a half. And so very, very strong. It appears there is no stopping this train. Just buy whatever you want. You can buy the market. You could buy the metals. You could even buy a little Bitcoin. How my Bitcoin bros doing? We're going to be doing some Bitcoin stuff. We're going to be doing some crypto stuff. We got to get Crypto Dan here on the show. I'm excited for it. So we can start stacking some bags of, the latest crap coin. Like I'm pumped, man. Like, let's go. You got Bitcoin. You got Bitcoin up to 125,000. You got Ethereum up to 4,700. Man, that's some good stuff. I mean, it's funny. I'm taking all these playful jabs, and all the Bitcoin bros and all the crypto bros, like they've got the last laugh. Like they've got the last laugh. And so that's why, again, what is our go-to strategy? Our go-to strategy is to do nothing. But what happens when doing nothing doesn't work and you have to do something? If you can't beat them, join them. If you can't beat them, join them. So that's what we're going to be doing here on this very show at some point in the near future. You got volatility. Volatility is actually pretty strong today. For the market being so strong, that's a little bit interesting. You've got volatility futures up 2 cents, and then you've got spot volatility, the old VIX. This guy is only down 14 cents, still at 16 and a half. And we are at all-time highs, guys. We are at all-time highs. I mean, you would think the VIX would be 13. Like, you would think the VIX would be, 13 and a quarter, 13 and a half, whatever. And it's not. It's staying bid. I mean, what does that tell you? I don't know. Does it tell me that there might be some cracks under the hood there, some cracks in the foundation? Potentially. I would never even pretend to be, a volatility expert when it comes to, like, actually looking at the curve and actually looking at, like, the relationship between the futures and the spot and, like, the back month future and the front month future and, like, looking at the degree and the steepness of the curve. I've never gone that far down the volatility path. It's an interesting path, but I would never even pretend to be one that would be an expert on the volatility path. Obviously, I understand volatility as it relates to option pricing and kind of being long or short volatility indirectly through equity exposure, index exposure, whatever. But volatility itself is a very, very interesting thing. Normally, we see an inverse relationship between the two, but there have been more days as of late where the market's been up and volatility's been up. What does that mean? I'm not sure. I'm genuinely not sure, but it's interesting. It is very, very interesting. So, all right, what I want to do, let's go ahead. Man, I see you guys in the chat. Man, look at you guys. Look at you guys. RC, I see Dan Duquesne in the chat. Man, Sam L's in the chat. James Bond, number 4 in the chat. Man, look at you guys. Edward Lon III in the chat. And Ash Finn is in the chat. Man, look at you guys. That's awesome. All right, let's go ahead and let's do a couple of things. So, number one, Chipotle up 18 cents. We really don't need anything else. Like, we are getting smashed to pieces across the board. Like, our P&L for the year, I mean, we are barely green now. We've just been lighting stacks of cash on fire left and right. But sometimes that's just the way that it goes. So Chipotle is the thing that we are going to be hanging our hat on for sure, with Chipotle now up 19 cents. Best Buy hanging in there as well. GDX and GLD, I mean, there's not really too much to say about these two. I mean, I'll find some room for some lamentations, of course. But GLD up another $6 today, obviously with gold up, 73, gold futures up 73. We've got 11 days to go on this short call spread. It looks like it's over. Like, it looks like it's done. It looks like this guy's not coming back. There's no reason to close it right now, in my opinion, simply because it's already maxing at it's already maxing. It's already marking at maximum value. Like, I mean, the maximum value of this spread is $5. And so, I mean, the good news is this isn't like an Oracle. Do you guys remember the Oracle debacle from, that was what, like 3 months ago, 4 months ago, maybe? I mean, it was bad, man. It was really, really bad. And so that's one of the things with undefined risk positions where, if it gets away from you, it can just keep getting away from you. Like there's no limit to how far it can get away from you. And that, of course, is the biggest gotcha with undefined risk positions. The biggest gimme, in my opinion, with defined risk positions is if it gets away from you and you are totally wrong in the position, it doesn't really matter. It doesn't really matter because, it matters because you're going to have a losing trade, but you've got your max loss known at entry. Like I know, or knew, I guess it's both past tense, present tense, and future tense. It's kind of all the above at this point. For this gold spread, it was going to be a $5 max at worst case scenario. Like I knew on entry that the worst case outcome here, or the worst case outcome here, let's go a little glacier freeze. We haven't done this in a while. I feel like that's the reason why we've been off our game. We've done too much yellow, too much magenta. I'm not even wearing the magenta polo from Magenta Monday, so I'm obviously totally kind of out of sorts in terms of my mental framework. But the glacier freeze may bring us back here. The maximum value on this spread is $5. That's the worst it can be. So no matter how high gold goes, 4,000, 5,000, 6,000, 7,000, whatever, the most we're going to lose on this position is going to be a $5 max. $5 mark. So we're going to lose about $3 on the trade, a little over $3 because we sold it for $1.87. And so that's obviously really, really helpful and beneficial when it comes to defined risk strategies. And that is, in my opinion, the biggest advantage you have with defined risk strategies. Of course, there are plenty of gotchas that come along with defined risk strategies, but I'm going to save that discussion because our next little educational, I guess you could call it a series. You can call it whatever you want to call it. Wednesday and Thursday of this week, we are going to do, let's talk about defined risk and let's talk about undefined risk. Again, when I'm doing these little 5 to 10 minute deals at the beginning of the show, and then we post them on YouTube, I saw a lot of you guys, by the way. I saw a lot of you guys on YouTube. You're liking it. You're commenting on it. You're watching the whole thing. I see you guys toggling it to, half an X on the playback speed. That's amazing because that gets me double the watch time per one view. So I thank you very much. For those little pieces of content, though, the audience is the beginner trader. The audience is somebody brand new, somebody that maybe has never even heard of us or heard of me before. And so the idea is to kind of go back to the basics for a while. And let's talk about defined risk at a base level. Let's talk about undefined risk at a base level. And so that's what we're going to do on Wednesday and Thursday of this week before I go to the little co-op deal on Friday, which is going to be super fun. I can't wait. I can't wait to see what you guys think I should say to them. That's also going to be pretty fun. But anyway, GDX and GLD, I'm going to sit tight and do nothing for now. The one thing that I do want to do today, we're getting hammered in, Rigetti. Rigatoni's just taking us out behind the woodshed, man. This is some crazy, crazy stuff. I didn't even know this company existed 10 days ago. And now all of a sudden it's causing me all kinds of fits and starts. And so Rigetti, we're going to sit tight and let's see if it doesn't cool off on its own just a wee little bit. The one thing I do want to do, though, is let's adjust our Palo Alto position because this guy has, we're getting hurt on this guy too. That's just basically the common theme, across the board here. We're even getting hurt on Starbucks. Like, that's how bad it is. It's bad. Like, it's bad. When the market is up 1 million, like EMI S&P is up 1 million, NASDAQ up 1 billion, right? Russell up 1 trillion, Starbucks down $3. Right? That doesn't make any sense, man. Like, that doesn't make any sense at all. And so that's how it's like, man, I'm just not seeing the ball. Like, I'm just not seeing the ball. Kind of like the Yankees. They're about to get swept tonight, tomorrow, whatever. It's like, man, they ran into a buzzsaw that is the Toronto Blue Jays. And so y'all going to be going down to Cancun just like we are. And so we'll see you down there with some banana daiquiris ready for you. But anyway, when you're not seeing the ball well, you're not trading well, you're in a little bit of a rut, whatever. This is the kind of stuff that happens where it's like, man, the rest of the market is up 1 million and I'm getting hurt because I'm, net short across the board. But one of the longs I actually do have, Starbucks, is also getting hurt. sometimes it just happens that way. Sometimes that's just the way the ball bounces. And of course, if you trade long enough, you'll have plenty of times where it works the other way, where you'll be like, be crushing it on all your positions. And then the one position that you have that kind of goes against those positions is also working out that day. And so it certainly goes, both ways when it comes to that. And that's why it's just important to, give it observations. You've got to feed the distribution occurrences, as you are comfortable doing so. Like, don't start ramming it and jamming it just to ram it and jam it. Like, don't start just pushing a whole bunch of chips in the middle before you're ready to. Like, as you are ready to do it, be a bit more active, kind of put more capital to work, whatever. It's not a competition. It's not a race. But our whole game is based off of, a lot of trades. Like a lot of trades over a long period of time. We're not looking to trade once and trade big. We're looking to, trade small and trade often. And so when you think about that, it's like, okay, I need to, when things don't work out and I have a day where everything doesn't work out. Today's a great example with what's happening to me today. Like, we're getting hit across the board, and we're also getting hit on the trades and the positions that should, quote unquote, should work on an up day, like a long Starbucks position. That's just going to happen. That is just going to happen if you trade long enough. It's absolutely going to happen to you. If it hasn't happened to you yet, you haven't been trading long enough, and it is going to happen to you at one time or another. And so that's why you just got to, stick with the program. There's no reason to jump ship. There's no reason to completely abandon what you're trying to do. And so, you just have to keep that, keep that in mind. And so, but with Palo Alto, I do want to make an adjustment because with Palo Alto, they have earnings coming up on November 19th. So earnings on November 19th. We are already in the November 21st cycle. And let me see. We rolled into this cycle. This was what? Like a week ago, maybe? Let me bring up my my trusty chains here. Yeah, on October 1st, we did it. So we celebrated our most recent month anniversary by rolling Palo Alto from October to November. So there you go. I can almost assure you, when I made this roll, like you can see again, 221, right? We did this show. We did this roll on the show. That's very important to me to do my trading on the show. And so we did this at 221. I can assure you that at that time, I said something to the effect of, all right, I'm not looking to carry this guy through earnings. I'm okay rolling to November because, 21 days in November is going to be so far before, the earnings release on November 19th. This guy is going to be done and dusted before we even have to worry about earnings. Before we probably even have to worry about the implied volatility expansion going into earnings, which typically happens maybe 10 to 14 days before the earnings release. And so those kinds of things are not going to be relevant for us as long as we get out, at or around 21 days to go. Okay. Given that that's the case and Palo Alto keeps going up today, I really think it would be strategic and a bit prudent to go ahead and let's roll our put up and let's straddle this guy off. Let's just roll it into a straddle. We could go inverted too, potentially, but I kind of like going, strangle, tight strangle, straddle, inverted strangle. Like that's the general sequence of events. That's kind of like your please excuse my dear Aunt Sally. It's like when you start going inverted, before you go to a straddle, then all of a sudden you're kind of doing, you're doing your parentheses like after you're doing your exponents and things like that. It's like, yeah, that's not really the way it was intended to be. But sometimes you just got to do that. And I don't think that's the case for us right here, though. And so for Palo Alto, let's see. For Palo Alto, if I go ahead and do, let me see here. Let's go ahead. Let's go into November. Let's buy back this 185 and let's sell out at 200. So we're going to pick up another $3 for doing that. So picking up another $3, this is going to improve our credit. This is going to improve our break-even point. And this, I think, could prove to be very valuable for us in the coming weeks as we look to manage this guy at or before or around 21 days to go in the November cycle. And so I like making this move. I'm not interested in rolling beyond November. I'm not interested in kicking this guy out to December. I'm also not interested in carrying this guy through earnings because to me, then you're taking what could be a modest loser and potentially turning it into a very catastrophic situation. So that's not something that I'm super interested in doing. It's not something that I generally encourage you all to consider. But at the end of the day, of course, you've got to make your own decisions. My job is to hand you the flashlight. My job is to hand you the flashlight and say, hey, there's a gimme, there's a gotcha. You've got to walk through the forest yourself. You've got to take the steps down the path yourself. But I'm going to give you a map. It may not be worth anything. You may have gotten it off the dollar store, map section. And here's a flashlight, but it's going to be 100% up to you guys to walk through the forest. That was probably not my best analogy, but it's already out there. So let's go ahead and hey, it's a Monday, man. We got to get in the deal. But the video is held out, which is amazing. Right? I'm like waiting. I'm bending needles for this video to just drop feed, and then it's just going to be gone. You guys will be left with the sultry voice. But all right, let's go ahead and roll this guy out. Enough about videos and sultry voices. All right, 338, no takers. Let's do we'll do 335. Okay. All right. So we got filled. Palo Alto rolled it up to a straddle. And so now we sit. Now we sit, fingers crossed, and looking to get out of this trade at some point in the next, next couple of weeks, basically. And so we'll see. We've got about 25 days to go until 21 days to go in the November cycle. And so we'll see. We'll see what happens. But that's all I really wanted to do today in terms of what I felt needed kind of an imminent action. Everything else, I think we could adjust Rigetti too, but I'm going to sit tight. This thing is so crazy. I'm going to sit tight. Let's sit tight. It's not a huge position. It's a very small position, actually. This is one of the benefits. I'm not going to adjust this, but I will make one comment. This is why one of the things I almost always suggest, if you are mostly or only doing defined risk and you're interested in kind of, exploring undefined risk waters, I would always encourage you, regardless of your account size, or even irregardless, if you want to play it that way, it's 2025, you can do whatever you want. Irrespective of your account size, no one's going to argue with that one. I would always start with a stock that's, let's say, $50 or less. Because the reality is, if you go in with a strangle or a short put or a ratio spread or a jade lizard or a straddle, there's so many different undefined risk strategies that you could choose from. Those are probably the 5 most common ones, I would say. If you go in with one of those strategies or some other undefined risk strategy and it completely goes against you, which is basically what's happened to us here in little old Rigatoni, the most you're going to lose has a bit of a natural cap on it. Now, I say that you got to be a little bit careful because, GameStop in 2021, there was no natural cap on that. So you have to understand if you do have a short call, like you are exposed to unlimited risk. You are certainly exposed to potentially, small stocks doubling, tripling, whatever. And so, an addendum, a little amendment to what I suggested a minute ago might be, hey, if you're going to go into undefined risk for the first time, I wouldn't do a GameStop. GameStop isn't even GameStop anymore. GameStop's like a well-established, like blue chip company now. But like a Rigetti or like a whatever, like these companies that, just kind of popped onto the scene. I'm trying to think of another one. Not SoFi, but like Open would be another one, OPEN. Like these companies that just popped onto the scene, they're going to be a lot different than doing something in like Bank of America or doing something in like, some other $40 or $50 stock that's been around like forever. Like that would be a much better candidate for your very first undefined risk trade. Because the reality is for Bank of America, let's look at Bank of America. For Bank of America, it's what, $40? Yeah, $50. For Bank of America to move $10, it's going to take 19 years. Like it's going to take 19 years for this stock to move $10. So if you get in there and you sell a put, right, it's like, all right, how much risk am I truly exposed to here, right? It's unlimited theoretically, and you need to be aware of that. There is no cap, but it's not going to be the same as selling a put in like Netflix or Tesla or some multi-$100 stock, some $1,000 stock. Those things also established companies, but the risk profile is completely different in my opinion. And so anyway, with Rigetti here, that's why I'm a little bit more patient because I'm like, let me just let this guy cool down. It's still a pretty small position. Let's kind of see what happens. And of course, those are famous last words because now Rigetti's going to 50, 60, 75, whatever. But anyway, I digress. Where are you guys at? In the chat. I see you guys in the chat. Man, look at you guys. Look at you guys, man. Mr. Stonk's in the house. Toilet Wave in the house. I'm going to surprise and delight Toilet Wave. He said, this was an obvious Jim fade trade. I don't know what you're talking about, but they're all obvious Jim fade trades. I don't even need to know because Toilet Wave, it's carte blanche. It's across the board. It's blanket statement. Blanket statement. You guys should be doing the opposite of everything I do. I've said this so many times on the show. I cannot possibly say it anymore. And here it is 3 more times. If I take a directional play, earnings related, Fed related, just a random Tuesday related, it doesn't matter. Doesn't matter. You need to be on the opposite side of that trade because when it comes to market direction when it comes to predicting the next move, I believe it is true. The markets are incredibly random. The markets are incredibly unpredictable, and nobody knows anything. Well, let me assure you, I know less than nothing. I am way, way, way below the average trader investor that doesn't know anything. I know less than nothing in terms of market direction and what is going to happen next. So again, I'm doing all I can do. But man, I appreciate you guys. I appreciate you guys so much. And so let's see. Where are we at? Where are we at? Let me see if I can surprise and delay somebody. Ash Finn says, my wife and I's anniversary too. Oh, yours is the 5th of October? Wait. No. I think you said, oh no. You've shared this with me before. It's October 10th. Your anniversary is October 10th, but it's your 5-year anniversary is what you're saying. That's amazing. Congratulations. Like, wow, that's amazing. So you got married in 2020. Wow, you got married during COVID? Man, that's a power move, dude. Like, that is a power move. And I don't know what state you were in. It was obviously quite a different experience depending on, where you were in terms of what was open, what wasn't open, and what life was like. But, man, that's crazy. We got married in 2009. And so in Memphis, Tennessee, which is where my wife is from. And so let's see, where are we at though? And then I see, well, this is kind of towards the beginning, but I see Daniel Lau's in the house. Says, Dr. Jim, shout out from San Francisco. What's going on there, Daniel Lau? I appreciate you, my friend. I appreciate you so much. Thank you for being here. And again, if I can ever help with anything, please let me know. Like, thank you guys so much for being here. Daniel, I think you might be brand new to the show, at least brand new to the comment section. And so thank you so much, my friend, for being here. But let's see here. Where are we at? I see Dan Duquesne's in the house, or Dan Ducarn, I should say. Sam L is in the house. Happy Monday, Doc. For a guaranteed peanut pump, slam a fresh coffee, dry scoop your creatine. That's the only way to take creatine, in my opinion. That's the only way. And hit the market like a 5-set failure leg day. B- gains only. That's correct. That is 100% correct. You know what's so funny about B- gains? So this morning when I was training, I was in a huge hurry. Like, I had so many things to do. So many tasty things in terms of getting ready for next Sunday and just a bunch of stuff. Obviously, the Monday morning show with Nick and Tony and, that kind of stuff. So my training today, I only trained biceps. It wasn't intended to be just biceps. I wanted to do a full arms day, but I just trained biceps. Like, I only had time to get through biceps. Like, that you are all in on the bro science. Like, you are all in on the bro, body part split when you have a biceps day. So that is a B- gains day if I've ever seen one there, Samuel. But yes, the only way to take creatine is to dry scoop it. Don't be mixing it with something else, because that's just going to ruin everything, right? The creatine's worse. Wherever you mixed it with is worse. Your experience is worse. And so, yeah, I would dry scoop it all the way. But here we go. James Bond number 4 is in the house. What's going on there, James Bond? Happy Monday, Dr. Jim. I have an iron fly in the 0 DTE SPX 6730 put and call, and I bought the 6710 put, and I bought the 6790 call. Okay, so that's very unbalanced for a credit of 1210. It's not working right now. How do you manage this? Thoughts? Okay, so this is unbalanced. So this might be a little bit tricky. I don't do iron flies too often, and so I'm not really the person to ask it, but I'm going to do my best to give you whatever I can give you. I will say, though, generally speaking, with an iron fly, this is kind of a set it and forget it type of thing. So with an iron fly, this is very much a set it and forget it type of thing, where you typically collect a significant credit on entry, and then you just kind of let it play. Like, you might manage it super early. Typically, I think the tasty research is, you're only going for maybe 10 or 15% profit on those trades, and then you take it off. Because you have an unbalanced situation, that's going to change the dynamic, potentially significantly. And so, let me see here. So you did a 0 DT this morning at 6730, so it was much lower because the market, if you look at ES here, let me bring up, let's look at like a 5-minute chart. We can do like a 2-day. Yeah, so you can see, the market opened right here, right around, it opened around, that's ES. Oh, you've got SPX. Okay, so 67.47. Yeah. No, so you're good to go. So you did this guy probably, you did it right around, maybe you did it in the morning when it was around 67.30. Okay. You've got a 67.90 call. Okay. So right now, right, the put side is not what you're worried about, obviously. You're worried about the call side. So when it comes to an iron fly, and it comes to the general pathway forward through the forest, again, it's kind of a do nothing situation. And so right now here, let me actually look. I want to see what yours is selling for. I'm sure you're down a little bit, but I would be surprised if you're down too much. So the 6730, let's take a look at this because I'm curious now. 6730 on both sides. So I'm selling a 6730 put. I'm selling a 6730 call. Let me go ahead and let's buy a 6710 put and a 6790 call. Okay, so right now, yeah, you're only down $5 on the trade. So you're only down $5 on this trade. So one thing that you could consider is rolling this. If you're concerned about your risk to the upside, and if you're concerned about potentially, you know, the market rallying another 20, 30, 40 points, and you're like, man, I've got all this exposed risk on the upside. The thing that you could do, and the easiest play, in my opinion, so number one, I think doing nothing is probably my go-to move here because you're only down $5 and, you know, it's really fine. If you want to close it at a $5 loss, I think that would be fine too. But doing nothing, I think, is very much in play for this SPX trade. But if you're concerned about your risk to the upside, then one thing you can do is you could just, you know, you could sell the 6790. Well, hold on a second. If I sell the 6790 and then you buy a 6750. Okay, hold on. Wait. I got to think about this because I don't do this strategy very often. So if you go ahead and let's see. Yeah. So let's sell a 6790 and let's buy a 6750. That's going to cost you what? About a $2.45 debit. Okay. If you really wanted to control your risk to the upside, you could, and this would make the iron fly symmetric on both sides. This is going to make it very, very difficult to make money. But if you're concerned about the risk to the upside, given the market strength today, this would be a move that you could certainly consider. You're going to add about $2.50 to your, well, you're not going to add it to your debit. This is going to come off of the credit that you've collected. And so basically, instead of collecting, you know, $12.10, you will have collected, you know, $9.50, $9.60. And so this is certainly something that you could consider if you want to control your risk to the upside and you're concerned. I don't do this strategy that often, so I can't really say what I would do one way or another. I generally don't love iron flies because they are very difficult to make money on. Now it's a little bit different in a zero DTE world because, you know, you're already at the end of the expiration cycle. You know, all the extrinsic value is kind of dissipating at a much, much faster rate, you know, on the strategy because you are at the very end. And so it can certainly be something to consider in a zero DTE framework. I don't do that many zero DTEs because I try and do all my trading on the show. And so we do plenty of one DTEs where I'm going out the next day. And that's kind of a zero DTE kind of de facto strategy for me. But I much prefer other strategies over the iron fly for my personal taste. And part of the reason is kind of what you're experiencing right now. There's just not that much that you can do. Now, let's be fair about this though. In a zero DTE world, you know, what you're kind of signing up for is not going to have that much flexibility when it comes to the adjustments and the different things that you can do. And so, you know, let's not all of a sudden pretend that all these other strategies in a zero DTE world are going to have all this adjustment flexibility and all this adaptability when the iron fly will not. That's not necessarily true either. When you do a zero DTE strategy, you have to understand what you're signing up for. There it is again, for the 97th consecutive day. You're signing up for something that is more or less going to probably stay in its current form, more or less, and it's going to come, you know, to, you know, the end of its road at some point today. And so when it comes to an iron fly, that seems to be very much on the end of the spectrum. That's not going to allow you to adjust really at all. And so for that reason, I like either A, doing nothing, B, closing it here at a $5 loss, or C, rolling that call in just to cap your upside risk. So you're not doing anything that's, you know, ultimately, you know, changing the spirit and the nature of the strategy too drastically, but hopefully that gives you a couple of things to think about. But thank you there, James Bond, for the question. I haven't done iron flies and I haven't really had to think about iron flies in a while. And so maybe that's something else that we'll kind of branch into here in the coming days and weeks. But let's see. Sam L says, Doc, look at AMD. Man, I heard about AMD. I saw Nick was scalping it this morning. It's going from advanced money destroyer to advanced money deliverer. Who said we're in an AI bubble? Not the open P&L bro. There's not one of them. There's many of them. So it is certainly the P&L open bros. And so AMD, yeah, I kind of think, man, look at this thing. AMD up $42. That's crazy, man. What's NVIDIA doing? Wow, NVIDIA's down. So obviously there was some news that's AMD related. I don't know what it is. Can you guys help me out in the chat? I have no idea what it would have been. That's AMD specific. But man, that is that's a move. That is a move for AMD. And so again, you're doing an undefined risk strategy for the first time. Don't do AMD. Don't do NVIDIA. Right? Don't do Tesla. Right? Don't do Microsoft. Like, don't do any of those kind of stocks. Like, go with Bank of America. Go with let's find another stock. I mean, you can't do. I want to say Procter and Gamble, but the price is too high. Go to if we go to Thomson Walsh and we got to kick in, man. Again, as far as I know, the second Range Rover has not been bought, and so once again, it's not going to pay for itself. We've got to pitch in, and so. But if you look at you could do. I mean, do an Intel. There you go. Do an Intel. Well, maybe not do an Intel because Intel's got you got government control and a bunch of crazy stuff in there. So maybe not do Intel. You could do Chipotle. You could do Chipotle. If you've been watching the show for any length of time, I can't believe I missed this. It was right in front of me the whole time. If you've been watching the show for the last couple of months, we've had this Chipotle position on for a long, long time. And it's basically, this is a really bad scenario for Chipotle. I mean, they went into their last earnings call at 50-something, and they just crashed, boom, banged down into the high 30s. That's a monster move for a very well-established company. Again, you sell a put in there, just like we have. We're down $900 on the trade, right? We're down $1,000 on the trade. It's not something that's going to put you out of business. It's not something that's going to, turn the lights out. And so that's what you want to avoid when it comes to your first couple of trades in an undefined risk strategy. And so that's what I would do. But yeah, for AMD, yeah, don't do that, man. Don't do something undefined risk in AMD if you're just getting going. Even if you're experienced, you probably shouldn't do something undefined risk in AMD. But anyway, if you're shooting McGavin like a Nick Batista, then then go for it. Because you guys saw my man slinging some calls this morning. But yeah, that's some good stuff. And so let's see, where are we at? Dan Duquesne. Daniel Lau. If I had a 0 DTE Iron Condor in QQQ, price at close, is it correct? There is no after hours print I have to worry about. So when it comes to, if you have a 0 DTE Iron Condor in QQQ, so not necessarily. So you have to understand that your P&L on the position is going to run up to market close. So 4 o'clock, right? But if you have, options that are, that have gone to expiration, then you have to keep in mind that the after hours market is also in play. Now I have to think about this actually. I don't know if this is true. So Daniel, I think you may have got me. You may have stumped the Schwab here because I know that when it comes to monthly options, like options that expire on Friday. So here's something to look into. And if somebody knows the answer to this, please put it in the chat so we can all benefit. For a regular monthly option, if you run it down to the very end, and let's say it's close to being in the money or out of the money or whatever, if you run it down to the very end, so 4 o'clock on Friday, and at 4 o'clock it's out of the money, but in the after hours market, the stock moves such that the option will be in the money, you will be assigned. I know that that's true, but I don't know if it's different for daily options. And so, Daniel, hopefully I'm making myself clear in terms of what we need to figure out. For a monthly option, I know that the after hours market matters. For a daily option, I don't know. Because I do know that when it comes to certain, daily versus monthly options or even weekly options, in terms of how assignments and expirations and exercises are handled is not necessarily the same. And so I don't know, Daniel. You'd have to look into that. But I wish I did know the answer. If somebody does know, please pop it into the chat, and we can all kind of benefit from that. But let's see. Dan Ducarn, looking at some ARBK stocks. Okay, there you go, guys. Take a look at that. I'm going to pass on that because Dan even said himself, it's a penny stock. And so I'm usually, it's a new era, man. It's the dawn of a new day. Maybe we are going to be slinging some penny stocks here pretty soon. I don't think so. But man, you never know. You've got to stay tuned to figure out where we're going. But let's see. Harold. Oh, it's brutal, Harold. Yankees are 0-2. Jets are 0-5. we might be about to witness history. I don't know, man. Yankees come back and the Jets run to finish 12-5 and win the Super Bowl. Man, I don't know if Justin Fields can do all that for you, bro. But maybe he can. All I know is, man, when your Yankees play like a real squad, like a full squad that's not all banged up and missing, Roman Anthony and, Lucas Giolito and whatever else, y'all are getting mopped up, man. You're going to be in Cancun with us here pretty soon, bro. It's only going to, it's all going to be over really soon. Like, I'm pretty sure like it's done and dusted. But thanks for coming out. We appreciate you. And so Ash Fan says, Dr. Jim, it's go time, or let's go. What's going on there, Ash Fan? Happy anniversary too, my friend. Harold says, Dr. Jim, I'm getting Johnny Bravo vibes. My friends used to call me that when I was in college, actually. And my hair was never long like this. It was always very short. But I got some Johnny Bravos, and so that's when I started training legs and taking it seriously. And so, but I appreciate you. JM says, LOL, 80 days in a row. I mean, I think at this point, it's been 95 or 96. And so that's the thing about these rallies. Like, each day now counts for like 3 or 4 days when you start talking about the streaks and whatnot. And so Wolf in the house, what's up there? Wolf RC in the house, what's up there, RC? Appreciate you. Scramble everything in the house. Dan says the Jets are going to be 0-16. That's probably right. Scramble everything says, let's see. Hey, Dr. Jim, who is the better action hero? Here we go. This is what you guys are here for, right? You're not here for Iron Flies. You're not here for Iron Condors. You're not here to see me and all my lamentations about Best Buy and Chipotle and GDX. No, this is what you're here for. Dr. Jim, who is the better action hero? Sylvester Stallone, Arnold Schwarzenegger, or Keanu Reeves? Man, so that's a really, really, really tough call, in my opinion. I would have to say, if you're just talking about like an action hero, it's very, very, very hard to top Sylvester Stallone. Like, in my opinion, he is at the top. Like, he is 100% at the top. And I mean, you could go a number of different ways with that. You could go with all the Rocky stuff, of course. But I mean, if you really want to, I mean, man, you can go Assassins. Like, Sylvester Stallone in Assassins, phenomenal, right? I mean, you could go way back there to like Demolition Man. Sylvester Stallone in Demolition Man, phenomenal. And there's so many others I'm not even remembering. Obviously, you got Rambo. I mean, Rambo is incredible. So I would have to go with Sly Stallone on that one. That's a tough question, though. It's a very tough question. Muhammad's in the house. What's going on there, Muhammad? Muhammad says, Dr. Jim, what is the plan for October? I'm not sure what you mean specifically. I mean, I've got the show coming up in Detroit. I'm not sure if that's what you're referring to. Maybe you're talking about like the market plan. I mean, as far as I'm concerned, I'm assuming you mean kind of the market plan. It's business as usual. I mean, generally speaking, historically, October is a pretty high volatility month. So if the seasonality bros are correct, I mean, maybe we see a VIX at, 20, 22, 24. It's not impossible. And that would obviously shake some things up. We'd probably see a little, downward movement in the market, some two-sided tape, whatever. I would be surprised if that doesn't happen. I mean, I can't remember in October that's just been kind of smooth sailing. Now, maybe last year's was, I don't remember. Let's take a look, actually. Was last year's October smooth sailing? I know 22 was not. And 22 was kind of when the market bottomed. When that was back when they were raising interest rates and all kinds of crazy stuff. But let me just look at a daily chart going back let's go back like 5 years. So let me see if I can find the last couple of Octobers. So this is, let's see here. Oh, I've got to do, the continuous contract. Yeah, hold on. There we go. So let's go back like 5 years. This is the continuous ES contract. If you ever want to do continuous, by the way, if you're like, hey, how did he do that? You just have to punch in $. It's kind of like an Excel formula, right? $/ and then and then whatever ticker you're looking at. But let's look at this. If I go back to like, let me find October 22. That's 24. There's an easier way to do this, of course. I should probably just do a weekly chart, but this is more fun. So October 22. So that's going to be like here, right? Yeah, so October 22 is like right around here. So this is October 22. You can see there was quite a bit of movement lower in the market. Let's find October of 23. Was this smooth sailing? No, not at all. So you can see right here, October of 23. I mean, that's a pretty big drop. I mean, right there, you can see. I mean, at one point in October, there was about, it looks like about a 9% drop at one point, that's pretty significant. What about last October? I don't even remember. Was this smooth sailing? Oh, okay. So this may be the one where it was, okay, it wasn't too bad. I mean, it rallied up a little bit and there was a little bit of, it went back down from, 5,900 to, 57.20, right? So it wasn't really anything too significant, but there was a little bit of back and forth. It wasn't up every single day. And I'm telling you guys right now, if the market goes down 1% in a day, the internet's going to lose its mind. Like the internet, Johnny Poole's 47, 48, and 49. Like, man, they're going to be in a world of hurt. If this thing goes down 80 basis points in a day, like it's over. And when I say over, I mean over. And so, man, maybe we're going to do the same thing here in October this year. I don't know. But the last 3 Octobers, there has been some back and forth. It hasn't just been, like this type of action, up every single day since, Liberation Day, where we were all liberated from our financial goals. But now they have returned. And so that's pretty exciting. But Mohammed, the plan is just business as usual. And so let's see. Emmett Morrison says, "Are we in the Matrix? Dr. Jim is glitching big time." Hopefully that got cleaned up. But everything looks good on my end. So thankfully we made it. Are we done? We're done. We're done with the show. That's crazy. Man, you guys have no idea how fast it goes. No idea. But I appreciate you guys. I appreciate you guys so much. If I missed you today, please come back tomorrow. Get your question and comment in early. As you see, I try to move sequentially through as many as I can. I don't do a great job of getting through too many, but I do try. I need to try harder, apparently, and I will start doing so tomorrow. But if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Hey, what's going on, everybody? NVIDIA is not the only one that's having fun with OpenAI. We'll talk about the huge deal with AMD today. There was a deal, another deal actually, in a separate space. The banking space created the 11th largest bank in the U.S. We'll talk about that when we get to the slides, of course. And then finally, Tesla teases an interesting potential new product launch coming, tomorrow in just less than 24 hours. So we'll talk about those three things and more. This is a wild market, lots of moves, lots of things happening, and we'll digest it all here on today's show. Welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade, and I am your host, Jamal Chandler. Hope you all had a fantastic weekend. I'm happy because, I tell you what, I wasn't too happy because the Cubs lost, of course, on Saturday, and I had to endure that loss. I mean, we all did, but I had to really endure it because I live with a Brewers fan. Yeah, my wife's a Brewers fan. So that sucked. She's been messing with me the whole time about that, wearing her gear around. I have to explain to people why she has this gear on in the city of Chicago. You know what I'm saying? Other than that, though, it was a good weekend. I mean, you can't win them all. And so I'll stay on the bad news for the time being. My Wisconsin Badgers, of course, another rough one. But we have good things. We have good news. Miami Hurricanes won this weekend. That's right. They're number 2 in the polls. They are the second listed team. That doesn't mean they're the second best team. As far as I'm concerned, they are the best. We'll find out as the season goes on, but that was a really nice win over Florida State. We're the Kings of Miami. We're the Kings. It's the state of Florida belongs to Miami right now, in case you didn't know. So that's what's happening there. Interesting stuff in sports, of course, across the land. Wild games in not only NCAA but in NFL as well. And just to give you the teaser, all the way down to the little leagues. Yeah. My kid, our team won its 6th game in a row. We got to find ways to help them remember what it's like to lose so they don't get too complacent. That's the real, delicate balance you have to do in a team that keeps winning, right? You got to find ways to keep them interested, engaged, and the like. But overall, it was just a great weekend. It was pretty awesome here in Chicago. Weather-wise, it's beautiful. You can't beat it. I think temperatures are going to change soon, and we'll see if that does anything to natural gas. But let's pull up the slides and talk about, real briefly, what's going on in today's market. Obviously, you guys all know AMD is making huge moves today on another deal with OpenAI. And look, I don't think I've ever seen a situation where a name that's not even a public company, that has yet to come to the public market yet, is making so many other different stocks move. Last week, I think you saw NVIDIA move on a potential on the deal, not potential. There was a deal. You've seen Oracle move on talk of a deal. I've seen the SaaS names, the software as a service industry move on these names. It's a move on OpenAI. It is really interesting that a name like this can make all of these public names move. It's really fascinating, if you will, and it just lets you know that the AI movement isn't going away anytime soon. And just remember, like a year, 2+ year ago, people were saying, it's time to get short the NASDAQ, it's over, and I just don't see that, right? Now, pullbacks are one thing, but the idea that you think that AI is a fad, I think is absolutely ridiculous at this point, and it's permeated in a lot of different ways into life and to markets. So I got to tell you, man, when they're spending this type of money towards this type of technology, I don't necessarily see how you can call it a fad. It's fascinating to watch. Fifth Third, speaking of money, they spent stock. They didn't necessarily have all the cash, so they ended up doing an all-stock deal for Comerica. Creates the 11th largest bank in the U.S. by assets, and there's been a wave of different bank deals going on more recently, so you wonder if you're going to see more, especially with the sort of regional bank space, and I think they figure it's a good time. Why not? Theoretically, we're heading towards good times for those regional banks, right? You're going to have a lot more business happening soon, probably transaction-wise. Sure, banks were doing well when interest rates are higher, but if interest rates go lower, it also works out for them because people likely do more business, do a little free financing, they end up deciding to buy more things. So clearly Fifth Third is trying to position itself for that by going from the number 20th largest bank to now the 11th largest. And they're in an environment where regulators are probably not going to slow down this deal, right? That's the kind of environment we're in. They're in a deal-making environment, so it's probably a good idea to go ahead and do this. Finally, Tesla making big moves today. They teased the idea of a new product launch tomorrow. And a lot of people are speculating it's probably going to be some news about their lower cost model. It's interesting. Overall, Teslas have gone down in price, right? We've seen that graph over the years. Remember, for a while there, these things were like $60,000, and I don't even mean the top models. I don't even remember the different. What's the middle model? Is the S the middle model? I don't remember. But those were upwards of $60,000, and now they've come down quite a bit, and now they're even talking about going to a lower cost model. So that's probably the idea of what is on order for tomorrow, if you will. Vol is very high in that front month, and stock's been just ratcheting up higher all day. And it's really interesting because, remember, it took a huge fall at the end of last week, those 2 days after 2 days after the sales came out, right? The monthly sales took a huge fall for those 2 days, but then it's been bouncing today, and we'll see if it keeps this up for tomorrow. Leftovers. These are the largest asteroid craters on Earth. Let's move to the next slide. I don't know where any of these are. I'd have to look it up, honestly. I'd be curious. Anybody in the chat, do any of you live near any of these? I feel like a lot of these are, the Verdiford Crater. Where is that? This is in, what the hell is Free Slate? I don't even know where this thing is. It's in South Africa. Okay, that makes sense. Yeah, I feel like a lot of, I don't remember the location of many of these. If you live near any of these, curious to know. And if you've been to any, let me know. But the Vredefort crater is, I think this is the diameter. I believe it's in meters of how. Wait, no, it can't be. I think it's in miles probably. I forgot to really go through this one. I believe the diameter in these are in miles. Let me double check here. Miles, yes, for sure. 186 miles. So this is in miles at the bottom here, about how wide in the diameter, how wide the diameter is of these craters. But 186 miles the Vredefort crater is. You know what? I'm not even going to say that. The second crater, I'm not even going to say that word. I'm going to screw it up. The Chicago crater is the easiest way to say it. 112 miles in diameter. The Sudbury crater, 81 miles. So you can see the first two are easily well over 100 miles, which I guess is probably about imagine taking 2 hours to drive from one side of the crater to the other. Wow. The Sudbury crater, 81 miles. The Papagai crater, 62 miles wide. Ooh, the Manicouagan, did I say that right? Yeah, probably. 62 miles wide. The Ackman, I'm just kidding. It's Acraman crater, 56 miles wide. Chesapeake Bay crater, 53 miles wide. And then the Moroquang crater, 43 miles wide. So this is how you know that we have aliens among us when we have these huge craters that are sitting somewhere on land in the U.S. It's pretty wild. You remember all the movies that were coming out, like late 90s, early 2000s, about craters these huge asteroids coming to Earth, and they weren't even talking about creating craters. They're talking about destroying things, right? Like, what happened to those movies? Where did they go? They're all done. Let's move to the next slide. Not a whole lot of volatility to speak of, but there's not like there's zero volatility in the market. There are plenty names that have volatility, and you can actually sell vol in them, and they don't even have earnings, which is a unique thing to have right now, and it's because of these big moves. When you see something like AMD, which does have earnings, right? It does have earnings in November, but it's in that 45-day window almost. The November window, of course, is 46. Tomorrow starts the best part of the vol selling cycle in the 45-day window. Now, unfortunately, there's a lot of names that have earnings, but I think when you see something like Oracle that doesn't have earnings, Micron that doesn't have earnings, AMD, a lot of them just so happen to be tech names right now because of the moves that they're making that's creating the volatility push. There's quite a few different things you can sell vol in. And I've seen a couple of ETFs that I'm actually going to look at today with you guys that I'm interested in selling vol in those as well. But I say all this because, by and large, if you just looked at the market without knowing what's going on with these individual names, you'd be like, well, volatility is really low. And in some ways it is, but it's kind of deceptive. So that's why I always like looking at this metric, VVIX to VIX ratio. It's actually right around the average of, it's not low. So when volatility is in a low vol environment, all you need to do is go back and look at 2017. And you can see back in 2017, this ratio was upwards of 10. For those who watched the show for a long time, you've seen this chart before. You've heard me talk about it. When this ratio was upwards of 10, 8, let's just say above 8, that's a low vol environment. When this ratio is below 4, that's a high volatility environment. Right now, we're at fair. I mean, we're basically at fair. The long-term average of this thing is 5.8, so we're basically right there. And this is, I think, the sweet spot, honestly. This is an environment where volatility is not too high that you can't buy anything, and it's not too low that you can't sell anything. There's a lot of different trades that you can make right now, which is awesome. Let's move to the next slide. Silver, gold, Bitcoin, all making all-time highs. We had a chart here, we had a poll here today in the YouTube chat, asking a lot of you guys, I think a lot of you probably answered, if you had to get long right now and stay long for 24 hours, which one would it be, Bitcoin or gold? 51% of the people said Bitcoin. We actually put that we actually put that poll up today during Options Trading Concepts Live. And like we said, 314 people answered. The people have spoken. Half of you, more than half, said Bitcoin. And this is part of the reason why. When you look at the year-to-date chart, it's kind of playing, it's the laggard of the three, of course. Gold, what a run more recently, almost up 50% year-to-date. Silver up over 60% year-to-date. And Bitcoin sitting around 30. And a lot of that, about 10% of that have come in the past week here. It was kind of the laggard overall. It was kind of sort of really lying in the weeds there, and Bitcoin has really taken off more recently. I've had two different Zebras. I actually just closed one today. I had a Zebra that was on for a while. I think it was like the 60, I don't even have to guess. Why don't I just look? I had it in iBit, which is a really good vehicle to trade, what I've noticed more recently. I had the 6062 Zebra, and I literally just closed it late last week. It worked out really well. And now, more recently, I had the 6668 Zebra, and I just closed that today. And I'm actually going to look to get into a different Zebra now. But, I mean, these three have been flying off the shelf. And they all kind of, I think, they all kind of have this juxtaposition with the U.S. dollar in a way, and obviously the dollar hasn't had the best year, and that certainly is helping more recently. Let's move to the next slide. One of the things I am looking at getting long is Ether now. So looking at this ratio of Ether to Bitcoin, and we can see that this goes back to 2021 here. We can see that this ratio is kind of low right now, which lends me to want to get long some Ether here, and I think I'm going to use the ETHA to get long it right now. But this is, if you're looking for a catch up, right? I mean, in a trade, we saw this earlier this year with gold outpacing silver, and then eventually silver took over. I think this is one of the ways. It's kind of a similar type of deal, and that's why I'm looking to use ETHA to get long some Ether here, because I feel like it might end up playing a little bit of catch up. Who knows? We'll see. Let's move to the last slide. So we got STZ and MKC. Earnings are just not interesting right now. The real earnings kick off next week, basically a week from tomorrow. FOMC meeting minutes are on Wednesday. I mean, I think we should get those. I'm not exactly sure. Government's closed, but I don't know. I feel like we should get those. We'll see. Powell speaks on Thursday. It is kind of fascinating to see no macro data come out, right? It's kind of nice. Powell speaks on Thursday. I assume that should happen. I kind of like the fun part about not necessarily knowing whether these things are going to happen or not. Number of S&P 500 stocks above the 50-day moving average, 292, 58%. Let's move to the platform. All right, so I got a list of different things that I'm looking at here. First order business is, I'm at a point now where I have quite a few positions here, as you can see. And so I have to make decisions. I can't just throw on the whole entire world. We got to maintain some cash reserves. Some things we keep on, some things we close. You probably noticed I added an AMD Strangle today. And again, the IVR jumped up to 60. A lot of that IVR. So a lot of times when names have a high IVR, it's either because there's been a big movement and something has happened that created the vol sort of pump into the options, or it's earnings. And that vol is only going to continue to get higher heading into earnings. Now, I've talked about this plenty of times. Normally, I don't sell vol in names that have earnings upcoming. But when you have a massive move like we just had today, this vol is coming from the move. It's not from earnings. So as soon as I saw the huge move this morning, I decided to get in and get short. I sold Strangle, the 175, 260 Strangle. And, heck, if this thing is going to 260, more power to it. If it's going to 175, hopefully it's not. But hopefully, if it does fill the gap, hopefully it's in between the gap back down to 190 or so, right? So that's my reasoning behind that. And overall, I think there's some volatility above the earnings volatility that you're able to harvest and sell. So that's what I'm doing right now in there. I'm trying to think of any other trades I did offline. I told you I closed the iBit. Yep, the first trade I did this morning was the AMD. Closed the iBit. I actually closed some Microsoft calendar calls that I've had for a while, and I put on another little short delta for the portfolio. I've had a lot of long delta. I need to get short delta somewhere. This is a chart that's been mooning like many other charts. I figured it would be good. I got a diagonal, similar to a SPY diagonal that I put on last week. $20 wide diagonal, long basically at the money, so long the 345 put in Dece, and short the 320 put in November. And I did it for $9.75. That's $20 wide diagonal, so that means I can make $10 and a quarter at most. That's the most I can make. And if I lose, the most I'm going to lose is what I paid for, right? And I got out till December. And so the way that I lose on this really is if this thing just keeps going higher, which again, we talked about, obviously there's a lot of tech-related names related to AI in this, and it's a bull market in there, but they got to breathe at some point. And if they don't, and they just moon and they continue to go higher, and this thing goes to 400, well, then the higher it starts to go, the higher the velocity, at some point or another, it does correct. So I got till December to see what happens there. I am going to close. This Tesla looks great. I mean, there's an event tomorrow. You wonder if this is going to be a buy the rumor, sell the news type of situation. Either way, I don't have to think about it and worry about it because it's just time to close it. I'm up. I have 2 calendar calls I just literally put on. I literally just put these on Friday. I mean, literally, middle of the day on Friday, I got long Tesla as the stock was tanking after the big moves last week. So I am going to close these iron condors. One is up 57%. One is up 85%. It's time. It's just time sometimes. So there's close that one. Can we get a close? Can we get a close? Can we just get a close? Stock must have just downticked. I'm going to try to close that one, and then I'm going to try to close the 500 one, because again, it's just time to go. How come the upside one gets closed faster than the? So funny. There we go. We're out of that. It gives us a little coin to do something else if we want. I do have a couple of other ideas that I'm interested in. This deer is also one that I've done calendar calls in. This stock has been weak recently. I'm not sure what the deal is, but this seems like an interesting one to get long, and even if not, I'm doing it in a very cheap way. The calendar calls are a very easy way to do it. I'm going to go to the 480 strike now and put on a little something. 480s. God, these weekly options are terrible. What does 480 look like here? Those are wide too. My God, these things suck. Well, I guess it's just what it is. I'm going to go. Have these traded at all today? Volume, literally 2 contracts on here today. Let's see if we can do these for 145. I'll go with this, the 480, 275. Put that on. Add a little bit to that position right now. I have the 500 calendar, and then I also have the 490, 500 diagonal, and then now I just added the 480 calendar. And basically, I'm just trying to find ways to get long into this sort of ugly looking stock right now. I mean, last I checked, we still need farm equipment, so that's one we're doing. Let's see, another idea. Costco is another that I've been looking at. We got the 1,000, we got the 975. I could add to this. Most of the time when I look at these diagonal calls, I'm usually doing maybe up to $1,000 worth. That's why when I look at some of these to add, this is $500 right now. I could add to this one and I could go further up. So we've done the 1,000 and the 975. Let's do the 950 here. Yeah, let's do the 950 and let's use these 225. That's perfect. Got those off. So a little add to that. Let's follow feed. And I still give myself more room if I want to add another $200 one at some point. This is a $700 position now. This is kind of, it's not even that huge, honestly. And I know somebody was asking me last week, what do you do with these chunky calendar calls? Well, you just saw the Tesla one worked out, so it's time to close it. 50% is a good level. why not? Again, I just closed one for 60 and one for 80%, so that'll work. Let's see. I cleaned up my deer. Did cost. URA is one I was looking at today. We talk about the uranium space and a lot that's going on with power, things like that. I was looking at a Strangle in here, and that looks, again, another stock that's on highs. If it fades, maybe it fades back to the 42 level, if you will. That's the 50-day moving average. Maybe it finds some support there. How much higher does it go? Who the hell knows? But we'll go with the 60 strike, and we'll go down to, I don't like to sell anything less than $1, so we'll go with this. What's the vol in here? The actual volume, the implied vol. 47.48. It's an 89 IVR. I like Nove. What does Dees look like? How much volume are in these things? I feel like not a whole lot of volume in this. 277. These Strangles are pretty cheap on a margin basis. And I don't think I want to go that far out. If I do anything, I go Nove. I'm going to go with the 47. And I'm going to go with the 60. Let's see if we can get 270. See how that works. We'll try to sell that. URA. ETHA. Remember I said earlier, I want to get long some Ether. I feel like it's underperformed some. I shouldn't say underperformed. It's lagging right now with this crypto move. It's lagging behind Bitcoin. And we're going to, you know what? We're going to move down one just in case there's a pullback for tomorrow. Do I want to stay in November? I actually want to go. Wait, let's see how different it is for November, December. 32. This one is $700. Gives you a little bit more time. If you watched Option Trading Concepts Live today, you heard Ryan talk about how the fourth quarter ends up being somewhat positive for Ether. Depends on if you believe in such thing. That's seasonality in some way, which I don't necessarily believe in, but I wouldn't call it seasonality, if you will. I would say it's sort of people. I don't know. I feel like that's not necessarily seasonality, if you will. If it's consistently had. Okay, maybe I'm saying some bullshit. I don't know. Nevertheless, that's not the reason why I'm doing it for seasonality reasons. I'm doing it because of the chart that I showed you that shows Ether to Bitcoin. And right now, Bitcoin has been leading the way. These are very similar. This 32.34 is 695. And if I can get the decent same price, 32.34, similar price. Oh, it's about $100 more. And that's not that much different. Which one has more volume? November should have more volume. It does. You always go where the liquidity is. 32.34. 695. You're going to give me that? Nope, you're not. So let's go with 7. Replace 845. We're in there like swimwear. Publish, yes. iBit was one where I was looking at maybe a Strangle. Is it time? Is it still got more room? 80. Oh, geez. The Strangle is not that cheap though. Yeah. I don't know. Other things that I'm watching. So Micron, I want to sell a Strangle in here. I can't even see straight. This vol, implied vol, is in the 60s. But I have a lot. This is where things get complicated, and this is where you have to pay attention to concentration risk. I do have a Strangle in AMD now. I have a Strangle in Oracle that isn't necessarily working that well. I guess I don't have as many as I thought. I do have the downside play and SMH, like I just said. I added that today, the diagonal in there. I could probably withstand a Strangle in Micron. 165, 230. Now, the only caveat to this is that if all of a sudden Micron comes out with a deal to OpenAI, right? You don't want to be in those names before the deal. You want to be in it after. But man, everybody's seeing their mother seems to be coming out with a deal with OpenAI. You wonder if Micron is next. I'm looking at the 175, 230. 230 is way up there. 175 is really not that low. I mean, it would be within this area here. So there's something that gives me pause. And so I think I'm going to, even though this is such a good one, this is normally one where I would definitely love to do it, given that it's 60 implied vol and 44 IVR, and it doesn't have any earnings. But I'm going to hold off for now. So this is on my watch list, the Micron Strangle. I also am watching corn and wheat and some of those softs right now. I am watching gold. It is getting close to a short point, I think. But I'm going to hold off a little bit. Dash Strangle, yeah, I'm going to hold off on that one. That has earnings. This name, I don't know. This seems appropriately priced for the Strangle. Again, these are 50-something vol heading into earnings. I would hold off on that one for the time being. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. See ya.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Everybody, happy new week to you. It's a good day with one very notable exception, which I'll talk about in a moment. We've got, I guess the government's still shut down, so we're kind of in a data-free zone. A couple of weeks, things will sauce up with earnings. As it is now, I guess the most exciting thing for me is that palladium just keeps shining. I've been sort of obsessed with palladium. I've loved precious metals for a long time, but I was looking on January. I did a post that really honed in on it, and it's done very well. As gold and silver work their way up to their own respective big round numbers. Gold 4,000 and silver 50. Not quite there yet, but awfully, awfully close. The absolute stinker for me, as you might guess, was AMD. And we'll talk about that in just a moment. I have changed the colors as most of you know, I stopped using slope charts for this show last week, and some of you have written back feedback about that. And one in particular noted that the colors are really tough to read. So I hope this is better. Let me know if it's not or if it is, etc. But I'm hoping I'm showing charts. I'd really like you to be able to see them. So hopefully this is an improvement. So having said that and explained the sea of white on your screen, let's jump in. Here is the spider, and ain't not too much changed on this. It's basically up every day, and it is clinging like crazy to the bottom of that wedge. We've been in this wedge all the way back for half a year, and what's happened over the past 8 or 9 trading days has been, even though it broke below this line, has been clinging steadfastly like a magnet to this line, and we're getting closer and closer to this apex. So it's just, of course, this is the same on the ES as well, but it's just locked in to that level. My dream scenario, if I could offer it, would be for metals continue to be strong, precious metals, while equities break down. Hasn't happened yet. Metals are doing great, but the equities just keep defying gravity. Now let's talk about one in particular that defied it in a pretty horrible way, AMD. And this was doubly painful for me. Let me explain. First, just so you don't start a GoFundMe site for me, none of my individual stock positions ever account for maybe 2 or 3% of my overall portfolio. Somewhere out there, maybe somebody had an naked options position that was devastating, etc. I don't know. It stinks. Lost money on AMD, absolutely. As far as the chart goes, nothing about the chart could have given a heads up about this announcement, but OpenAI and AMD. Having said all that, it still stinks because not only does getting stopped out not feel good, but basically getting stopped out at the worst price of the day and seeing it plunge all day long from its open really stinks. But I've been doing this a long time, and I use stop losses because it opened very strong at like 226. Who's to say it would have gone to 230, 240, 250, etc. It violated the stop, so I want out. Sometimes, and today was one of those times, the open was basically the peak of the day. I guess because every bear out there got blasted out of the position, and that was all the buying all at once. We saw this with Oracle a few weeks back. You get some big AI announcement, the stock goes berserk, and then bleeds out over a period of time. I have every confidence this thing's going to sink right back down to 170, where it was on Friday, and I'll be cursing it every step of the way. But I'm not going to change that. I'm not going to I'm not going to do stop loss positions anymore. No, I think it's important to enforce that discipline with those orders. But no fun, and this is off my bear pin list too. This is a wild, wild ride on this one. But yeah, the OpenAI and AMD announcement was huge news. It sent tech in general and semiconductors sailing, with AMD being a big beneficiary of that. That's enough. That's enough we'll say about that. Let's move on to other semi stuff though. NVIDIA is actually down, and we're teasing this line a bit. This line has been a zone of minor resistance before, and now minor support. And as I said last week, if we can break below that line, it opens up a little bit of sunshine to some weakness in semiconductors. The fact that AMD is the shining star right now, other semi-stocks aren't really, at this moment, participating in that glory. It's very focused on one specific company. So NVIDIA just kind of backtracking to that support line. I'll also mention regarding Intel that it is down also, and I'm short Intel. And as we back away from this, we had actually pushed above somewhat both Friday and today, this prior peak, but we're breaking down below that level again. And just strategically speaking, I think Intel is and will continue to be in trouble, kind of the odd man out in this otherwise massive rise of semiconductor stocks. This has all been government participation, let's just call it, support, investments, literally investments, which is kind of unheard of in a capitalist society for the government to be a direct investor in these things. But continue to be short Intel. So for the day overall, a good day. Most of my shorts are down, but AMD really a fly in the ointment. As far as SMH in general goes, it's up thanks to AMD, but I did short it early today, and it's decent profit so far. It is way above this April 7 trend line, and I'd probably cover if it manages to get back down to that trend line. But bit of a spiked trade based on what happened to AMD, and a little safer too because it's for the sector in general. But as I said, this isn't unprecedented. Oracle had its own big announcement between this bar and this bar with respect to its own prospects for building, these hyperscalers, these AI data centers, and that was the peak. And it's held on to a portion of those gains since then, but I think over the course of time, it will at least bleed off those gains until it seals that gap. So I remain short Oracle as well. As with Friday, I'm actually a little shorter than I was on Friday. I've got 24 different short positions, and as usual, I'm just long one item, focused on, Palladium, like I said earlier. So getting a little bit away from that, but still somewhat related, I want to just mention quantum for a bit. Quantum computing, been a very, very hot sector. And of course, years, if ever, away from profitability, but it really doesn't matter. It's just caught the public imagination. But just to sort of contrast two stocks in that zone, one of them is QUBT. And this is a very appropriate name, Quantum Computer Inc. And so we've had a base here, move higher, base here, move higher. And we did complete on Friday this rounded bottom with a big push on Friday, but it has lost most of that. And so it's down almost 10% on the day. And I'm going to show this pair for a couple of reasons. One is to highlight the very speculative nature of this, because it's really based upon, I likened it to, cold fusion energy or something, just a futuristic sci-fi hope that they'll figure this out into profitable companies one day. But in sharp contrast to this, the other company, which for months now, for those of you who have been watching me for a while know this, I've not been a big supporter of quantum just because it seems so speculative, but I have said, if pressed, the one stock from a charting perspective that I've always liked best was this one here, QBTS, D-Wave Quantum. And to its credit, lifetime highs today. So whereas QUBT is down about 10%, this one's up about 10%. So yay charting. So, fundamentals are not. It certainly has performed very nicely. Let me just throw down another horizontal there just to highlight that base as well. So very interesting field. Let's see if anything comes of it or if it just becomes the next 3D printing. Some shorts. Abercrombie & Fitch doing very well. Down almost 8% on this, tumbling away. A new price gap there, so that helps establish a new stop loss. Symbol CC, which I'm very insecure about saying the name of the company because, I'll just call it Chemours, that's close. But this is down also more than 2% below that massive rounded top. Costco, COST, also down. Not much, about 1%, but definitely moving the right way. And it's got a nice clean gap where that red line is drawn. Netflix, NFLX, it's actually up a little bit, but so long as it maintains the position below this horizontal, I think this is in good shape. I'm not showing it here, but I'll just mention as an aside, early today, I did take profits and cover on Meta, META. I think long-term, it'll go a lot lower, but it lost almost $100 in the past few weeks. So I went ahead and scooted out of that one. And then a couple more here. Skyworks Solutions, SWKS, up just a little, but I really like that price gap that I've emphasized with that kind of peach-colored area. And the last of these shorts here is Wayfair, down almost 4%. Really like this horizontal going way, way back, kind of a triple top in that price zone. We have very little time left, so let me just touch on precious metals because I really want to just talk about palladium for a moment. As far as gold goes, another dynamite day, getting close, very close to that $4,000 level, which I think will create a lot more excitement and attention on this. Every time you get to a big round number, it's going to get some easy press. So gold continues to absolutely thrive. Jumping down to silver, also up more than 1%, doing exceptionally well. But you know the belle of the ball for me is going to be palladium. And so my instrument of choice, and I couldn't take it anymore. I've been struggling with this, but I went ahead and doubled the size of my position this morning. My fear this whole time when I've expressed this is, what if gold and silver weaken for a few weeks? Won't that drag palladium down? I've been asking myself that day after day, week after week. I finally just threw my hands up today because if you just look at the chart by itself, if you stop stressing about the precious metals group in general, this is a dynamite chart. It's a breakout. It's a massive consolidation period. I just really like this chart. So I just threw my hands up and doubled the position and tightened up the stop to 115.5 on PALL. But I think palladium is as good as we've talked about. And at the moment, it's up not quite 5%. So a very good day there as well. Okay, anyway, that's it from me. Hope you're doing well. And I will see you here tomorrow. Thanks for joining me. See ya. Bye-bye.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home. Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm. Boys, turn up the charm. Listen up, y'all, get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Jamal, we are back, my friend, and as has been the case for quite some time, we have rallied to near highs. E-mini S&P 500 futures, 25 points to the upside, 67.90. We're just a skosh under that 6,800 mark. You got the NASDAQ up 231, the Dow down 84, bucking the trend here, and the Russell up 11. The NASDAQ, the strongest of the group today. Oil catching a tiny bit of a bid, /CL 61.80. We did get into just under the 62 handle. The 62.12 was the high of the session. We did get into the low 60s earlier on Friday, so a little bit of a bounce there. Volatility futures upticking slightly, 11 ticks to the upside. They have been consistently bid, not moving much higher, but have stayed relatively bid compared to the market, which has just grinded higher here. 1790 on the vol futures, the VIX itself at 1649. You've got bonds down 22 ticks, rates going a little bit higher here on the bond weakness. Gold at up $78, 39.87. The high of the session was 39.94.50. So just a tiny bit below that 4,000 handle. Nice round number there. Silver up 50 cents. It has continued its move higher, closing in on the 50 handle for silver, for an ounce of silver. And then Bitcoin as well, mooning $2,900 to the upside on the futures, 1,800 on spot. We are at 125.4. It got as high as 125.7. That was the high of the session for Bitcoin futures. Been a risk-on day across the board, even with volatility kind of percolating a little bit.
Risk on for sure. It's aptly titled. And I got to tell you, this is a trader's market. There's no doubt about it. There is a little bit of element of 2017 in that volatility. Volatility is actually higher than that. But if there's 2017 in that the market continues to drift higher, which I think, honestly, it takes a lot of the thinking out of the equation for a lot of different people, as we talked about. For those who love to trade 0 days, I think this is fairly fun for you. We also have, like you said, so many other different things moving. I mean, Bitcoin, silver, and gold all at all-time highs. And you got these large groups of things that are moving together when you talk about the AMDs, the Microns of the world, those type of names. You talk about, I just saw earlier today, quantum computing names. They were down. They were down earlier today.
Oh, yeah. In the pre-market, like IonQ was down like $2 or $3. It's now up.
They all
$5.
flipped around. IonQ, QBTS, Qubit. I mean, those names are moving, and you got the uranium names moving as well. This is a trader's market. This is kind of a trader's dream. Honestly, I left the word out maybe before dream, but this is definitely a trader's dream.
It's a kid's show. Thank you for leaving that out, Jamal. I appreciate it, but we know where you're going there. It is an interesting point. We kind of talked about it earlier this morning of just kind of the overall indices. They have drifted higher, but if I told you in a vacuum that the market's up 0.4%, it seems like a nothing day. And then you have these pockets, these like baskets of, they're not all like, I wouldn't call them sectors, but like specific businesses going nuts on a day-to-day basis. You mentioned the quantum stocks. Those have been the flavor of the day one day. Then you have the Mag 7s, the flavor of the day. Then you have the semis. We had healthcare at the end of last week. It's been kind of to go to your point of a trader's market, but it's been all or nothing. Like they're all moving today. Like they're all going one direction. You got to be kind of in it before it happens. Like it really is kind of like there was no moment today where, you could buy AMD. I guess it opened a little bit, or it did open higher. It got as high as 226, but that was kind of the moment. I know we mentioned, we were talking about Tesla. Is Tesla going to get 500? Tesla opened at 440. It's at 451 right now, but for most of the day, it was like down on the session. Like you had to be in it Friday to catch that move. There was no catch up trade to it. It was kind of just like open and sit.
Yeah, for sure. AMD more so definitely than Tesla. Like AMD, obviously, we haven't even seen close to that high that we saw this morning. No. Tesla dipped lower, and then actually, I think it's basically at the highs of the day now, oddly enough. For different reasons, though, right? Like AMD, clearly there's a deal, and we'll talk about. I want to talk about that with you in a second, the deal with AMD. But Tesla, they're teasing this potential thing tomorrow. I don't know what you've seen. I'm not exactly sure, but might be something related to their low cost model. Not really sure. We'll see if it's a buy the rumor and sell the news. That's basically what
drone speculation.
That's basically. I hope it's that, because then stock is really going to go. I got some PA calls in there, but it's been an interesting couple of days in Tesla, right? Like it was basically a buy the rumor, sell the news last week. It was heading up. It's been heading up probably for a week prior to that, and then the numbers came out of sales, deliveries, and it faded for two straight days after that. And then this was the bounce back today. At first, I thought this was just the bounce back, and then I heard, they might have this deal going on. So we'll find out in less than 24 hours, I guess. I'm not exactly sure the timing of this thing. But the AMD thing, I'm curious what you think. There's been lots of speculation and talk about what's going on and where's money just seems to be getting pushed around from AMD to OpenAI to NVIDIA to Oracle. I mean, is this... neither one of us know the answer, but I just want to pose it. Is this sustainable? Is this real what's happening? Should we be worried? I guess the answer to that lies in volatility. I mean, most of these are bid volatility-wise.
Yeah.
Not NVIDIA, though.
No, NVIDIA has been kind of weak today on that news, maybe rotating out of there into some of the AMDs and Microns of the world. I said on Sunday, yesterday, I was like, maybe we get a little bit of a pullback in some of the high flying stocks, your INQs, your, Bloom Energy, some of these stocks that have just gone nuts. BE is the ticker. If you haven't got involved, don't.
I did a couple weeks ago. I'm out now.
Yeah, that
one is dynamite.
Yeah, like some of these things where it's just so news driven. I expected there to be a chop in the market, and 6,800 was kind of the soup du jour today, and for the rest of the week, kind of. But I expected some of the froth to come out of that and get back into the rotation into Mag 7 stocks. I mean, you're seeing it a little bit with Microsoft. To your point with just the news headlines, that has been the risk of the last couple months. We've navigated away from the tariff issues and the Trump uncertainty to now you have, OpenAI is going to put $100 billion into this in 5 years, and the stock's up, 30% on the news. Like that's like that. I'm waiting for those kind of headlines on some other things I'm holding.
I mean, I gotta say, it's pretty amazing for a company that's not public that there's so much revenue drawn out of it right now. I think that's really fascinating in and itself. There's so many. It's kind of like this interesting ecosystem that revolves around a company that's not even public. I would say that's kind of fascinating. I don't know. We need to get Dr. Data to answer these questions. I don't know enough about AI to know if that makes any sense or not. That there's this huge multi-billion-dollar industry revolved largely around one of these agents, if you will, more than the rest. I mean, there's Anthropic, there's all these other ones, but OpenAI seems to be the one that moves the needle more than the rest.
And I think it's just upside uncertainty is what's being priced in. It's just, something AI related, being the next big thing and just trying to catch that move quick. But I'm glad you mentioned Oracle, because that's the other side of the coin where it's up today, but it's significantly off the highs. And we've seen this kind of story play out. Maybe this is kind of like how the AMD move plays out, where you have.
Hope so.
This was an earnings move, so a little bit different, but you have these kind of explosions to the upside, and then it's kind of a grind lower. That's at least what it felt like for AMD today.
I hope so. I hope AMD does that. I couldn't resist. I ended up getting a strangle. I don't usually do strangles in names that.
What'd you do? What strikes?
I did the 175 260 strangle.
Okay.
I don't necessarily always do strangle. I actually don't ever really do strangles in names that have earnings coming up.
Yeah.
But again, I think this is one of those situations where this huge move created some volatility on top of the earnings volatility.
Yeah.
And that's what I'm trying to capture for the time being. You mentioned Oracle. Oracle, I've had a strangle on Oracle for a while. The vol has been breathing in here. One day, it's actually up a little bit today versus recent days. And again, some of it has to do with this move. But this one hasn't exactly come in quite yet. I just do like the chart. Like you said, it has calmed down. Hopefully,
and then volatility comes in significantly.
Yeah, I'm hoping for that.
I think I like that. All right, I'm gonna do like a 1 standard deviation, 170, 280. So I'm a little bit further out of the money from where you are, but
Yeah.
I like that play. I mean, we scalped calls in there this morning into the move, which worked on direction because it sold off, but volatility is certainly high here. If you get couple days of sideways chop, I think even the November options are going to come in significantly. I mean, you're looking at $7-8 a premium.
That's what I'm saying. Like the wings get bid in moves like this. I remember when I was at a trading firm and I used to see like bigger traders do this into these moves. And I'm like, are you crazy? Like this is a huge move. Like this thing is probably going to keep moving.
Yeah.
And that's what the options basically price in. The idea that it's going to keep moving or it's going to retrace this exact move. And sometimes that does happen, right? We've seen those situations, but that's basically why I'm selling the strangle, because these wings are bid. I'd rather do it and know than anything more near term. Personally, I mean, I don't want to sell the OX 17. First of all, it's not even within the nice window that we really like, the 45-day window. And I don't want to sell the OX 17, 185, 250. Like that's too close. And that just doesn't feel like as much juice for me. I'd rather sell the strangle that we meant, either one of the two strangles that we just did.
I sold those October 17th 250 calls this morning at 4. Hold on. I did them at, where's my order? 250.
Oh,
I
you
did them
did it into the move. Yeah,
at 440. I closed it at 350 5 minutes later. So they moved 90 cents 5 minutes later. Those calls are now $1.30. I mean, some of that is the move,
yes,
obviously, but that is the volatility was juicy on the open.
That is what they call fast money. Like
that's fast money.
That's fast money, right?
I wish I held them. I'd have a little bit more, but it's okay.
Hey, you made money on them. It's done.
Yeah,
you have to think about it all day because it would have dominated your thoughts, though. It would have dominated your thoughts a little bit. Like, okay, where are these things? Where are these things? Is it going to go back up? Is it? You know what I mean? Like.
That is a good point. Once you close the position, the hindsight trading will drive you up the wall. Once you do it and it's closed and it's done, trade's over. You move on to the next thing and forget about that. You can't count the hindsight trader. That's the worst trade.
The best part about this market is that you can move on to the next thing. There are so many other things you can do. That's the best part about the market I love right now.
Yeah, for sure.
You don't have to sit here and pine over whether or not I want to get short gold right now into this move. There's so many other things you can trade and wait for gold, right? Like
gold's been nuts. Some of the miners have been nuts. I have a little bit of long delta in NEM, which is working out here, but some of these are getting like, even if you look at GDX or GDXJ, which are historically like, kind of choppy products. I feel like I traded GDXJ, 5 years ago at like 40 and it was trading at 45 at the beginning of this year, and now we're a double. It's been crazy to watch some of those stocks move.
I've never really liked trading GDX. I find myself in a position now. It came under recommendation kind of from somebody in the chat, and I thought it was a decent idea. I threw it on. I got a Jade Lizard on, so I'm kind of sitting in that. But yeah, you're right. Like just to see some of the moves and the adjacent names has just been wild. And you mentioned Newmont. I could be wrong. I feel like Newmont's one of the best performers in the S&P 500 this year, which cracks me up. That stock
Peter Schiff's got to be a happy man.
You know he is.
He's right. He's got his 4,000 cap ready to go. He's gonna. He got kind of some of the water was thrown on the fire here with the move in Bitcoin. But if Bitcoin hadn't been up 10K in the last week, he would have been out on Twitter, adding Pompliano, Saylor, calling Saylor a fraud or something.
Yeah, Newmont is like the the fourth best performing name in the S&P 500 this year, dude. How crazy is that?
It's crazy. E-mini's up 25 here. You had about 900,000 contracts traded just through today, which is not a lot. We've had very low volume for the better part of like a couple weeks, really since Powell took the stand in the middle of last month. So it's been, you mentioned it on the break, a lot of it has been just 0-day stuff. If you look at the SPX chains, even today, when you look at like volume and open interest, I mean, I talked about this on Friday too. 200,000 contracts trading at the 67.50. I mean, you got 100,000 on each line on the put side. It's the same thing. It seems like everybody's kind of going into these SPX options versus, E-minis or NASDAQ futures. Why put 15 grand up to, get the same couple $100 that you can get with just YOLOing some SPX options?
Yeah, no, for that, they are very efficient with regard to that. And again, you don't have to worry about assignment or anything like that, index products, right? So, and naturally, that's why people are trading a lot of these, and it's comparable to, it's just nice. It's a nice trade for people to do. It's a lot easier to do, and you don't have to think about, much else. Like I said, you don't have to think about assignment or anything like that. And you can see a lot of people are trading these days.
They just smashed volatility in the last 5 minutes here. And by smash, I mean it's down, a little under 1% here. It was just up 10 cents. It's now down 12.
I can't even hear the word smash anymore and not think about. Do you know this guy? You ever see that guy with the beard and he does different You never seen this? No. He's on Instagram. This guy, he has this beard and he just talks about wives of NBA coaches, right?
Oh, yeah. I've seen that. And he's done crossovers too. He's gotten real. He needs some more content.
He does.
He's been starting. I've seen wives and their husband crossovers, and he does the wood.
I love that guy. I love that guy. Smash.
Yeah.
Respectfully.
Yeah. Oh my God. Well, VIX just got smashed a little bit here into the last 10 minutes here. Any specific names that you're gravitating towards? I know AMD was one that we just put a position on here. Anything else sticking out to you?
I am interested in Ether. I got long in ETHA. I got long in ETH-A Zebra.
Okay.
Ryan, this morning we had Ryan on.
He's a convincing guy.
Yeah. It really wasn't his idea. Maybe he did convince me somehow without even realizing. I don't even know. But it was just the data, right? It was the data kind of showing how ETH compared to Bitcoin right now seems to be underperforming. And it's sort of, for me, it made me think of gold and silver. Not too long ago, silver was underperforming gold, and the little brother eventually takes over. So I did put on a Zebra a little while ago. That's one of the plays. Besides that, nothing in particular. I got a ton of different positions on right now. I've definitely... It's at a point where I'm closing things to be able to put on other things that I think may or may not be better, right? Mm-hmm. You can't have the whole entire world on. You just still got to have cash on the sideline. So it's that's kind of where I am now. If I see something I like, I have to find something to take off at this point because there is just that many good trades out there, I feel.
And then the FOMO hasn't taken you in yet.
No, I'm not getting caught.
I think in this sort of market environment, people get...
Yes.
They get a little jumpy, I gotta do something here because it's moving. I gotta put, instead of my normal 1 or 2 or 3 contracts, I'm gonna do 5.
That used to be me.
And
that definitely used to be me. 5 years ago, 10 years ago, 100% me. 5 years ago in this market, I would be long probably 10 to 20 upside calls in Tesla. For real. In AMD, I jump into this move today thinking it's going to move back towards that high and maybe eclipse more. That was definitely me. Now, nah. I don't feel the need to. And I feel like I'm also trying to pay attention to getting a little bit of short delta in the book. I got diagonal in, I put diagonal in SPY. I got to put diagonal in SMH actually as well. So I'm trying to balance out things here. I'm not trying to follow the.
Oh, SMH has come down a little bit. It was up another $4 or $5 from here. Mm-hmm. Now trading at 344. the famous phrase is that there's never been a better time to short it than today because it's that high. So
Right.
I
know
it can go higher. What the exercise that Mike and I do is when we do that and we think to ourselves, we got to short this. We just expand the axis here so that now, if you move the axis and now you have 480 as the top, it looks like we've gone nowhere. It
looks like we've gone nowhere.
SMH, it hasn't done anything. It's moved sideways all year.
It's got room to go.
Yeah, if you move the axis a little bit, it gives you a little bit more room, makes it easier.
I tell you what, things have gone well, I feel, because I have long calendars. I got long put calendars. I got long call calendars. I got short strangles. I got zebras. Like I got all kinds of different positions right now. And I don't know the last time I had this multitude of different positions. So something's got to give either way.
I like it. E-mini's up 28, NASDAQ up 200 and change. I guess the Dow rallied a little bit, about 40 handles here in the last couple minutes.
Tesla's pushing higher, and
of course you got to have it. You got to
have some ahead of the event.
Yeah, I mean, just don't think buy. That's the great Dylan Radigan saying. Speaking of don't think about anything else but opening up a new Tasty account, tastytrade.com. Got the money match, 1%. That's on all of your funding within a 1 month period. So got a lot of time to do that. Commission-free trading as well for 30 days. So if you've been waiting, now's your chance to jump on it.
Tell your friends.
Tell your friends. Keep the lights on for us. Very nice. E-mini's up 27. NASDAQ up 200. Did you do any thinking today, Dylan?
This is a case in point of the viability of thought. It's off to the, it's sort of, as long as nobody's thinking, it goes up, and it goes up a lot. It's just brief periods of time where there's a bunch of thinking about the Fed, about inflation, about the why is the Fed cutting rates, the economy is slowing. But as long as nobody's thinking about any of that, it's a supernova.
Now we've canceled economic data, at least as far as the government is concerned. So that's less thinking that you have to do.
Less to think about.
Ilya, I know you've been losing sleep over the lack of this economic data. I know this has got to be hurting you. I mean, how are you sleeping?
It's a good thing that the price action on Friday and on Thursday last week was definitive. So I got out of all of my short equity index exposure. Got out nice and light. Nice. Didn't take. Took an L of less than 1% of equity overall on the three. I had Russell, NASDAQ, and S&P on. And so I am now just watching my silver go up. And that's it.
Nice.
The good thing for Ilya is that his family now, they can talk about like football or like current events or school or something. They don't have to hear about the jobs data coming through here at dinner time.
I get into half a syllable and I'm shut down immediately. The moment I even try to mention anything markets related, I get sent into exile instantly.
Yeah, right.
So,
your kids probably know what's going on with the dollar and et cetera at all times. Daddy, what's going on?
No
I know what's
clue.
going on with the dollar right now, Ed.
Good job with your Japanese yen short, Daddy.
Although they're definitely watching the concert calendar, and they're definitely watching the music release calendar.
Nice.
That I've imparted on them.
I bet.
Dylan, what's our Tesla announcement tomorrow? What's he giving us? Drones? We getting the murder drones? Is that happening? Is he going to lead the?
That will not be announced.
No.
There'll be no announcement on that one. It'll just be you'll see a small insect-like object flying towards your phone. That will be
the murder drones would be known by the doing and not the saying.
But if Elon's at the helm of that,
I mean, obviously, who knows? But I would love to see something on the robots. I mean, I think that the Tesla, that the AI-powered Tesla robot is really the edge of that company right now. I mean, obviously all the self-driving taxi fleet, all these things, but it'd be nice to see something on sort of the state of the art humanoid, AI powered humanoid super robot. I think would be the most exciting thing that he could roll out.
What's the first thing you're going to have your humanoid robot do? Where are you putting them? Like, are they kitchen duty?
I don't think.
Yeah, I make my coffee. Make my coffee.
You're treading a dangerous line here.
Yeah,
that's this question. Dylan, is that like Campbell? Is that Italian leather? I mean, what we got going on with the jacket?
This is suede.
Yeah, it looks nice.
It's a suede. Although I feel like there's a challenge with my camera tonight because I see like my picture goes from very small to extremely big. You see that?
Yeah, but guess what? Doesn't matter if it's small or big. The jacket still looks good, my friend.
Jacket is still dope, though, right?
You know what I'm saying? Exactly.
That suede. That's very, very, very chilled out.
These are the type of things I come to expect.
I think
non-thinking garb, one might say. Who could be bothered to think in a suede jacket
when wearing suede? Although I know we're going to wrap it up, but I do find it interesting that markets rising with volatility expanding.
Yeah,
I've pointed that and seen that out there quite a few times over the last week, but doesn't seem to matter. It's grind higher every single open. It's the not thinking market, Dylan. I'm with you.
It is a not thinking man's market.
Very good. Well, E-minis up 24. They actually sold off like 5 or 6 handles into the close. NASDAQ up 188. You got the Dow down 85. The Russell up 8. Bonds remain weak into the close today. So thank you, boys, for joining us. We're going to take a quick little 90-second break. Come back with more from Tasty Live with these boys for overtime. You're listening to Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
It was a great show, very inspirational and motivating. I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to. So Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling the whole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
And we are back. I'm Elias Pivak here in San Francisco. That's Dylan Radigan in Milan. Jamal Chandler in Chicago. Gentlemen, welcome to Overtime. Markets are closing, as it were. Your thoughts, picking up from the conversation we were just having on last call, extolling the joys of not thinking. Does this move today tell you anything about anything other than there appears to be a giant magnet above the markets and it will not be denied?
Yeah, I mean, I think it just sort of validates that when there's not a specific object of thought, the most obvious being the Fed meeting, or the most obvious being some sort of, guidance from one of the Mag 7 that's not super positive, like some sort of comment from Altman or somebody, not that he's Mag 7, but the same idea, saying where expectations are too high, et cetera, et cetera. It just validates for the 8 billionth time that absent a really meaningful focus point that is in the negative, that the market is going to go higher, and in some cases it's going to go higher substantially, depending on the names. And I think it just continues to validate my thesis that looking at the non-performer of the Mag 7, which is a relative statement, but looking at the non-performer of the Mag 7 and buying it, or at least selling put spreads on it, is generally a winning idea.
It's an interesting mix here today for sectors. Technology obviously up 1.14%. That's the standout. Consumer discretionary up almost 0.9%. Consumer staples down. Healthcare down a little bit. Real estate down a little bit. Otherwise, a kind of quiet day, but tech probably the leader on the board. Speaking of the Mag 7, here's the Mag 7 ETF. It's not really doing the heavy lifting here in aggregate. Kind of stuck in a range going back, shock of shocks, to right around the Fed meeting. Any particular names stand out for you here as individual opportunities to that end, Dylan?
I mean, I think Amazon is interesting of all of them right now. Just from the chart, and because of my thesis that Google came out and had a giant piece of information, and the stock goes bananas. Tesla has had a moment, and I don't see how an Amazon moment is not somewhere in the next 3 months. It just because everybody's fighting the same game. You can see that Google gap. There's a Tesla gap like that. I think there's an Apple gap like that even in the last few months. There's the Tesla gap. Look at the Apple chart. I think it's the same thing. And so there you go. Same deal, I think twice. And Amazon hasn't yet done that, at least not recently. And so I'm attracted to Amazon because it's obviously a super credible member of the group, and it hasn't teed up a big gap announcement of some kind. And so if nothing else, it's a put spread conservatively with a little bit of room on the underneath it. But as far as names are concerned, within the Mag 7, I think Amazon is the most interesting of the bunch, just because of the way that the price, the behavior of the stock price, and my thesis that there's always that they all have a big rabbit that they're waiting to pull out of their hats. It's just a matter of when it's ready to go, which kind of brings up the Tesla thing tomorrow. And now the interesting thing is, I feel like when it's these well forecast events and these big events that are coming in, they actually tend to be generally, I mean, there are a few exceptions over the years with Apple long ago, but they tend to be generally anticlimactic. It's more the less expected event where then they come out and say something hugely significant relative to a massive industrial application of the technology that just wasn't previously known. And so I just think that that's where Amazon really has everybody and presents an opportunity.
The Tesla thing is interesting to me. The stock's actually bid after the close. I hope it is something transformational, honestly. I mean, I think this is the type of environment for it. I mean, the market is generally trending higher, as we see. There really isn't a wall of worry, if you will, in the market. And so, I mean, this is what I expect markets to do when there's no wall of worry. And when there is a real wall of worry, I expect markets to actually fall. I mean, that's just kind of the way it goes. And so right now, I think this is an absolute trader's paradise, this market that we find ourselves in. There's actually things where you can short vol and sell some strangles, believe it or not, even though the VIX is basically sitting around 16 and change. And a lot of them do happen to be in this whole ecosystem with AI and energy, right? Like it's the uranium names, the quadruple U, the NEE, those type of names have implied volatilities that are kind of high right now. And the stocks look like that. So that's the hard and dangerous part, right? Like you can either decide to just sell upside, or you could sell the strangle and hit both sides and possibly get hit. We'll see. Obviously, there's a lot of vol, and many of these tech names we mentioned. AMD just sort of pierced through the vol universe today with this huge move that just happened. There's Oracle, obviously, still has a lot of implied vol to it. Micron. So there's that. You can sell vol in those if you want. And then on the boring front, there's plenty of these Dow-related names that I've noticed more recently. I can't remember if Deere is still in the Dow or not. I think it is. Deere is one of them. I feel like Costco is. These boring ass names, if you will. Look at these charts, right? You see these names. You're like, these things aren't necessarily really going anywhere. If you want to park some money in these, you can. Last I checked, we still have farming equipment. That still is something that needs to be done. Costco, everybody still, well, I shouldn't say everybody, but there's a lot of people that use Costco, and they pretty much have everything you want. And so there's those type of names. They don't have to be these names that are up and to the right that we pulled up on the screen. It can be those. There's a lot of, there's so many different things you can do in the stock market right now that makes it such a trader's paradise. And then, you can try and get short. but I don't necessarily know how that's going to work in the time being. You got to give yourself some time frame.
As I look at sort of, I mean, obviously I've been looking for opportunities to get short to kind of try to nail down where the risk reward on it is, and at least looking at the indexes here, it doesn't seem like the risk reward is here. No. Now, I suppose you could say, okay, well, this is setting higher highs. If you look at just a basic momentum study here, in this case, I have RSI, but you can pick which oscillator you like. It doesn't really matter. They all show you basically the same thing. You are getting this kind of weird divergence thing where this is setting higher highs and this is not. And that's telling you that momentum is fading, but that's not enough to go on. There's just not a reversal signal here. I mean, taking a stab at a short here, as I did on this downtick, that makes sense. Because then you go, okay, well, maybe that's a top. Let's see. And then over here somewhere, you confirm that it's not, which is where I got out with the close above these highs. So unless you get, this kind of situation, this kind of a situation, this kind of a situation where there's at least a tradable something that you can look at and go, okay, maybe it's rolling over. Vol is really cheap. I could take a stab in a risk-defined way, and I'm either right or wrong, but at least the risk-reward makes sense to roll the dice and find out. But it doesn't really make sense to me here. Not in NASDAQ either. I mean, this is clearly making higher highs, not only on an intraday basis, but on a closing basis too. Same divergence, but doesn't really seem to make sense to actually try and take a stab at anything until you get some sort of a substantive thing that looks more like a turn. I mean, if you had to sort of guesstimate it, I guess, you'd say, okay, here's your sort of line in the sand. If you can get under this low, where this was the break above the high, the retest, and then extension, if you can get under this low, okay, well, maybe something different's going on. But at the moment, it's just not there. Same thing with Russell, where you're a little bit soggier in the sense that you're still inside this swing high here. So if you wanted to kind of make the case that maybe what's going on here is some kind of a double top type of thing here, and said, oh, we'll look at the length of these wicks and all this kind of stuff, maybe, but there's no confirmation here. There's not even a down tick against these levels. I would argue you need to end up somewhere back here again, at least somewhere sort of near this area. Let's call it 2460, 2470, somewhere here. And then maybe you've got something. But there's just not an attractive short here as far as sort of the market as a whole. Individual names, I don't think there's, in this kind of an environment, any individual names I'd want to short either. I mean, if I was gonna go shopping in this kind of environment, it wouldn't be for shorts, because to your point, this seems like the kind of to both of your of your points. This seems like the kind of environment where the market just isn't bothered, and a rising tide lifts all boats. And if you're going to do anything, I mean, some of these names, Jamal, that you were talking about, in particular, actually, Costco, Deere, that they're kind of off their highs and maybe near support levels, at least as far as Costco. That's interesting, because at least here, maybe you've got something that you don't have to buy at the highs, where there's kind of an area of congestion somewhere around here. Let's call it between about 909 and 880, something like this. You're kind of in that area. I would argue you don't really have a trigger to go, but names like this could be something that I'm watching. I'm interested in this right here. This is the Japan ETF, where we have had a massive breakout. We'll get to the yen here momentarily, but this has been a huge breakout outside of the US. Any interest here? Can I get you guys into some Japanese stocks?
Japanese stocks? I don't know about that. What's the liquidity on this, my man?
You sound like a door-to-door salesman on that one.
Sure
Can I interest you guys
in
in some Japanese stocks today?
The only real headline that made any sense over the weekend, and this is how I arrive at Japanese stocks, was the very surprising change of government in Japan. The election over the weekend was for the leadership of the LDP, their ruling party, and basically whoever wins gets to be prime minister in lieu of the one that is just resigned, and the expectation was that it would be Shinjiro Koizumi, who is the former prime minister's son and kind of the continuity candidate on what's going on. And the outcome actually was that it was Sanae Takaichi, and she's very dovish in her BOJ perspective. So she thinks all of this rate hike commotion that the BOJ has been doing is all wrong, that actually they need to go back to where they were under her mentor Shinzo Abe, where they were printing all the money that they could possibly print and doing tons of fiscal stimulus and financing it with massive amounts of central bank backstop. And so perhaps not surprisingly, Japanese stocks like that very much. And of course, the other thing is the Japanese yen.
So was this here, like a surprise result from this election this weekend?
Yes.
And is this becoming, I mean, to me, that's probably the most interesting. Is this becoming the norm, surprises in elections across the globe?
That is an interesting question. What's the other one that comes to your mind recently? I mean, obviously,
besides
it's not
the
an
US,
election, but the French prime minister resigned today again after a month on the job. This is, I think, not a single French prime minister has served over a year, I think, of the past 3. Wow. So they can't really get it together, and they're pushing Macron to hold a snap election and basically rejuvenate the government's mandate, because none of the parties can agree enough to get a prime minister and to get a budget through. So we could get a shocker of an election in France. The election itself is not on the books, but we've lost another government there as of the past 24 hours. Interestingly, the euro could not even begin to notice. So if we look at what the euro is doing here, it just does not care. But this was maybe the other thing that's on my mind here, sort of between the yen, the lack of anything but slow drift higher for equity indexes. This is kind of the other story, the broader dollars story. If there was anything sort of from a macro perspective to look at, and we'll take a look at crude oil in a second, because that might be the other one, but the dollar here seems interesting, because if what you wanted to do was buy cheap and sell dear, as it were, you're not doing that with stock indexes. You're basically saying, okay, well, we're at record highs, maybe we'll get new record highs. And this is something else. This seems to be attempting some sort of a turn. We've stopped falling on the dollar going back all the way to July. And that's with all the rate cut talk, with the Fed getting Stephen Myron on the board, which is, I mean, as direct of an insertion by the White House as you possibly can think of. And we just saw in the last policy meeting, clearly that's the line that he has taken. So there's all kinds of reasons to be worried about the dollar, and yet it's not falling. which tells me that it's probably getting ready for some kind of a more convincing rally.
And so, what do you think? I mean, obviously, I agree with that. What do you think is where do you get the most capital efficient exposure to a rising dollar right now, in your opinion?
In my mind, I mean, obviously, in hindsight, it was the yen over the past 24 hours. Thankfully, I was already holding it, and so I was able to capitalize. But I wouldn't necessarily jump into it right here. I think the risk reward is kind of shot a little. I think the euro actually looks pretty attractive.
That's been my play
here. I think this looks pretty good. I think even if you were very modest and said, "Look, I just want to come from here through the bottom of whatever this congestion is, and just test right here," even just that, just simple.
That's been my play. I'm along the 118. I am actually along the 118, 115 put spread in the euro. I'm out in January. I actually was so far out that I eventually kind of turned it into a butterfly, but I'm basically profiting off of this move today to some degree. Not as much as I could have if I would have just had a straight up put spread. I have it as
also
a butterfly
through the yen, Jamal.
Through the yen. Yeah, correct, Dylan. Yeah, I'm doing it that way. Again, I always say this. I wish Dixie was able to trade. I know it's not. I know there's UUP. I don't care about that. It's really the yen and or the euro. And for me, the euro is just the best, the easiest way to play it. It's the easiest way for me to comprehend. Again, I feel like, and this is exactly it. I feel like there's always more geopolitical stuff that pops up via the yen. And while, I feel like, sure, some of the move might have been because the dollar was up today. Clearly, most of the move from the yen had to do with the geopolitical situation that happened. So, but and maybe to some degrees, again, the French, the PM resigning probably had a little bit to do with the fall in the euro today. But I just feel like that's one of the better ways to play it. So that's the way I'm doing it.
Yeah, I mean, and in fairness, DXY, the dollar index, was a basket that was created before there was a euro, and then there was a euro. And so most of those currencies that were in it to make for a diversified basket are now just euro. So that basket is so skewed euro that you might as well just trade the euro. You really don't need to trade the Dixie, because if you trade the euro, you're trading the Dixie upside down. Because there can be other baskets of dollars.
Is so heavy.
Yeah, because the euro weighting is so heavy. There can be other baskets, of course. You don't have to do Dixie. You could make your own basket, whatever you like. Just put together a collection of trades against the dollar, and there you go. You have you have your own basket. Congratulations. But as I've done, for example. But Dixie itself, if you want to get exposure to the dollar index, it's euro upside down. So you can just
is there a point at which we get a move in the dollar such that it disrupts this gold and silver move? And hell, even include copper in there now. Even copper was, so discombobulated after the big dislocation that happened. And now all of a sudden it's moving up just like it's metal all over again, which makes sense. Is there a move in the dollar? Is there a level at which all of a sudden gold and silver says, hey, we're not supposed to be going up if this thing is actually moving up meaningfully? What do you think it is?
It's an interesting thing. I think the fact that the dollar has been kind of steady here is probably helping the metals rally without having to think about it. Like at the very least, the dollar isn't rallying up a storm.
Yeah, when there's no bullies at school, the band kids can bring their lunch and not have to worry about it getting taken.
See, there you go. But what's weird is none of the bullies are apparently getting paid attention to, including in the bond market, because metals should hate that we have this kind of sogginess in the bonds. They shouldn't, this should not be okay for metals. I mean, since the Fed, which is right here, yields have gone up. Metals could not care less. And that's kind of interesting also. They appear to be powering higher despite the fact that, at least since the Fed, let's say, you've earned higher on yields. But we can look at the front end here as well.
I got to tell you, the bonds is probably the
same
one thing
story.
that doesn't make sense to me over the last several weeks.
Same story. I mean, they kind of make sense to me. It's just weird that metals could not even begin to care. So if you look at what's going on in the bonds, let's take a look at the SR3 Z5 contract first. This is for year end. And you can see it's been pretty steady, which tells you that expectations for Fed monetary policy by end of this year, this is December of this year, not really wildly changing here. Pretty stuck where they have been. But if you look at what's going on for next year, this seems to be where the action is. And you can see that since basically the Fed comes out, which is right here, you're going in a direction where you're shaving rate cuts away. So obviously this is the quote. So think of this as the bond price, and the yield is inverse. So if this is going down, then yields are going up. So we're going in a direction of fewer rate cuts in the wake of the Fed, in particular for next year. And we've taken away just about 25 basis points at this point versus what we had in the market before the Fed. In that environment, it does make sense for the dollar to kind of steady and try to bottom. It does make sense for yields to go higher and for bonds to come in. That lines up. Metals could not even begin to notice, though. And you start to get this narrative out there, and I'm curious what you guys think about this. Everybody all of a sudden is a currency market genius, and they've come out and they've said, ha ha ha, well, it's the everything but fiat rally. Everything is going up.
The debasement trade, I think they call it.
Yes. The debasement trade. And it's funny how this happens. People get their little pet narrative, and it sounds good when they say it. It feels good to say. It rings accurate-ish to people's ears, but it's obviously nonsense because the dollar is not falling. It's holding, and it's been holding since July. And if this was that kind of a thing, then everybody's favorite pretender to real value would be doing something at least a little bit more convincing than just this pop over the past, let's call it week and a half. I mean, Bitcoin is up to the top of its range. It's pushing past it today, but it's been basically stuck since early July until the past several sessions. Compare that with gold, and it's a very different story. Compare it with silver, it's a very different story. They've been rallying for much longer. So, what are your thoughts? Is this just catch up, or is this whole narrative just wrong?
Which one, the debasement narrative
Yeah.
or Bitcoin as a fiat alternative? Or both?
The debasement narrative whereby people want to have everything but cash, but
Well, I mean, I
fiat cash.
think that there's two parts to the debasement narrative, which is that the non-fiat currencies, if you will, meaning specifically gold and crypto, and gold especially, is really performing.
Yes.
And I understand your skepticism in terms of where Bitcoin ultimately is, but if you look at its price action the last, basically half of the debasement trade, as far as I'm concerned, is working, meaning the
gold part's working, sure.
And even Bitcoin for the last week or whatever that is, it's just that the dollar's not falling. It's like the non-dollar things are rising. Gold is most obviously.
Yeah.
But the dollar itself is obviously not falling. So,
well, yeah. So the bottom on gold here, if we want to go back and say, okay, so the kind of the rocket ship portion of this move starts, let's call it mid to late August. That's sort of the bottom. And if you want to be very conservative, you say, okay, here's the range top right here. So let's say the breakout is beginning of September. If you look at silver similar story. Here's beginning of September. We take out the high here. Off we go. Okay. Let's look at what the dollar has been doing and look at the dollar index here for sanity's sake. Since the beginning of September, the dollar has done nothing. It's attempted to go lower, then it's come back. It's basically where it was. So if this is an anti-fiat, anti-debasement kind of a thing, well, the dollar's not showing it. You'd think that if it would be that, then it would benefit crypto as a kind of anti-fiat thing. And here's the beginning of September, and at least timing-wise, you have to wait until the end of the month. So you need essentially an extra month for crypto to notice, if that's what's going on, if this is some sort of a catch-up. And through all of this, as we were just saying, bonds are down, yields are up. But the overall trend in bonds still higher since the beginning of September. So there's seemingly no kind of issue that people have buying U.S. paper and voting confidence in sort of dollar-derived fiat value that way. So it's kind of incongruous. I mean, obviously, the metals are showing what the metals are showing. There's no question.
I mean, it's not. I would just say the dollar has fallen. I wouldn't say it's not incongruous. It's more like locking up the barn after the horses have left. Like the dollar has already been debased, basically. To whatever degree it was going, and that happened in the spring. And then everybody saw that, and now it's piling on non-dollar currencies, specifically gold, maybe in anticipation of the more cynical, another view is that gold is telling you something about the future of the dollar. I mean, that the gold owners know something we don't would be a more alarming point of view, I suppose.
It would be
Jamal, do you think this is about sequencing? To Dylan's point, that basically like some of these markets are just catching up with what the dollar did in the first 6 months of the year and sort of figuring it out? Or are the metals just doing something different than what this debasement thesis is, because they're the only ones that seem to really fit it neatly?
Yeah, this metals trade, I mean, it's first of all, look, on the one hand, on the it's technically clean. I mean, honestly, most of every time it's been above the 1 week and 2 week moving average. If it retreats, it goes back to that. It doesn't matter if you pull it up on a year to date, on a full year, on a weekly. It doesn't really matter. They've just been pushing higher, and there's a lot of liquidity underneath them. This is clearly a global situation, right? Compared to a lot of some of the other things that we look at, gold and silver are clearly showing you something global. And to Dylan's point, maybe they know something that everybody else doesn't seem to know. I mean, the last time we saw this type of move was 2010, 2011, when we saw gold and silver making these type of moves. And I don't even remember the reason then, but I know if you tried to get in front of it, you lost for the most part. And so that's why I haven't tried to get in front of it. I'm basically waiting on some weakness. I think you have to be smart in this way because, look, this is a momentum play. This is a momentum type of trade. Bitcoin, on the other hand, is a little bit different. I mean, I think, all of the positive news that has come out in Bitcoin, let's think about the last 3 years of Bitcoin. And, it was any negative news and this thing was getting hammered, getting rocked. The FTX scandals of the world were just weighing it down. And now you have this widespread adoption and you have all of this fund flows that are going out and buying Bitcoin. And I mean, they're selling it too, I guess, to keep up with whatever allocations they have to in their ETFs. But nevertheless, it's definitely a catch-up play, Bitcoin. And again, you talk about from a technical standpoint, it paid its dues. I mean, forget the long term, just in the recent time, you talked about how the chart in Bitcoin was essentially trading sideways until the beginning of this month, and then it absolutely kind of took off here. So, it's I mean, it's it's fascinating to watch these three, when you talk about Bitcoin, silver, and gold, doing what they're doing compared to overall index level, the S&P 500 and the NASDAQ. I mean, this is going to be a year we're going to be able to look back on and say, hey, remember when it does this? It's just a reminder for people, though. This is a reminder that this won't stay this way. And when it changes, just remember what was happening at the time. Remember how it changes and trade accordingly.
Yeah, I mean, in a lot of these markets, it feels like you kind of have to hold two ideas in your head at the same time, and neither of them constitute thinking, lest we go afoul of our core thesis.
Don't be using the T word.
Yeah, we can't even be using that word. Exactly. So the first idea is that finding momentum here is silly. And the second is that we're at very heady levels, and at some point you will hit a wall, but there's no knowing where that is. And so you kind of have to be both momentum-minded but nimble.
Well, I'll tell you what. If Tesla announces some fantastic thing tomorrow and that stock is up $100, then you're going to hear more and more people talk about 98, 99. You're going to hear people talk about that time frame where stocks just went up and they swung huge. Because that's kind of, again, I things don't necessarily, they don't, what do they say? They don't repeat, but they rhyme, right? And this is rhyming.
There's an interesting comment on that today.
This is
exactly
with that market.
Yeah. I mean, so you're in very good company on that assessment. Paul Tudor Jones, the great Paul Tudor Jones, came out earlier today. I saw his comment where he was basically likening what's going on here to October 1999 and saying, yeah, the .com whatever is coming, but it's like 5 months away. And what's going to happen here is some kind of a blow off top where you're just going to have a massive rally into a crash where valuations eventually just feel like they've completely departed any level of sanity, but that the space between now and where that happens is October 99 adjacent. So you have like 5 months of whatever in front of you.
The only problem with that is that markets don't fall like they used to. That's the real problem with that. We have circuit breakers. We have all these different things to prevent markets from doing that. I honestly kind of wish we still had some of that, because that allows the market flush to happen as opposed to the way it did in April. I mean, April and May were kind of painful because they didn't just flush. They didn't just fall. There was all this stoppage, and it took way longer than it probably should have. And so that's the only thing about the blow off top. Like if it happens, it's going to be, it's a lot more annoying than scary, if you will.
Yeah. I mean, this was, at the beginning of the year, this was a meaningful sell-off. And a clean one, where things were going down in a semi-orderly fashion. You could find spots in here, and I did. I mean, I got short somewhere around here when you took out this range. I mean, you had clean spots to sell along the way. But to your point, this is not sort of fall of 08 where everything happens all in one go. I mean, if we go back far enough here.
Look at that. Look how high we are. You got to raise the chart.
Yeah. Let's go to COVID. Here's COVID. I mean, there's some real nastiness here.
Yeah, and that's from February to what? To May? Also,
that's
kind of February
from
to April. No, it's February
to late March.
Yeah. See, yeah. And even then, we still had circuit breakers, but that was a lot faster.
Yeah.
Obviously, a lot more fearful. I mean, hell, a virus that's going to eat your insides is a hell of a lot scarier than tariffs.
Yeah. I mean, this was probably more what I'm looking at. This was the rate hike cycle sell-off in 2022, where we were down basically all year. So we started in January. The turn was October, or what turned out to be the bottom. subsequently, was October. And we then held basically in a sideways range and didn't get a real meaningful rally until June of next year. We essentially just idled after we set this bottom. Here's, again, COVID. Doesn't look like we can go back all the way to 08 on this chart. But if there were to be some kind of a shakeout, to your point, it would be more of a stutter step in the sense that the circuit breakers would kick in, the algos would kick in, and you'd kind of do this choppy slide lower. I suppose that's helpful in the sense that it would let people get out without essentially just taking everything from them in a day. So probably like a Black Monday kind of risk is probably lower here. But if the Paul Tudor Jones analog holds and this is sort of like late 1999, then there's a big wedge of time here still before the ridiculousness is ridiculous in the minds of the market.
I don't know, and none of us ever do know what brings that to fruition, but I'm curious of what you guys think about what everybody's saying, all this money being pushed around amongst all of these AI-related names. You know, I don't think I've never seen that I can think of, and you can help me, you two help me if you have, a situation where OpenAI is controlling the fortunes of so many different names, whether it's Oracle, whether it's AMD, whether it's NVIDIA, you name it, insert the tech name, and they're having some type of relationship or some type of money being pushed around. And you know, there's a ton of different memes right now, right? Of the power strips where you got the power strip plugged in back into the power strip, is almost if the money is just being pushed around from here. You get it, Oracle, you get it, AMD gives it back to OpenAI. What do we think about that? I mean, is that something that eventually leads to this correction that we're potentially going to see or not?
Sam Altman is J. Pierpont Morgan. And OpenAI is the House of Morgan, iteration first and probably second under the sun, but Jack Morgan. But sort of my mind immediately goes to when we didn't really have a central bank, we didn't really have economic policy making that was very advanced. We had J.P. Morgan, the man, and when things went wacky, he went and kind of told the markets what time it is and organized consortiums of companies and had people on the boards of those companies and controlled those companies both directly and indirectly and essentially ran the entire economy. It didn't end great. It ended with the railway boom and bust, which was a very similar episode to this, where at the direction of, in many cases, J.P. Morgan and sort of adjacent banks and a very small group of banks, we built a ridiculous amount of railroads and just supply and demand didn't match. There was lots and lots of hype and lots of supply, and it did not match demand. And that was telecoms in 2000. In many ways, that's AI now. There is a ton of AI supply that's being built with data centers and et cetera, et cetera.
But there's more than that. I mean, AI.
It's not a lot of demand.
Even if the layer, I mean, I disagree with you a little bit. The layer of AI that is basically super search, right, is pretty much deployed. You know, most of the people that I know now, compared to a year ago, use Gemini or GPT at least as a super powerful search tool,
or Perplexity, or something. Some
iteration of it as sort of super, right? So it's not just building the picks and shovels. Now they're not mining giant, like let's call super search, gold flakes, right? They're not pulling out huge chunks of gold from the side of Mount Tamalpais or whatever, but they are pulling gold flakes with super search. And then I also think that a lot of people, probably not as many, but a lot of people still are using it for some version of drafting and writing, marketing emails, and like sort of rudimentary communications, at least in terms of drafting. Now, obviously, some version of extremely developed search plus some document drafting doesn't justify the enterprise value of the Mag 7 or anything close to it, right? But I do think that the expectation is, and I think that's why you get the doomsdayers out there like me with the murder drones and whatever, but that the expectation is that basically all operational function from move logistics, communication, marketing, driving, legal, and all analysis, that this ends with only the most extreme philosophical analysis, because I think the financial modeling at the investment banks all goes over to AI and goes away from the analysts and the juniors. You're kind of left with the creative professions, super senior people across every profession managing AI. And I'm not trying to get into a labor market discussion. I'm just saying that I believe the reason that the Mag 7 have as much value as, I believe, there's no way that the Mag 7 could have the valuation they have if the expectation wasn't what I'm describing.
The expectation, yes.
The only way you can justify the present value of the Mag 7 is on the expectation that it is going to do what I just described.
I think that's exactly right.
And you're going to say it's about when, and who knows, and I'm going to agree with you, right? That's why this is a wild situation.
To this point, obviously people are studying this very question ad nauseum, and for good reason. Exactly what you've just described. The valuation of all these names is based on the idea that all this boom in supply and the valuation of all of these names that comes from said boom, baked into it is the assumption that this supply will find demand and that ROI will be had. And obviously we've had a variety of data points, including from, let's say, MIT a couple months back that says, look, this stuff is not getting adopted at scale. That is already shrugged off by the market. But another one just this week from McKinsey saying that while consumers' use of chatbots is rising, the success rate of AI pilot projects in firms that McKinsey surveyed was less than 15%. Now, obviously, that's kind of a fuzzy thing, and we're looking at it's McKinsey.
Here's a game I'll play with you, both of you. Would you rather be short the Mag 7 or gold? If you have to be short one.
What time frame? Are we talking for the next week? Are we talking for the next 6 months? Or are we talking about the next year?
The tasty root fundamentals, the next 45 days.
Oh, like volatility short?
Or no, directionally short, but for a month or two.
Directionally short?
Directionally short?
You have to be short one. You can either be short the Mag 7 or you can be short gold.
This is a question.
I'll go first. For sure, I'm short gold. Forget the Mag 7, you're a dead man walking. At least with gold, you have a chance that the dollar rallies, that sort of offsets it a little bit. And and for me, I don't see how I can like the dollar and not be, at least in terms of sentiment. I'm not saying that I'm financially short gold, but how can I not hold a marginally bearish point of view on gold if I have such a strongly bullish point of view on the dollar? So if you put a gun to my head,
long both,
and I have to get short. What's that?
I'm long both. Although I'm long silver.
No, of course. You're long gold and the dollar.
I'm long silver and the dollar. I got shaken out of my gold position a few weeks back, but I've been holding silver for a long time. So I am both long precious metals and the dollar.
Yeah, but that's different.
I would short the gold. That would be my answer.
But you wouldn't short gold other than my sort of false construct. I presume.
Not at the moment, no.
Short
I
gold.
I am interested in getting short gold. As a person who loves to trade momentum plays, I just don't see the usefulness of doing it at this point in time. But sometime soon.
I agree. I mean, if I had to short one, it would be gold for this reason. Gold is an actual two-way market. There are buyers and there are sellers, and there's not a bias. There is just whatever the thinking is. And if I had to pick between two markets that I think are both overdue for a correction lower, I'd rather be short the one that doesn't have gazillions of pension funds and endowments that are perpetually long, that never short, and that are the biggest holders of the assets in the space. So the stock market is obviously biased higher. So I think it's going to have a harder time falling than gold is. And if it were to fall, gold would fall harder, one would think, just on liquidity and momentum grounds. I wouldn't sell either here, but if I had to sell one within sort of this construct, Dylan, it'd be gold because it's an actual 50-50 kind of market, whereas stocks are biased.
I mean, the Mag 7 is kind of a landmine. I mean, if you look over the last several weeks, the months, there's always some type of news that comes out in any one of these names, whether it's Apple and Google / whatever happened with the antitrust situation, Tesla more recently, and maybe even Tesla tomorrow, Nvidia with some however many billion-dollar deal with OpenAI. Like, it's kind of a landmine to try to be short any of these.
I tell you what, though, if you flip the question and you ask which one of these would you buy, like what would you buy? Like if you had to buy one, the Mag 7
I'd buy Mag 7.
gold, it'd be Mag 7 for sure.
Yeah. For that exact same reason I just said.
Whereas gold has been vertical, just look at this Mag 7 ETF. It's in a range. It maybe has legs. More.
Mag 7 does.
Yeah, Mag 7 does.
Yeah.
Because if you look at the overall ETF here, I mean, it's basically been in a narrow range since the Fed. The Fed is right around here. I mean, this is the actual Fed, so you get a little gap into the week of the Fed. Monday, Tuesday of that week, you kind of idle. Here's the Fed itself. Since then, you've been in a range. I mean, obviously, individual names have done individual things, but this overall Mag 7 ETF has been basically sideways. So if you're going to look for any kind of value, and there's a little bit of IV to work with here. So you could be selling puts here, maybe. So there is actually something to do, whereas gold has been parabolic. So if there was one to chase, maybe this one after a digestion period rather than gold after no digestion period.
These things are like superheroes. They all have their own individual story. I mean, they really do. And they, Dylan mentioned Amazon earlier. Amazon's been fairly quiet. All it takes is for some type of situation to come out, and that's going to pop off. We just saw Nvidia pop off not too long ago. We've seen Tesla do it. So that's the easy answer for why you want to be long Mag 7, because they always have something that could pop up news-wise.
Send Tesla humanoid robots to run Amazon distribution centers, and you have both.
Yeah, I mean that's why I like Amazon, just as a bet on the rotation within the Mag 7 for like a popcorn popper.
Before we get off
at the moment,
before we run out of time here, the one thing I wanted to make sure we look at today is crude oil, because if there was ever a move. I mean, this actually is starting to look like it's doing something, finally. And we're going to take these moving averages off because they're more lines than I would put on a chart. But you seem to have had a break here, finally. And a break and a retest. And as much as I love horizontal lines because they leave no subjectivity, you can kind of get a sense of what's going on here. So clearly this was being held and whatever you saw last week, there was a break. There's a little bit of a retest here. If you read the mainstream finance media, it's because last week there was expectations that OPEC was going to massively boost production. I personally could not care less what OPEC and OPEC Plus do. I think they're useless, and they've never really met their quota since they decided to have a collective one in 2014. They say things, but they never make good on those things. So I don't think anybody should care, but markets do. So apparently. So this thing sold off hard on Friday. It's bounced a little bit today. The OPEC announcement came today and was a little bit underwhelming. They didn't boost output by as much as markets thought. Let's pretend for a second that this matters. So we'll get a little bounce, but ultimately the break holds. So I'm a little bit short oil here, just to see where this goes now. In a risk-defined put vertical kind of way, I'm doing it through USO so as not to run into larger futures contracts and keep this very sane. If not Japan and if not the yen, can I get you into a crude oil short here?
We got competing trades, buddy. I'm long oil from 60-80 for a small pop. We'll see what happens. This has been one of the more boring trades in the market compared to the rest of the stuff that's going on. And it's either going to bounce back up and then fade again, more than likely. And it's kind of quiet. And until it shows something along the lines of a lot of the things that we talk about with volume, the gold, the silver, whatever else in the world, I'll get heavy into it. But for now, I just got a small trade, and honestly, I could care less what happened because I don't think a whole lot's going to happen with it.
Dylan, any appetite to take oil anywhere, this way or that?
Unless it's clear geopolitics, I won't play. I don't have a. I view it as a great sort of short in the situations that but outside of that, I try not to get involved.
I will say, since we're not getting economic data, the ISM numbers that we got last week were pretty awful. They do suggest that the U.S. economy has stopped, essentially. It's not shrinking, but it's not growing. So that'll be an interesting thing to monitor here in the coming days. And what do you know? Macro Money is coming up momentarily, where we're going to go over all this stuff in excruciating detail. So don't go anywhere. I'm about to bore you to tears for 30 minutes with macro charts on macro charts. And we'll be back with this show tomorrow. Thank you, gentlemen.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock, like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at tastytrade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
tastytrade has crypto, and you can trade with 0 commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
No data, no problem is apparently the message that we are getting from financial markets. We, of course, had a jobs report that didn't come out last week. We had a bunch of other pieces of data that will not come out while this U.S. government shutdown continues. But the markets do not seem to care. What we have instead is a relatively sanguine sort of start to the week. So what does it all mean? That's what we're going to try to figure out here on Macro Money. This is Ilya Spivak, head of Global Macro here at Tasty Live. And what we're going to do here first is just take a look at what the markets did last week, how they are shaping up for this week, and what that might mean going forward. Because, of course, we are, much as a Fed official might bemoan at the moment, flying kind of blind as we look at what these markets are shaping up to be doing and what that might mean going forward. So let's first and foremost here take a look at what these markets did last week and see if we can't divine some sort of clarity out of all that. We can see a modest rise for stocks last week. We get a bit of an increase, 1% for the S&P, a similarly sized one for the Nasdaq, though a little bit stronger there. We likewise have a interesting perspective on yield. So this idea that the market is primarily concerned not so much with economic outcomes as it is concerned with how much easing is going to come to give the markets this kind of resilience about what is on the menu next and give them the defenses that they need to weather whatever may be coming down. That sort of logic seems to be prevailing here. And what we're finding is that the sort of patterns seem to be holding. And in that sense, we have the kind of setup that we've been looking at for a while, which is to say yields down, stocks up, gold higher, the dollar a little bit weaker, but ultimately not going very far. The euro, we can see, gained a little bit, 0.3%. The yen gained a little bit. That's 1.2%. Bitcoin doing its risk appetite on steroids thing last week, up 12.6%. Crude oil still on its own mission, down 7.4%, ostensibly around rumors that OPEC plus the OPEC cartel and like-minded non-members like Russia, say, they are or were going to announce a big output increase. That was the scuttlebutt last week. Whether you choose to take OPEC and like-minded producers seriously, OPEC plus the sort of bigger grouping, that's not something that I sign up to. I don't think they're a very effective and a very clearly impactful force on the market, but nevertheless, speculative juices can be activated by things that don't actually work. If enough people in the markets want to act on it, that's all that you need. And so we end up with this big crude oil sell-off. If we look at the way we started the week here, and this snapshot was taken a bit before the close, so things moved around a little bit since then, but only a little bit. The thrust of what happened here is about as it presents itself. And again, you see stocks are higher. You see NASDAQ leading a little bit, and that speaks to tech outperforming amongst the major sectors here today. Yields, interestingly, higher, but not really moving outside of their recent ranges, so it looks like more digestive than a change of direction. Crude oil bouncing a little bit, although, of course, last week's sell-off makes this bounce a drop in the bucket, as it were, and more corrective. But that OPEC announcement didn't come out, and they delivered a output increase that was smaller than some of the whisper numbers, and so perhaps that's what's going on here. But only a slight correction for oil. Gold continues to power higher. The dollar back on offense. That's largely thanks to a big move in the yen. The yen cracking lower here by almost 2%. That's after elections over the weekend, where the very dovish candidate for leadership of the ruling LDP party, Sanae Takaichi, won unexpectedly. Shinjiro Koizumi was supposed to win. He's the son of former Prime Minister Junichiro Koizumi and was the sort of continuity candidate. But instead, we have somebody that favors the Bank of Japan abandoning the rate hike path that they've been taking, and instead going in a much more dovish direction. Sanae Takaichi is the protege of former Prime Minister, assassinated Prime Minister Shinzo Abe, and his sort of approach to things, and that was get the BOJ to pump out as much cheap liquidity as possible, and then fiscal largesse gets paid for, and on we go. So that seems to be her logic too, and in the wake of that surprise leadership contest outcome, she's now essentially sliding in as prime minister, taking over from Shigeru Ishiba, who's resigned, having lost his mandate. And so we are in a sort of move here for the dollar, it seems like, whereby the dollar had a big rally against the yen, and that's kind of knocked other currencies with dollar strength as a sort of ripple effect. And that's what we're seeing here. In other news, of course, France's prime minister resigned, but that doesn't seem to be having a meaningful impact on the euro directly. As far as data is concerned, because of course we are still in the midst of a government shutdown, as we mentioned at the top of the show, so we're not getting economic data that we might otherwise be getting. We didn't get employment data in particular last week, the very closely anticipated employment data. Instead, we got this ISM survey results. This is from the Institute for Supply Management, and probably the latest meaningful barometer on where the U.S. economy is. And this does seem relatively supportive for risk sentiment if the markets don't care about having a good economy and all they care about is having rate cuts, which seems to be still where we are. The number for manufacturing, as we discussed last week, a little bit better than expected in the sense that 49.1 is a slower contraction in manufacturing than the expectation, which was 49. As ever, these numbers are done in the logic of PMIs, so 50 is neutral, above 50 is growth, below 50 is contraction. The further you go below 50, the faster the contraction. The further you go above 50, the faster the growth. And what you see on the services side, this is the number that came out on Friday, and of course the much more significant number, because services are a much bigger piece of the U.S. economy than is manufacturing. The expectation was a relatively steady result, and what we ended up with was stasis. The service sector has slowed down to standstill. Taking that together with the 49.1 on manufacturing, the economy as of this data, this is September data, seems to be at best idle, at worst narrowly shrinking. And that also, that obviously depends on how you weigh the two sides. Services are a little bit more impactful. As we said, they're a larger share of the economy than is manufacturing. And so you would err on weighing the 50 more than the 49, so maybe we're closer to standstill than we are to a contraction. But this ought to be music to the ears of rate cut hopefuls, because, of course, this suggests that there's not an inflationary risk that the Fed necessarily needs to worry about. It can focus on boosting growth. Now, sub-indexes here on this. On the prices front, a little bit softer on price growth, although, of course, it's still very elevated, a little bit lower on manufacturing, and at the very least, not meaningfully higher on services. So this rapid rise in inflation that we saw from the beginning of this year for both manufacturing and services, in large part thanks to the tariffs, we don't have that getting worse here in these most recent numbers. Meanwhile, the situation with employment still points to contraction. Obviously, both these indexes are sub 50 for both manufacturing and services, and so you get a sense that inflation didn't get worse, employment kept shrinking, the Fed can keep cutting rates. Now, in lieu of meaningful data this week, there's not much to anchor around, but there is a little bit, and the focus here, of course, on the absolute avalanche of Fed official commentary this week. Perhaps they feel like they need to be communicating with markets more robustly in the absence of data. You've got here speeches from everyone under the sun on the menu this week, starting tomorrow, including Fed Chair Powell on Thursday. But the big standout as far as releases go is Wednesday's FOMC minutes from September's meeting. Now, looking at the policy statement from that meeting, just to refresh ourselves, this is where the Fed begins cutting rates. The logic here is familiar. Job gains have slowed, is the edit here, and the unemployment rate has edged up. We see that the committee is attentive to risks on both sides of the dual mandate and judges that downside risks to employment have risen. That's how this rate cut is justified. Then, of course, we get this summary of economic projections where you get an interesting story. Expectations for growth and inflation are nominally revised higher. Expectations for the unemployment rate next year and the year after are revised lower. Nevertheless, I mean, you'd think those are not dovish edits, but nevertheless, we get a situation where we get 3 rate cuts on the menu for this year, from 4.4 down to 3.6, 1 cut next year, 1 cut the year after. We had 50 basis points already on the menu for this year. We now have 75. In large part, that's thanks to this out there dot, almost certainly coming at us thanks to newly minted Fed Governor Stephen Miran. He was the White House's insertion onto the FOMC and clearly takes the White House's view, a much more dovish view. And so based on this kind of far away from consensus dot here, we end up narrowly with a 3rd rate cut in the forecast. From the market's own perspective, they too are more dovish than the Fed is signaling. They're looking for at least 2 cuts next year and about a 50-50 shot on a 3rd. For this year, looks like we're at 37 basis points, so at least 1 more cut left. That's net of the one that we've already seen. And about, let's call it 12 basis points in the direction of a 3rd. So nominally speaking, this would say that the probability of that 3rd cut is about 50-50, but the markets are much more convinced. So here's the October meeting, and we can see that we're well into the high 90s for the likelihood that that cut occurs. Not exactly controversial. And for the December meeting, this is where it's a little bit fuzzier, but nevertheless, we're well north of 80% today. As of Friday, obviously a week ago, we were closer to 60%, but we're still solidly better than even going as far back as a month ago on that third cut. So the markets seem pretty well priced for what seems to be going on here. And so we're going to be looking at these minutes and trying to divine whether there's anything there that gives us a sense of why it is that the Fed is so narrow in its forecasting, and see if what the markets end up with is ultimately something of a letdown. Because if we look at, again, the way that these relationships have worked, we can see very clearly that after this kerfuffle with Liberation Day, where stocks ultimately find their bottom, and it turns out that against all odds, the administration is in fact amenable to market discipline and is in fact of a mind to back up when things look hairy. You get that very clearly in April, where the markets get, as the president described them, a bit yippy, whereby stocks, bonds, and the dollar all fall at the same time, and the administration backs up, and there's a 90-day pause, and things even out. And so on that basis here, you seem to have a recovery in sentiment, but not so much a recovery in other things. If you look at monetary policy expectations here, they travel a little bit with this recovery, but then go into a dovish direction. And so it seems like the rest of this rally from, as we've pointed to before, about here, which tellingly is the same spot right there where the break initially occurred. So from about here onward, once you've recovered this this period of risk aversion, this seems to come alongside with increasingly dovish policy expectations. And when we initially got the rate cut here and things stalled, it seems like stocks stalled as well until we started going back into a more dovish direction once again, and there was resumption. So it seems as though the markets really are of a very simple mind here and saying, well, if there's more cuts, that's good. If there's not more cuts, then not so good. It's a very similar story in the dollar, where we can see that the dollar is attempting to bottom here. This is the low from July, and we can see we're holding on to those levels here. And as the rate cut cycle starts and expectations for further easing dilute even a little, the dollar seems to be done falling. So this is the question du jour. How is it that the Fed is forecasting faster growth, lower unemployment, faster inflation, and only one cut next year, and yet the markets are much further out on that forecast, and that hasn't bothered anyone so far? So that's what we're going to be looking at in these minutes and seeing if, in fact, the Fed can make the case that we don't need as much easing next year, which, of course, the markets wouldn't like to see, and then perhaps see if that makes a difference to sentiment. For what it's worth, the Atlanta Fed GDP Now model tells us that economic data coming out and feeding into third quarter GDP growth expectations has been broadly positive, That's how the slope of this line ends up looking this way from the forecast model. We likewise see from the City Economic Surprise Index that U.S. economic data has tended to surprise on the upside going all the way back to July, which may actually explain how the dollar is as well positioned as it is here in the start of that recovery. And so, such as we get from economic data seems to be suggesting that maybe the Fed is right, and maybe the markets are hoping for more than they're going to get, which presents a point of contention. The only piece of data that we might get this week that might meaningfully illustrate this outside of the pharmacy minutes is the University of Michigan Consumer Confidence Survey. We're expecting weaker readings here. The sentiment index expected to come down. The index measuring current conditions expected to weaken. We'll see if this gives us any kind of extra guidance on what's likely to happen next, because of course this is consumption, and that's well over 60% of economic growth. So if the economy is in fact at standstill, as this seems to imply, then maybe in fact the Fed can be convinced to give us more rate cuts if consumers dial back or keep dialing back in inflation expectations and sentiment is a little bit better anchored for it. And that is macro money for today. As ever, we are here Monday through Thursday, right after Overtime, a show I co-host usually with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Likewise, writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, of course, Shelly Van in the house. Shelly, what's going on?
Hi, Ryan. All-time highs.
Yeah.
It is up October.
It is.
So this is exciting.
You think it continues, or did we, I guess, use all
continues.
of our ammo? I was going to say something else that's probably inappropriate. Did we, fire all our shots here within the first week? What do you think?
No, it keeps going.
Where do you think it goes to? New all-time highs. I mean, you got the sky's the limit, I suppose.
Sky's the limit. I'm just very, very excited because my very trenchy wallet is looking nice. For the first time in a long time.
Altcoin season soon, maybe?
For me, I'm like, it's here.
For anybody that's not familiar, can you explain what you mean by trenchy wallet?
Trenchy wallet.
I like that. I've never heard that before. I've heard, in the trenches referring to just trading meme coins and the volatility that you have to be able to stomach there. But yeah, I guess maybe more so what's in your trenchy wallet?
Okay, so I never really gave up on the AI agent tokens. Remember when we were dabbling with those? Like
AI16Z, some of the others.
Virtuals.
AI XBT is still on X, is always posting content.
I just had a nice trade on Tibber, TIBBR, I think.
Okay.
That's a virtuals agent. And virtuals, we should do a whole show on that again, maybe on Beans on Friday, because they have a whole new ecosystem. I don't know if you're still messing around over there.
I haven't looked at it in a while. I think I probably have some, maybe we'll refer to them as residual investments. They become positions, they start as trades. I think I've got something somewhere in a wallet, not of any meaningful size, but I will have to take a look because that was a platform for launching these agents, right?
Mm-hmm.
Or launching the tokens that represent the agents.
Yep.
What are they doing now that's kind of evolved?
So if you stake virtual token, you will earn these points that you can then, I can't remember the word, but you can basically attribute them to up-and-coming agents that you think are viable.
Okay, almost like a vote or something?
Kind of.
Okay.
And then if they do take off, you get allocated some of the token. But it's very community, it's super community focused, and I don't know, I've just been having a good old time playing around with them.
Awesome.
And then Dan and I called Punk Strategy at a penny.
It was a good one.
Hit 32 cents this weekend.
Wow. Okay.
A penny to 32 cents.
Does it keep going?
Yeah, I think so.
Yeah.
It's dipping now, so I'm buying that dip.
So I was going to ask, are you taking profits? You buying the dip? What are you doing here?
Buying the dip.
Awesome. That's a hell of a trade. Yeah. No, seriously, congratulations, because not often do you get in at that level and then you see the explosion. It does happen, obviously, and we see it at times on X and elsewhere, but nice trade.
Thank you.
Yeah.
Thank you.
Well, let's jump into the show, Shelly. Let's talk a little bit more about the all-time high in Bitcoin, maybe what's behind it, whether or not this keeps going. And the theme of today's show, which I like what you appropriately titled it here, Bitcoin's gold moment. And we're going to tie that together as it pertains to kind of what we're seeing in maybe more of the macro economy with the backdrop there, what's supporting markets, what we're seeing as well with commodities, and this bid into kind of inflation proxies and why Maybe gold should be higher. Who knows? I know a lot of people are kind of looking at this move and saying, all right, it's going to reverse at some point. It hasn't yet. Maybe it will. Or maybe, why maybe Bitcoin will catch up to this here and you could see a broadening of, of this rally. But let's talk a little bit about that and kind of what is behind some of what we're seeing here. Before we do, though, we got to throw up the dancing cat.
I have to have dancing cat.
You have a cat? You have a dog? Any animals?
I had a cat, a tuxedo cat, and he lived
Forever.
like
Too long, maybe?
maybe a little, because it was like our lives were moving on, and it was like, okay, we have to rehome him now because this is like the kids are leaving for college, and this cat just won't die.
Yeah.
He's in his 20s.
Yeah, I was going to say, or ask you, about 20 or so, because I think that's the age where it's like, we love him, but we didn't think he was going to be 23.
Right. Like, it's time.
Yeah, slowing down a little bit.
Yeah, it was
tough.
very sad.
Well, what was your cat's name?
Stewie.
Rest in peace, Stewie. Bitcoin all-time high. Also, I forgot to mention, but I think everybody knows by now, if you're not streaming over on the Tasty Live YouTube channel, get over there, type some crazy shit into the chat. Join us. Grumpy Mike, Gary, Nancy, Jose, gang's all here. Gary had a fish once.
How long did that fish live?
Sometimes they live a lot longer than you might think. Goldfish from the carnival 2 years later, going strong.
Wow. Speaking from experience.
Oh, I'm just saying that could happen.
Oh, okay.
Yeah. Bitcoin all-time high. Bitcoin crossed 126. I don't know exactly where we are now. Somewhere around there, near all-time highs. Put it in a new all-time high at that point in time. It's the ETF flows that are very supportive of the asset at this price, right? It kind of look at this and say, oh, well, obviously, but not always. And that wasn't necessarily the case in the past. Sometimes you just get these auto liquidations, they amplify volatility one way or the other, and it takes you to some prices that maybe you don't stay at. But I think here, you kind of look at this and say, is it real flows? Is it real money that's driving it? And I would argue that yes, it is. Let's just jump over to spot Bitcoin ETF total net flows and ETH total net flows, which have picked up a little bit as well. Shelly, here's the last month of Bitcoin ETF flows, and pretty consistently getting, on those big up days, 500,000 in, $500 million in, $1 billion in, and hitting some bigger numbers on the ETH side too.
You must be excited about ETH.
I'm feeling pretty good, but that's not yet at an all-time high. I do think you get there. I've got a price on the screen here of 46.84 in Tasty Trade, up about 3.5% today, but you need to see that at 5,000 plus for it to be a new all-time high. So Bitcoin leading the way. I do think others catch up. I think ETH will be one of them. But you're definitely seeing the ongoing institutional adoption, and you have been for some time with Bitcoin, certainly seeing it with ETH. It's possible that we get the approvals for Solana, XRP, even Polygon ETFs.
Strange one.
Yeah, there's a lot of ETF filings kind of out there. Now, the government, as everybody knows, has been shut down, hopefully temporarily. Most people would assume temporarily. You can go to Polymarket and see what the odds are for when we open back up. So the SEC is kind of on pause here, but there was a change, I believe, made last month that should expedite possible approval processes for commodity ETFs, and digital assets certainly fall within that segment. And so you could see a lot more in the future. I'm not saying it's coming, immediately, but there might be a quicker path or speed to market for some of these products going forward, which I think, again, just induces more or incites more capital inflows into some of these other tokens. But probably Solana is the next big one, I would think.
I think so, too.
Did you see that? I think it was Grayscale. Yeah, Grayscale Trust and the exchange-traded product there, ETF, is now... And I was confused about this. I don't know if you saw any details. I thought it required SEC approval, or maybe however they're doing it. Maybe they're just going forward. I don't know. Maybe there are no rules anymore. But they are staking the ETH, some of it, in some capacity, and will be passing those staking rewards on in the form of a yield or a dividend, I would assume.
That's huge.
Because I think others would follow suit, right?
Right.
So hopefully, I guess for anybody like myself that's got a little bit of an ETH bag, you get that, and that just brings more participation. I talk about it like it's just greater fool theory. Like, hopefully I can sell it to somebody else higher, you know?
Can we just give my dad a shout out? He's officially...
Yeah, let's shout out your dad. Is he watching? Is he in the chat?
Probably not, but...
Is your dad Gary?
No.
Okay, no.
Dave. Dave is my dad.
Dave's your dad, okay. Gotta get him in the chat.
But he is officially a Tasty Trader as of today. I got him all set up with his account, and he funded it, and he's like, you might have heard, he called me today. He's like, I got my account funded.
Oh, I didn't know that, no.
So game on.
Okay.
Dad is in Tasty Trade.
Yeah.
And he wants to get in on crypto specifically. So
Beautiful.
I was like,
okay.
yes.
Welcome to the pirate ship, Dave.
Yep. So we're here.
Riding off into the
Calling
sunset.
tops. My dad's in.
Yeah, do with that what you will, right? Maybe that's some alpha. Shelly's dad is getting into crypto. All right, ETF. So ETF flows are supportive for sure. Again, you want to see this continue. Obviously, you're going to get those outflows. You saw that a little bit when we dipped earlier in September, a month ago or so. But to start the month, I mean, end of September, as you can see here on the screen, big moves to the upside, $1 billion inflows. And when you look at this in aggregate, right, so we're looking at day after day. So you get $500 million, $750, $1 billion. Next thing you know, you got $6 billion in new money that's gone into the ETF. So that definitely can help to take you to new all-time highs. But I want to talk a little bit more about maybe the reason behind some of these capital flows, right? Why are investors making the decisions that they're making? And I think a lot of this has to do with the macro backdrop. And so what do we mean by that? Well, look outside of crypto for a second, and you have many other assets, the S&P 500 putting in all-time highs, gold putting in all-time highs. And on the other side of that, you've had a weakening dollar up until recently, you know, little bit of strength. Maybe that dollar move, for the most part, short term is over. We'll see. But global liquidity has been pretty ample. You have interest rate expectations that are falling, not just here in the U.S., but globally, maybe more, or most importantly, with the Fed, and arguably a Fed that is cutting interest rates into an environment that seems, at least given kind of the nowcast, the forecasts that do exist, seems like it's pretty supportive. Which, for what it's worth, I don't think we've seen this since maybe 1998, where you had very supportive monetary conditions into an economy that wasn't necessarily falling apart, right? Most of the time, we're seeing emergency interest rate cuts, we're seeing loose monetary policy to support a slowing economy. And, you know, you're seeing some signs that maybe consumers are in trouble in some cases. You know, a couple red flags are out there, but generally speaking, at least what we know today, you know, it doesn't really seem like we're in kind of a recession necessarily. So cutting rates into a expansion, possibly, could be a very big thing for asset prices. And maybe they continue to bubble higher, and eventually that does end. But I don't think it's today. It doesn't seem to be when you're hitting new all-time highs. We'll see. So I want to look at, you know, the market a little bit more closely here and kind of jump around, because I believe that, you know, what we are seeing is true, and that you are moving into an environment where not just in the U.S. but globally supportive of asset prices. That can change, and we'll update everyone when we start to see any signals or signs of that. But one thing that I think is interesting to look at, and then we'll jump into the performance dashboard. But Shelly, I wanted to look at today, you know, the correlations are one thing, and there's not anything that has a really strong positive correlation here. But when you look at kind of the broadening rally in commodities, that should in itself be a sign of, you know, relatively robust economic growth. You're starting to see a bid into assets that'll, I don't want to say necessarily like give you a hedge as it relates to inflation, but more so it's like, all right, this stuff's going up. How do you participate? Right, and so we go from S&P's at an all-time high, gold, silver's trading better, and now we're starting to see platinum trade much better, or has been, you know, over the last few months. Copper starting to participate. The outlier here is probably, when you look at the energy complex, is still crude oil and natural gas. but trading better, possibly bottoming. Starting to see a little bit more strength in natural gas here recently than we're seeing in crude oil. But I think this is important to pay attention to. So on one hand, we have 15 and 30-day correlations, which if we just use the S&P 500, for example, you look back over a multi-year period and you can look at these, short-term, 15 days, 30 days. A lot of times we like to look at a 90-day rolling period. And the highest or strongest correlation in there is around like 60%, 0.6, maybe a little bit higher. On average, we kind of see a correlation about 0.4. Okay. So a little bit below there, and in the last 30 days, really no correlation. I don't read into this too much other than we observe it at times. On the flip side, you have an inverse correlation right now with platinum and silver between Bitcoin. But what's interesting to me outside of those correlations is just look at the performance of equities, look at the performance of gold, silver, platinum, copper, maybe a little bit of strength. We'll keep our eye on crude oil. But I would assume, and somebody always, I think it was my dad told me, it's like, oh, you make an ass out of you and me when you assume, right? That's the saying. Mm-hmm. But presumably, if we see a broadening in commodities, we see equities and risk assets continue to trade higher. And just because they have in the past doesn't mean that they continue to or that they will. But if we do see that, I think crypto does the same thing. Mm-hmm. What do you think?
I mean, I do not have the macro mind that you do, so I just agree with you by default. Because Chat, he talks like this all the time, and I'm like, running to catch up. And yeah, it's slowly, after about a year, Ryan, making sense to me.
Okay, well, that's good. Yeah, I mean, it took me a long time, and I think maybe more so, a lot of mistakes that I learned from to kind of understand, at least high level, what some of the drivers are here. Mm-hmm. And it does not mean that when we see gold up 30% or 20%, silver up 30% in the last quarter, that crypto is going to do the same thing. And when we look at short-term correlations, they're not even moving in the same direction on a day-to-day basis. 27% of the time, silver has been moving in the opposite direction and Bitcoin in the opposite direction over the last few weeks. So just because gold goes up doesn't mean that Bitcoin's going to go up, obviously. But I think when you have an environment in which asset prices are bid, things are expanding, earnings are decent, S&P's at an all-time high, you're starting to see, allocations into commodity investments, start to see capital flow into these other areas of the market. It doesn't reflect a slowdown, right? I don't think that we would see industrial metals and crude oil and other energy investments do well. And I think you got to look outside of just the commodity here. You look at like XLE as an energy sector ETF or XOP, OIH. You can do the same thing with some of the natural gas companies. But when you look outside and you see all of this starting to do well, you see sectors of the equity market that are outperforming that typically would historically in times of economic expansion. It should be a signal. Mm-hmm. And I think when you look at Bitcoin as a risk asset and knowing that it's typically positively correlated to everything else I'm describing, I think it gives you some degree of confidence that, when you're looking at all-time highs, you're wondering, is this going to continue or are others going to play catch-up? I think we're in a good environment for crypto, and I think we'll remain in that for some time. And if you start to see this all trade a lot differently, then you're going to have to question that assumption. But for now, again, it's like there are real reasons as to why, given what's going on in the economy and kind of some of the strength that we're seeing, why you might want to be long. Not just crypto, but assets in general here.
Right. Money printer go burr.
It seems that way, right? And those interest rate expectations, which you can check out over on the CME's FedWatch tool, I'll give you the probability based on the Fed funds futures of what the market is pricing in terms of the probability of a cut or no change or even a hike in some cases, but we're obviously not in an interest rate hiking cycle. We're in a cutting cycle. But, you can keep an eye on those, and they seem to indicate, while they can change, that, we get 2 more cuts this year in an environment where if, the bottom doesn't fall out here in terms of growth, which it doesn't look like that today, you could see a little bit more fuel on the fire. You could see things go higher. You could see S&P 7,000. I don't think that's out of the question. You could see Bitcoin, arbitrarily probably trade up closer to 150.
Is that your price prediction?
Not a prediction necessarily, but I just think look, you've taken out this all-time high. market will kind of test some of these bigger numbers. Who really wants to sit in front of this, right? There will be pullbacks at time, and I don't know, maybe it gets up to name your arbitrary price and pulls back to 100,000 or whatever it might be. There's going to be great trades to be had on both sides, and there have been, even if you look at the past few months, if you were able to time a short in there and cover it, you've had some decent ranges that you've been able to trade. But I think if you just look at, okay, arbitrarily, we like these big round numbers, probably make a move towards 150. That's what I would be looking for, right? Doesn't mean it gets there, but how does it trade up into that if it does go there? Maybe it pulls back from here, but we've got to watch the price.
Love that.
And I think the other thing that you want to look at too is whether or not you have an expansion in implied volatility. We know that there's typically a positive correlation between volatility and price, meaning that as price moves higher, volatility expands. That's usually the opposite in the equity market, as everybody knows. When prices go down, volatility goes up. Things are a lot more volatile to the downside. Take the stairs up, elevator down, that sort of thing. It's the opposite in crypto. Take the elevator up or the rocket in some cases. And so if you see that expanding or expansion in volatility and prices move higher, I think that's a positive signal. But again, something to keep an eye on. So outside of, and let's jump to our performance dashboard here, Shelly.
Green on the screen.
A lot of green on the screen. I've got Bitcoin at 124.9, so right around where we were at 10:30 this morning. So these are the slides that we used on Options Trading Concepts Live. ETH is, right about the same price, 46.80. So pulled back from where we were just about an hour ago. I think ETH's about $100 lower. But pretty positive price momentum here, slightly higher levels of volatility from where we were at, a week ago or so. But outside of Bitcoin, outside of ETH, Solana, relative underperformer here year to date. So the way that I would read this is Bitcoin's up 34% year to date. ETH against that is up 6%. So at the time, ETH up 40% year to date. Solana down versus Bitcoin. So still on its own, up, positive territory year to date, but less than 34%.
Interesting. Okay.
25% if my math's correct. Putting it down versus Bitcoin, 9%. But what else are you focused on? You mentioned some of the stuff in your trenches bag, some of the AI agents that you're trading. Any other areas of the market that you've got your eye on? Or are you just riding off into the sunset after this this punks call? Okay.
Not quite yet. Although punk strategy is fascinating. I love what that's doing for just overall the industry. Like Web3, NFTs, just the community. It's breathing a lot of fresh air into some sleeping giants, if you will. And I see Gary mentioning the TC token. Dan's out of town this week, so we're not doing anything with TC this week, but next week we will be. And I just got off of a very exciting call that I can't talk about. So I was like, can't say anything, but there's going to be some cool stuff coming to TC. So, yeah, otherwise, I'm trying to think what other tokens I've been playing with. Really just looking at those virtuals, AI agents.
Well, can I ask you this? You don't have to tell us size, of course, but what is your biggest position?
Biggest position?
Yeah, what's your biggest bet here? Where do you have the most conviction around that you put, put your money where your mouth is?
Hyperfi.
Hyperfi, okay. Yep. Not Hyperliquid, Hyperfi.
Yeah, Hyperfi. Two separate things. Very, very different. I've been in Hyperfi for years, but they only launched the token last year, and I still hold a very big bag and bought more.
Okay.
So, yeah,
Correct me if I'm wrong, but that's a metaverse play in a sense, right?
Yeah, but it's so much bigger than that because it's almost like they took the on-chain component kind of out of it, and it's more about 3D websites. Like if you have a server, you can launch your own 3D website using AI. It's like prompting 3D building, which is revolutionary to that space.
Yeah, that's huge versus having to know how to code all of that yourself.
Code and render in 3D modeling. Like you can just say, prompt, build me a carousel, and it will be a working 3D model in a virtual space. So if you want a 3D website, fully immersive, Like, jump in, walk around your website. I mean, it's huge.
It's cool. Yeah.
It's so cool.
I mean, my argument is probably, in my opinion, that not Hyperfi necessarily, but when I look at the whole space, it's still early.
Oh, yeah.
I think that's the direction it's going in, you know? The metaverse, really, like, what is that? I think a lot of times people think of that as like a game. You're inside of it's completely immersive virtual world, which if you have the VR headset and that's how you experience websites, you're at the store, you're able to try on the clothes, you see what you look like digitally versus going to the brick and mortar store. I think there's going to definitely be more of these experiences. It's probably hard to, like, I'm just making up something, but it's hard to pin it down. But I think that's the direction that it's going in, right?
Oh, yeah. And see, with Hyperfi, they really, like, and I should just say it's one guy building this, like, incredible tool. It's like the WordPress for 3D building.
Okay, that's a great way to describe it.
And so, but he, excuse me, I don't know what's going on with my throat. He's making it so that anybody can do this, plug and play. It's mobile friendly, VR friendly, and desktop, whatever. It's like all device friendly. So you don't get stuck in like, oh, I need some clunky VR headset. This is like, no, you can run around on your phone.
Go in your browser.
Yeah.
That's cool.
So it's really accessible. And yeah. Ash Connell.
Okay, that's the guy behind it.
Uh-huh.
Cool. Maybe we'll have him. I don't know if you guys have talked to him on Beans, but maybe we can get him on the show.
Not yet.
Okay.
Definitely want to.
Unless he's elusive. You know, sometimes these guys are hard to pin
he's
down.
busy.
Yeah.
You don't hear from him, and then all of a sudden it's like, oh, it's because he created this, like,
he's grinding.
World-changing thing. Okay. Yeah.
That's awesome. Hopefully we can get Ash on the show at some point. Speaking of guests upcoming on the show, Shelly, we've got fan favorite Greg Magadini, of course, coming back on the show on Wednesday. So make sure that you tune in for that. I love having Greg on the show. Always has a really interesting view on markets, and of course is just spewing trade ideas, really good trade ideas, by the way, left and right. So looking forward to getting Greg's insights.
And speaking of guests,
Wednesday.
You're my guest on Beans this Friday.
Yeah, and I'll be on Beans on Friday. It's my first time. Looking forward to it. Switch it up a little bit. Awesome. Well, Shelly, thanks for coming on with me here today, talking a little bit about what we're seeing in the macro space, the belief again being that, or the view being that this rally should continue, given kind of what we're seeing elsewhere when we look at kind of macroeconomic backdrops and kind of price performance in other asset classes. But again, anything can happen. We'll get Greg's views on Wednesday. So looking forward to that. But we'll be back for the show Wednesday. I'll be back with Shelly on Friday. Thank you all for tuning in and joining us in the chat. Shout out to everybody. Again, Lone Sophos popping in late. Better late than never. What's up? Never. Big Deal Donuts. Thank you guys. As always, we'll be back later this week. Until then, I'm Ryan.
Shelly.
Peace.